Well, since morning, it is entirely the financials which have been picking up. Look at the HDFC banks of the world, Bajaj Autos, Eternal. The contributors will give you a clearer picture where those spikes are coming in from. The VIX also reversing sharply. So some news flow possibly has come in which has changed things. HDFC Bank, RIL, M&M, ICICI Bank. Alex, if I were to look at this morning's Nifty contributors, it's just flipped.
It's flipped. And good afternoon, Tamanna, and good afternoon to everybody joining in. Pull up the broader markets as well, because you'll see, and the intraday chart of the broader markets. Yeah, there you go. So you see a similar spike, of course.
Not as much.
Not as much. We're still in the red. A similar spike though for both. Not as much as the. You're absolutely right. Not as much for the broader markets, but we're off the low point of the day, and significantly so. But a similar trajectory is witnessed for the broader markets as well. Pull up the sectoral heat map and see whether there's more green on the screen. I would hazard a guess to say that yes, there is indeed a more green on the screen. Autos doing well. The financial services are up in about 1.2%. The private banks up as much as 1%, and that's because HDFC Bank is doing particularly well. Reliance Industries is up and about as well, close to 1% or so. That's lending quite a bit of help, quite a bit of heft to the benchmark Nifty 50 at this point. The Nifty Bank up as much as 0.8%. Realty continues to languish. The oil and gas, and this is very interesting, despite Reliance Industries, it's the OMCs, the downstream oil companies, that are not doing particularly well in trade today.
Yeah, because the sense that the government is not really going to pass on rates right now, that industry cannot really pass on rates right now to the pump. 103, 104 on crude is always going to be painful, and we'll pull up the latest crude. I want to pull up intraday charts of two stocks, M&M and HDFC Bank. Just want to take a look at what's happening there. Okay, there's a crude picture, 105. I mean, I'm trying to understand the market moves, and it seems limited to banks right now. HDFC Bank intraday chart, M&M intraday chart. Let's just take a look at what's happening there.
There you go.
Look at M&M. And this is very interesting because the entire auto pack has been downgraded left, right and center.
Yeah.
Something's going on with Mahindra & Mahindra's stock. Sharp zoom up there, about 3% up. HDFC Bank. Let's just look at HDFC Bank's intraday, and that's also showing a similar trajectory. After spending a lot of time languishing, heavyweights are now pulling back, which is why this seems like a more nifty story than a broader market story.
Particularly because we are off, at least as of Friday's close, about 12% from the all-time highs, and the kind of cracks that you've seen in some of these very large stocks is, a lot of people have argued, overdone. And so you have opportunities. I wonder what Larsen and Toubro is doing. Can you pull that up as well? Because I didn't really pay too much attention to where it was located. There you go. So a lot of these names have gotten really, really punished, and some might argue a little too much.
So maybe some institutional money coming in. Let's look at what Europe is doing right now. I want to see if this is just an India Nifty story or a broader base story that we're seeing. And no, this looks like an India Nifty story, because Europe is pretty dull and mixed right now. US futures also unlikely to show too much happening right now. It's okay. It's been in this range for a while. So that's where the story seems to be. Himain Kapadia joining us this afternoon of DR Choksi FinServ. Himain, very good afternoon to you. What do you reckon is going on with the Nifty? Is it time to change tack?
A very good afternoon to you, Tamanna. Thank you for having me on the show. It's always a pleasure. I think so. Everything that you said, the VIX coming down, okay, yeah, it's India specific, Nifty specific, bank specific. We are at strong supports, we're deeply oversold. A bounce was around the corner. I believe that's what is unfolding. Yes, I know there's a weekly expiry tomorrow, but nevertheless, a recovery was due. I'm not still contemplating or arguing in the favor of how much the sustainability is going to be. The bounce was supposedly around the corner on technical parameters. That's what is happening. I believe we have some more upside left, Tamanna.
Okay. Any calls this afternoon? Any stock calls this afternoon, Himain?
Yeah. Firstly, a buy call on HDFC MC, Tamanna. Deeply oversold, strong supports, positive divergence. Okay. Right now, the mechanical indicators are positives only on from an intraday point of view. But a buy on HDFC AMC at 2360, stop loss 2310, and a target of 2460. Secondly, almost similar logic, oversold, strong supports, intraday, very strong positives. A buy call on Bajaj FinServ at 1760, stop loss 1710, target of 1860. Tamanna.
Going to go across to, stay on with us, Him, going to go across to Siddharth Khemka, Head of Research Wealth Management, Motilal Oswal. Siddharth, very good afternoon to you. What do you reckon is responsible for the change of mood in the last few minutes? Is there smart money coming in and looking at appetizing valuations right now in some of the heavyweights?
Hi, good afternoon. I think definitely there is some value buying that is emerging. I would not be sure because the data is yet to come, but definitely I think last few days the sharp fall that we have seen in the market, that makes some of the names very interesting. Now the only question that remains is every day things are changing, things are very dynamic, and for an analyst to come out and say the exact impact on the numbers, I think that would still take some more time because things are very dynamic, as I said. But nonetheless, as you rightly highlighted, some smart money, some value buying that is emerging in the market, and that is helping the market to see that kind of recovery.
Siddharth, hi, good afternoon to you and to Heyman as well. Siddharth, specifically on the large cap counters that are seeing a bounce, and we're seeing names like HDFC Bank specifically, as of Friday's close was 20% off the 52-week high. You had ICICI Bank that was losing considerable amount of ground. Larsen and Toubro. In some of these cases, there is a very clear rationale and reason why these counters had come off. But for the banks, and specifically the private sector banks, it seemed like basket selling. It seemed like risk-off sentiment for your foreign institutional investors that was leading to this. And so would you say that even at this juncture, they're at attractive valuations?
So yeah, Alex, I think last time also we discussed banking is a space where there has a very heavy FI holding, and when they are selling, they would find it convenient to sell from that space where they have over a large part of their holding. I think the biggest concern out of the crude oil stock was that inflation could be higher, monetary policy easing could be, the policy could change, and hence the benefit that the banks would have finally got out of the lower interest rate environment of the credit growth, that would have gone away, and hence I think there was a negative sentiment. That still is a risk as of now, but valuations has come down and is looking comfortable. I think some of the kind of selling that we have seen in the last 15 days, I think in 15 days itself, they have sold more than 40,000 odd crores. Friday, we saw record selling in a single day in last, I think, many years. So it's definitely a lot of panic rather than fundamentals that is there in the market, especially from the large foreign institutional investors. Having said that, some of these banks, I think the core investment thesis remains not much of that risk directly from the global geopolitical, or you can say crude shocks. And I would say that valuation, yes, comfortable. And the only concern that remains is in the near term, sentiments can be negative for some more time. Hence, when there is fear in the street, it becomes difficult to justify valuations or fundamentals. But having said that, again, I think if you look at when you invest in these times, at least may not be for the near term, but 2 years, 3 years hence, definitely you would have a much more better probability of making money.
Quick, so very well put, but then the bottom line, top picks based on fundamentals and based on valuations right now. And if you were to highlight maybe 4 or 5 names that are absolute table thumping buys at this moment.
Well, I think if you look at in terms of top investment ideas, what we like within the banking space, SBI is something that we like a lot. Valuations still comfortable compared to the private players, HDFC, ICICI, both of which also figure among our topics. But if I were to pick one bank, it would be SBI. Very strong commentary from the management. Valuations still comfortable, trading at about 1.6 times on FY27 compared to an ICICI of 2.5 times, HDFC 2.1 times. So that's one stock that is on top of my pick. The few others, as you rightly asked, I would say because of specifically, if I were to look at the correction, Larsen figures out quite meaningfully. It's a play not only on the infrastructure, but also on the defense and the opportunities that may arise once this war-like situation eases in the West Asia. I think a lot of opportunities would emerge for L&T. So that's another stock which has seen a good correction and opportunity from this adversity for Larsen. Some other stocks, I think power is another stock where, for example, Coal India, because of the shortages that we are seeing in gas, in oil, Brent crude, I think Coal India will be a biggest beneficiary in the near term. The spot prices also already going up. We are seeing a lot of households, a lot of restaurants switching out from LPG or natural gas to the electric stove. So power consumption will be another beneficiary where Coal India is another stock that should benefit from this environment.
Okay, it's fast and furious this Monday evening. The Nifty is moving quickly. Auto stocks are in flavor, so are banking stocks. And talking about banking stocks, some news coming in. Shimi Chaudhary joining in on the phone line, our Chief of Bureau, talking about latest developments on Feno. Shimi, what are you picking up?
Yeah, so as we've been reporting that DGGI, who is an investigative agency under GST, linked, has been probing the Feno Bank, Feno Payments Bank, especially linked to the online gaming transactions routed through the accounts associated with this bank. And now the finding could potentially attract the scrutiny from Enforcement Directorate and the PMA, is what source is indicating. Officials are saying that the DGGI, which is a GST arm, has detected multiple instances of suspicious fund flow connected to the online betting and gaming platform, and there where the role of ED might come. Sources tells NDTV Profit that DGGI is yet to share the details of probe to the agency. However, they've been informally informed that this is what is happening, and investigators are examining the cases where funds were allegedly routed through multiple accounts or entities, and that is where raising concern about the possible attempt to obscure the origin of the transaction. Now, the investigation is, of course, a part of the broader probe, where the estimated, tax evasion is around 1 lakh crores, is what based on the preliminary finding of DGGI, and now Enforcement Directorate is expected to take up the matter and file ECIR, which is FIR for under the ED, which could trigger a formal investigation. Authorities also confirming at this point of time that they are examining whether shell entities and dummy program managers were used to onboard merchants facilitating gaming services, and they also kind of suspect that a large volume of funds may have been processed through accounts without adequate compliance checks.
Okay, thank you for that, Shimi. So there might be more trouble for Feno. It's also a stock of the day. They have, of course, issued clarifications denying reports about Enforcement Directorate and PMLA probes expansion into alleged gaming links. The bank is saying that regulatory compliance and transparency has been maintained while cooperating with authorities. Nevertheless, the stock is down 15%. Sharad is joining in with more details. Sharad, we heard Shimi report about what the news is around it, but Feno's problems have been going on for a while, isn't it?
Well, that's right, Tamanna. There are some overhangs in the stock, and today we are seeing as well. But before that, I'll just give you the clarification of how things are panning out for the bank. The bank has currently stated that it's not subject to any investigation by any other authority other than the Directorate General of GST Intelligence from Hyderabad. Also, the ongoing investigation is pertaining to certain program managers and the merchants associated with multiple banks, including the bank itself, but the investigation is not on the GST compliance of the bank itself. Also, they have stated the reports of rejection of bail by the court is completely incorrect and there is no involvement in gaming or betting activities. Of course, the media reports earlier had suggested that Telangana High Court has reserved its order on a plea by the MD of Feno Payments Bank, and the online gaming transactions worth rupees 10,000 crore might be under the investigation. Now, earlier, to give in the entire perspective, what has happened 2 weeks ago is that the Director General of GST Intelligence arrested the CEO of Feno Payments Bank, Rishi Gupta, and the government agency is investigating the GST evasion of roughly 3,000 crore rupees. That's what has been stated. And remember, sources earlier had stated that CBIC, which is the Central Board of Indirect Taxes and Customs, are likely evaluating this matter as well. So these are the key developments happening for Feno Payments Bank. And even after the clarification, the stock hasn't recovered yet, and it's still near the day's low level of around 15 to 16%.
Okay. Siddharth, would you stay away from this stock till there is clarity on what's happening?
Someone, I think better to stay away. We have seen such similar cases in a lot of other corporates as well. So A, we don't have coverage. B, with so much of negative news flows coming in, I think there are a lot of other better managed fintech companies in India, be it a Paytm, be it some of these small finance banks, I think where the recovery could be much faster, much better. So better to stay away, yes.
Okay, let me ask Hemant specifically about the financials, because Hemant, in the last half an hour, the buying seems to be concentrated. Of course, there is a smattering across the board, and even the broader markets are significantly off the low point of the day. But specifically on the financials, there's quite a bit of strength. Would you agree?
A very good afternoon, Alex. Yes, I think I would agree with you, because there has been, like you mentioned, HDFC Bank, you look at Bajaj, Twins. I mean, yes, there is specifically the bank Nifty has done relatively well. Okay, it was dormant for some time. So yes, makes total sense. Somehow there is buying in all of the financials, Alex.
Okay, all right. Out of the list that Siddharth just spoke about, and he spoke about State Bank of India, he spoke about a few other financials as well, but Larsen & Toubro is one that he mentioned. Hemant, specifically, let me ask you about this counter, because it's seen that very similar chartical move today, intraday, when you compare it to the benchmark in the way that it has moved. It's at the high point of the day, but considerably off the 52-week high. Would you buy into this right now for the long term?
Long term, little bit. Short term, yes. If you see the swing low of 3405 posted during the weekend at 1st August 2025, Alex, and today we posted a low of 3396.60. So we've almost come there. We've fallen off a cliff, deeply oversold, great order book at very strong support. So frankly speaking, yes, I would buy more from a shorter term point of view. And yes, if I were buying from a medium term point of view, or slightly longer term point of view, I wouldn't go the whole hog. I would buy in parts, because I believe we are seeing a recovery in the market. 700-800 points Nifty, very much possible. But the undercurrent and the whole picture still seems wobbly and shaky. So maybe there's a recovery yet, not a rally. So I wouldn't quantify this as a bottom. But yeah, main question, I'd buy bit on the longer term, buy more on the shorter term. Today's lowest stop loss, Alex.
Okay, so there was buzz that the OMCs would buy crude output, or rather crude products, at lower than market value from the individual refiners. And MRPL and Chennai Petro, initially, at least Chennai Petro, was a little bit under the pump. But MRPL and Chennai Petro now, at this juncture, having rebounded very sharply off the low point of the day, trading very near the high point. In fact, for MRPL, it's one of the top gainers, if not the top gainer on the 500 right now, close to 14% higher. Hemant, a very quick view on this. MRPL specifically, with this kind of gain, erasing quite a bit of lost ground, would you buy into this?
Slightly late in the day, but yeah, I believe 230 is around the corner. But I'd be more comfortable buying it around the 190-92 level, because there's no the market where you would chase anything, Alex.
You might have missed the bus on MRPL at this moment, but watch out for those 230 levels. All right, let's go to a regular feature heard on the street, and I wonder what the buzz is about what is causing this kind of interest and buying. It could well be institutional interest at this point. Let's find out from Somit. Somit, what are your dealer checks telling you?
Well, it's difficult to ascertain or pinpoint one of the reasons why this sudden up move of around 300 points is something that we are seeing in the last half an hour of trade. But yes, some clarity on the US trade deal could be one of the trigger point, but one should be careful given the fact that this 23,400, 23,500 is seen as a resistance level, and selling pressure could come in at these levels, at least as per technical analysts. So one should just be careful buying into these such up moves that we are seeing currently in the benchmark is what dealers have indicated. Apart from that, if you look at stock specific action, BSE is one counter where there are buy flows on HNI desk. There are some buzz of some new contracts that could be launched from BSE side, and hence this 3% up move in the share prices. Also, dealers are indicating that the Q4 is expected to be quite strong, and NSE IPO is also one of the catalysts for the up move in the BSE share prices. Steel names, JSW Steel and Tata Steel, both are buzzing in trade. There are buy flows on institutional desk, and dealers are indicating that there's a potential of a price hike of anywhere between 700 to 1500 rupees per ton, depending on different products that could come in, and that is one of the reasons why both the steel names are up in trade. And lastly, when it comes to GAIL, multiple technical analysts are indicating buy calls on GAIL based on charts. So one should keep an eye out for that counter as well. And in the last half an hour of trade, what dealers are indicating is that 3 stocks that have seen a significant move and significant buying action on the institutional, on the DI front. It's Eternal, Jubilant Food and Swiggy. All these 3 counters have seen strong buying action in the last half an hour of trade. So keep an eye out for these counters as well.
Okay. Thank you for that, Sumit. One of the reasons maybe why we're seeing this change in mood, we don't know, but we're just putting all the news out for you, is the Commerce Secretary's statements on the US trade deal. Remember, a few days ago, this Reuters report claiming that the deal is getting postponed between India and the US. Now some clarifications coming in from the Commerce Secretary saying that the US deal was anyway to be signed in March. IEPA tariffs don't exist per se due to US court rulings now. So that was, IEPA was the initial act under which and the aegis of which the trade deal was first inked. He goes on to explain, under Article 122, tariffs of 10% exist globally now, and any deal that India signs will be signed against a tariff structure. US is trying to recreate a tariff architecture globally. Once US creates that, it will be better to sign then. Actual signing will be done when new architecture of tariffs globally will be done by the US. Deal is ready, not like there's any standoff or it has been called off. This is an important clarification coming in. He's saying that negotiators are working on the deal. Since India did not sign a deal with the US yet, we'll wait for tariff clarity first. They're examining the legal impact of US notices around trade and tariff investigations in Section 301. He goes on to say when trade deal is signed in the future, it will take care of any trade investigations by the US. So I think it's an important clarification simply from the point of view where there was some concern about what is happening next on the trade deal. The very day that story came in, there was a clarification from the government saying that aisa kuch nahi hai, there's no deal that has been called off, and it just makes sense logically, doesn't it, that you are not going to go ahead with a deal which was agreed upon under very different circumstances where the whole thing changed.
Absolutely. You know, at the start of the conflict, Tamanna, the conversations that we were having, and I think we've kind of forgotten some of that because of the nature of the geopolitical crisis. But certain underlying tensions remain from the perspective of India. You have this artificial intelligence story that goes back, you have the tariff situation, and so any clarity on one or other of those issues is going to be looked at as a positive. Let's talk about the stock of the day, and or rather not the stock of the day, but one of the stocks of the day. We've already spoken about Feno Payments Bank, but another stock that is losing a considerable amount of ground is IDBI Bank, and this is on account of the curtailing or the shelving of some of those plans. But before we talk about that, let's in fact talk about JK Paper. It is facing a new set of hurdles as the Middle East crisis ripples through the Indian paper industry. We're going to speak about this in a lot more detail, but before we do, let's go across to Parth, who is joining in to set up the conversation that we have with the management. Parth.
Yeah, thanks Alex. So JK Paper, as we know, is India's leading paper and packaging manufacturer, and the reason why the stock is in focus in the recent times is because they are facing disruptions due to the crisis in West Asia. The geopolitical tensions in the region are impacting energy supplies of the company and are increasing their production costs. Now this is a big reason because over 30% of India's paper exports come from that region, and there's also this risk of dumping by the Chinese players. So the key triggers factors to watch going forward will be how the company manages its energy costs and how much will they do any price hikes across their key segments. Apart from that, how will the company fix their supply chain issues and also how they handle the disruptions that they're facing?
Sure. Those are some of the points we'll talk about, Parth. A.S. Mehta, President of JK Paper, joining in now on the show. Mr. Mehta, thank you so much for speaking with us. First, want to understand what is the quantum and extent of disruption to your industry because of the war right now in the Middle East?
See, there are few disruptions when we talk about the crisis and the war crisis in the Middle East. One is that the export to the Gulf countries has been hit. But when we talk about the paper industry from India, the Gulf does not account for too much of the size of the export as far as the Indian paper companies are concerned. So I won't say that it is going to have a major impact on the Indian paper industry, but certainly the cost increases because of the crisis. The input cost increases and also the commodity prices increases is certainly going to make an impact, whether it is the lime cost, whether it is the other chemical cost, and also to some extent the energy. But again, the energy also is a very small impact if you ask me for the paper sector, because we are more into the thermal energy and the coal. So it has nothing to do with the Gulf crisis. But the major impact as far as the paper industry is concerned, and that is the raw material cost increases and also the dumping from the Chinese and Indonesian players. So these are the two predominant factors which is impacting the paper industry.
The dumping from China and Indonesia is an ongoing issue. I'm talking about in the context of right now. What is the quantum of exports you have to Gulf nations?
So it's not more than 2% or 1%. So there's not a major impact.
Okay. And in terms of raw material cost spikes, what are you seeing?
And raw material cost also, it is not a sizable impact because the raw material cost is the wood for the integrated player. And when you talk about the wood, again, it's a local, it's not imported.
So essentially the bottom line, Mr. Mehta, is that the expectation that there is going to be a disruption to business or there's going to be an impact on financials is exaggerated and there's no impact. That's what you're saying essentially.
No, I'm not saying that no impact. There's some impact, and that too it's for the commodity prices.
Okay, so if you were to, and you've already adequately explained that a large part of this is paper, it's domestic, and so therefore what I'm trying to understand, Mr. Mehta, is what is the extent of the impact? If you look at your entire raw material basket, and if you were to describe it, for example, as a percentage, to say that this percentage of my input costs are getting affected, how much would that be?
See, I would say that on a cost basis, if you think, I won't say that it is going to be more than 5%.
Understood. Okay, so and also then while we're speaking to you, Mr. Mehta, can you give us a sense of the landscape right now? What is the kind of demand that you're seeing? Will you be able to pass through this increase in costs that may be to the extent of 5%? Is that possible? Do you have that pricing ability right now?
See, right now when you talk about this, the printing market, it is passing through a tough time. So it's not that easy to pass it on in the market. The packaging board, again, there is a huge dumping from Indonesia and China. So again, that is becoming a difficulty. And also the anti-dumping duty has not yet been levied against China. And the MIP, which is up to 31st of March, we have already requested for the extension of the MIP. That also government is yet to notify. So these are some of the factors which will, enable us whether we will be able to pass it on beyond 31st March or not.
Okay. Thank you so much, Mr. Mehta, for speaking with us today of JK Paper there. Big pain points continue which are beyond what's happening in the Middle East right now. More to do really with dumping from China and from Indonesia coming in. Himain Kapadia and Siddharth Khemka with us. We must focus on the markets because something astonishing is happening and I don't quite know what. Himin, what is your read? What do you think is changing the mood right now?
Excuse me. I can lay out multiple technical reasons, Tamanna. Most of them won't make sense, but yeah, technically, like I said, supports, oversold, positive divergences.
Won't make sense. Is that do you think our viewers won't understand, or you think you will not explain it nicely?
No, I mean, if I'm going to give you 5 technical reasons, which, I mean, a normal investor would not be very well conversant with the technicals. But yeah, I mean, at the beginning of the show, I told you a bounce is coming, and I gave a buy call very easily because I wasn't very happy about giving buy calls in our earlier shows, Tamanna, last week. So yeah, I feel, and I told you also there is more headroom left.
The headroom for the Nifty right now after we've gone past 23,400 also fairly easily. It's been a pretty, I would say, dramatic upswing in the last few minutes. And this is a Nifty story largely. Himain, that question to you?
Yes, I believe
Nifty targets.
Even after this 300-point move, I believe 23,600 is coming, and with some struggle, 23,850. I believe that is coming this week itself.
Okay. All right. So that's the view on the benchmark Nifty 50. Let's talk about IDBI Bank. And sources have told NDTV Profit that the government may have called off its long-awaited strategic sale of IDBI Bank. Now, we'll speak about the implications of this in more detail. The stock clearly has seen an impact, but there's more than IDBI Bank that is getting affected. And we'll talk about that in just a bit. Before we go to Aditya Shah of Hercules Advisor Services, let's go to Sharad to get some context on this. Sharad, the impact on IDBI is very clearly seen, but there are a couple of other stocks as well. LIC I'll throw into the list, as well as CSB Bank. Can you tell us what is happening here?
Well, Alex, you're right. There are some more details and second order impact happening. And if you just would show the CSB Bank chart, that's where you'll see a good up move is happening. Now, what's the reason for it? The first one is definitely, you can see the stock is up almost 7%, days high level. Earlier, it was up 5%. Now, the merger with IDBI Bank, that is off the cards right now. And because the reason was the lower bid coming in from Fairfax for IDBI Bank's disinvestment. And government has called off this disinvestment as the bids from Fairfax and Emirates is below the reserve price. That's what the reports have been suggesting. What are the key details about it? It's very much important. Fairfax already owns 40% stake in CSB Bank, and if the deal had gone through, then Fairfax would have control over both the banks. Now, as per the definition, RBI generally permits only one promoter per bank, and the street would have factored in a proposed merger between IDBI Bank and CSB Bank. And now that's not happening. And because of that, we are seeing a kind of a technical reversal happening, because when it was announced that Fairfax was in the runner, then we saw that the stock itself was under selling pressure. Now, what are the key triggers for CSB Bank? Q3 numbers were weak, but remember, higher gold prices augur well for the gold loan numbers in the fourth quarter. The stock is down 37% from 2026 highs, and still the analysts are bullish on the stock. 8 out of 9 analysts have a buy rating and a 12-month target price of 479. That means from current price, more than 35% upside is something which the street is expecting.
It has dropped that much as well from the high point.
True, and we're focusing on CSB, but we should look at IDBI as well. There has been clarification coming in from the management of IDBI Bank, 16% down on that stock, saying we still don't know if anything has been called off. This is the DPUM secretary who decides this. Our sources are telling us that this has definitely been pushed. Aditya Shah, founder of Hercules Advisor, joining in right now. Aditya, of course, I want a view on IDBI and CSB and their stock views as well, but just trying to understand why this whole process seems to have gone south. Is it a matter of mistiming of actually the government cutting stake in IDBI Bank?
Hi, good afternoon. So IDBI is a great asset. The liability franchise of IDBI is really good for any acquiring bank. Of course, the loan assets are not that great, but the liability franchise is something that any bank would have. Now, the government has set a reserve price which is not acceptable to any of the other acquiring banks. That is why the deal has really tanked. So from my perspective, this is absolutely negative, not only for IDBI, but also for all candidates who were prime candidates for divestment from the government. Companies like GPCL, they also it's really very negative because the government has been trying to divest IDBI since far too long. Even though having a great asset, it is not able to do so for various factors.
But would it be fair, Aditya, and good afternoon to you, would it be fair to conflate that? Because we're talking about IDBI Bank, which at this juncture is significantly better off than it was at the low point where you had double-digit NPAs, etc. So quite a bit of that is cleaned up. But there's also the fact that their name did get tarnished. And so therefore, when you compare it with a BPCL, it may not necessarily be accurate.
So today, IDBI Bank is a very good asset to have. Their books are absolutely very clean. And when you acquire that bank, you get 2 lakh crores of liability. A liability for a bank is like oxygen to the bank per se. So let's say if a CSB would acquire it, CSB would have had a huge expansion over a short period of time. I don't think this is positive for CSB. I think this is not great for CSB that they are not able to get IDBI Bank. Also on BPCL is another story in itself. It's also a great asset, but the government has not been able to divest for the last 2 to 3 years because of the conditions that the government really set. So, in my opinion, if the government was to get on board somebody like a Uday Kotak or a Deepak Farid, the divestment of all of these assets would be faster and would be very clean.
Point. Aditya, thanks so much for joining in and for taking the time and for speaking to us about IDBI Bank. But let's cut across immediately to the inter-ministerial press conference on the latest developments in the Middle East. Listen in.
Crude available है, सभी refineries highest capacity पर operate कर रही हैं. हमारे petrol pumps normal operate कर रहे हैं, कहीं कोई dry out reported नहीं है. Natural gas 100% supply to CNG and the PNG customers is made. CNG for vehicles is made. Other important thing that we have been discussing over the past few days is request to the LPG commercial consumers wherever they can shift to PNG connections. So, next please. Yeah. So, जो भी लोग LPG से कमर्शियल PNG पर शिफ्ट होना चाहते हैं, इसके लिए वो CGD कंपनी से कांटेक्ट कर सकते हैं ईमेल के द्वारा, कस्टमर पोर्टल के द्वारा, लेटर या कॉल सेंटर के द्वारा भी. और इन सभी कंपनियों के डिटेल PNGRB वेबसाइट पर भी अवेलेबल है. इस प्रेजेंटेशन में आप देख सकते हैं PNGRB का URL भी है. इसके द्वारा दे कैन कॉन्टैक्ट देयर CGD एंटिटी. And wherever the network is already existing, the connection can be given in shortest possible time. इसके अलावा certain to promote the PNG connections, certain incentives have also been announced by some of the companies. For example, Indraprasth Gas Limited. कोई भी कंज्यूमर, डोमेस्टिक कंज्यूमर अगर 31 मार्च से पहले कनेक्शन लेता है और गैस लेना शुरू करता है तो उसको 500 रुपये का फ्री गैस देने की उन्होंने बात की है. इसी तरह महानगर गैस ने भी कुछ इंसेंटिव्स दिए हैं और सिक्योरिटी डिपॉजिट को भी वेव ऑफ करने का बात कहा है. गेल अथॉरिटी इज ऑल्सो गिविंग सम इंसेंटिव, सो इज द BPCL. इस बारे में ये सारे प्रयास इसीलिए हैं कि ताकि ज़्यादा से ज़्यादा लोग क्लीन फ्यूल पर और PNG पर शिफ्ट हो पाए. इसके अलावा PNGRB जो एक रेगुलेटर है, इट हैज़ ऑल्सो एडवाइज द CGD कंपनीज टू डिप्लॉय एडिशनल रिसोर्सेज and also contact the consumers and put all efforts to give more and more connections to the consumers. LPG मैं दोबारा से वही बात दोहराऊंगी कि स्थिति अभी चिंताजनक है, लेकिन हमारे डोमेस्टिक LPG कंज्यूमर्स को LPG की सप्लाई की जा रही है और डिस्ट्रीब्यूटरशिप्स पर कोई ड्राई आउट रिपोर्टेड नहीं है. मैं आपको ये भी बताना चाहूँगी कि आपके माध्यम से हम बार बार कंज्यूमर्स से अपील कर रहे थे कि ऑनलाइन बुकिंग करें. उसकी वजह से ऑनलाइन बुकिंग में इंक्रीज हुआ है और कल के डाटा के हिसाब से लगभग 90% बुकिंग्स हैव बीन ऑनलाइन. एक और इनिशिएटिव जो हम इस वक्त पुश करना चाह रहे हैं वो है डिलीवरी ऑथेंटिकेशन कोड। सो डिलीवरी ऑथेंटिकेशन कोड्स में के नंबर्स में भी इम्प्रूवमेंट आया है। जो पहले 53% हुआ करता था, कल वो 72% था। कमर्शियल एलपीजी के बारे में मैं ये बोलना चाहूँगी कि लगभग सभी स्टेट्स, बहुत सारे स्टेट्स ने कमर्शियल एलपीजी का डिस्ट्रीब्यूशन स्टार्ट किया है एंड द रिलीज ऑर्डर्स
Okay, so that was voice coming in from the oil ministry, and a lot of push for people to convert to PNG. I would say it's utilizing this situation for a move that anyway the government has been keen on more and more moving towards clean fuel. We'll take a very short break. Those updates will be on your screen, but just look at what's happening in the markets. 300 points up now on the Nifty. Something is switched, at least in heavyweights, and just very particular stocks. This is not a broad-based rally, I would say, because if you look at the advanced decline ratio, you're not going to see a massive swing. It's banks, definitely banks, but look at it, declines still outweigh advances. So this is not a broad-based recovery you're seeing. This is a Nifty story. This is an autos story. This is a banks story. We're going to decode more of it when we come back after this very short break. Stay tuned.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी। Some moments in life are lifelong. Some memories are lifelong. Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. Ye on the quality lifelong.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
In a month that moved markets, shifted diplomacy,
the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7, #1 on YouTube. NDTV Network, streaming India's trust, leading India's conversations.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen, and he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on No.
2.2%. That's the gain from the low point of the day for the Nifty 50, and we're trading at very close to 23,450. 23,500, remember, is a level that a lot of technical analysts have pointed to that you should be wary of, because you could see selling come through, and we've moved very rapidly to that mark in trade today. The broader market's also coming off the low point of the day. We're joined on this side of the break by Vineet Polinchkar, who's the head of research at Venturious Securities, as well as Nilesh Jain, who's the head AVP Technical and Derivatives Research at Centrum Broking. Gentlemen, thanks so much for taking the time. On the technicals, I want to go to Nilesh first. Nilesh, what's leading to this kind of gain? Because you're seeing the VIX come off. It is not expiry. Tomorrow is the expiry. What is lending so much strength to the benchmark?
Very good afternoon, Alex. Good afternoon, everyone. The markets were definitely, trading in the oversold territory, and we are witnessing a strong pullback move from the oversold zone. If you now look at as far as levels, 23,000, which has acted as a very strong support, and even on derivative front, we have seen fresh put writing at 23,000 strike. That's kind of acting as a very strong support. And at the same time, if you see, the call writers are unwinding their position. So kind of a short covering we are witnessing today. And we expect this pullback to continue towards 23,600, 23,800 on the upside. So 23,800 is the 23.6% retracement of the entire fall that we have seen from the highs. So we expect Nifty to retrace at least 23.6%, which is at 23,800 from a very short-term perspective. And similarly, the kind of leadership we are witnessing in the Bank Nifty, that is looking strong on the chart, and we expect Bank Nifty to continue the pullback move towards 55,000 to 55,300 on the upside. And it looks like it has formed a short-term base formation at 54,000. So bankings are something that specifically one should keep an eye on, specifically private sector banks like ICICI Bank and HDFC Bank. Both the stocks are looking strong on the chart.
Nilesh, good afternoon. Tamanna here. Any picks in this last minute trade that we're seeing?
Right, Tamanna. So as mentioned, the overall setup is looking positive for a pullback move. And in this pullback, we are expecting banking stocks to do well. So ICICI Bank is looking positive for a pullback move towards 1,300 to 1,350 on the upside. So immediate target would be 1,300, followed by 1,330 and 1,350 on the upside, and 1,250. 1250 should be the stop loss for the long position. Apart from that, another stock that is looking positive is Policy Bazaar. We have seen a good base formation in Policy Bazaar, and it looks like it is on the verge of a breakout above 1,500. Will give a confirmation for a follow-up towards 1,550. So 1,500 and 1,550, these are the two targets on the upside for Policy Bazaar, and one can keep a stop loss below 1,440, and one can go long in Policy Bazaar.
Okay, I'm going to come to Vineet Polinchkar as well. Vineet, this is an afternoon surprise and a pleasant one. I think everyone's racking their brains on what's happened. I've also been looking at the headlines. Has there been any positive development? Not really spotted anything specifically. Is this just now valuations hitting the levels which make sense to buy? What is your take on what we're seeing in this last minute trade, at least on the Nifty, banks and auto?
So it is much more and beyond that. It's basically that, the uncertainty around Hormuz is over with. What you're now seeing that is playing out is optics, and that is with the local.
Sorry, Vineet. Sorry. Why do you say that? Why do you say the uncertainty around Hormuz is done?
So what was Hormuz all about? Hormuz was, restricting the flow of oil. Now that the US has come and bombarded them and taken all the military out of Iran, I think that, it's easier for them to now move oil through the port. And the second thing is there are alternative supply routes have also been taken up. and the world is also very rapidly diversifying also. So everything is playing out, and the negativity of the event, that is the Hormuz Strait, has been done with. So I think the worst is behind us. Of course, we will keep hearing some kind of hearsay around. There will be a lot of noise, but I think the markets will rally in the midst of that.
But Vineet, then why Brent is still at 105? You are saying essentially autos and banks only rallying. It's not really a broad-based kind of a rally. It's largely in the Nifty. There seems to be no indication that traffic has started through the Hormuz. Is this something that can sustain?
So, we have to understand how it plays out. So initially you'll have the uncertainty taken out. Now, there will be negotiations between the geopolitical parties on what is to be done with the Iran's enriched uranium. That is the trade-off that is happening right now. Once that is done, you will see oil prices come off. As oil prices come off, we will see the flow of gas. And as the gas flow starts percolating back to the country, you will see the economy start firing again. So we are at the worst of times, and hence markets always discount faster than the economy does. And that is what we are essentially seeing playing out.
Let's see how that pans out, because the headlines that are coming through from overseas certainly seem to suggest that there's more in the way of uncertainty that is playing out, and we are off the high point of the day, not just for the Nifty 50 but also for the broader markets, which had inched close to that positive territory but now have given up ground. The mid-cap index now trading with cuts of about 0.4%, small cap index down about 0.33%, and we're well over 18% from the all-time highs, or rather 52-week highs for the small cap index. Let's talk about Polycab, and this is a stock that you should watch out for. It's been witnessing a free fall this month and quite a bit of ground lost. Puneet joining in to talk about the key reasons why. Pull up the longer term charts while we're at it, just to look at why we're talking about this. Puneet, what are the key reasons behind this underperformance?
Well, the stock's down 19% just in the month of March itself, and while from 27th of February, stock was at 8,600 rupees and since has seen correction. So you might see that the broader market sell-off is and casualty, Polycab has been in that sense, but overall also in the month of March, that's almost 45 to 50% of the volumes that they do in the whole of Q4. So there's a lot of uncertainty currently, both overseas as well as in India, led by copper prices as well as the volatility there, and hence you are seeing that impact probably on Polycab, given the stock was priced to perfection and is not cheap in terms of valuation. The other aspect, that 6% of the company's revenue comes from exports, and almost 20% of that share is from the Middle East itself. So you will see some impact there as well. The third key reason has been the ongoing tensions has increased the freight rates by almost 4 to 5 times. So a lot of the copper insourcing as well as the aluminum insourcing will have an impact on commodity cost and hence on the margins itself. And that is some of the key concerns. And finally, both aluminum and the PVC prices have largely remained very volatile within the quarter itself. We've spoken about volatility within the counter is very impactful on margins. It's either one way or the other is much more beneficial. So those are some of the key reasons. And also the news reports that we spoke to KA Industries also about that. February has actually seen destocking by distributors. So those are some of the key reasons. Multiple impacts seen on Polycab at this point of time.
Okay, Polycab in focus, so is Paytm. I want to look at Paytm and then tell you what's happening there. It has to do with PhonePe actually pushing back its IPO, and you saw that big climb in Paytm at 4%. Maybe we can't explain what's happening in the market overall, but this PhonePe story definitely is turning out to be an interesting one, with Samir Nigam coming out and saying that they've paused IPO plans due to current geopolitical conflicts and market volatility, saying we will resume the process once there is stability in global capital markets. We sincerely hope for a swift return to peace in all affected regions and remain committed to a public listing in India. This was from Samir Nigam. So, okay, some of those details coming in, and Paytm definitely looking like it's seen that flush. Vineet, Paytm is a stock you've been tracking very closely. Would you look at it right now favorably?
Yes, we continue to be positive about it, and we think that we have a price of around a little around 2000, which we see playing out over the next 15 to 18 months.
Okay, all right. So Paytm at the high point of the day, holding on to those gains, up about 4%. Meanwhile, you're seeing a little bit of a cool off from the high point for the rest of the market, as we pointed out. But power sector, of course, is in focus on the back of significant demand and as well as supply constraints, because you've had the entire value chain in focus in the past. You've seen Coal India ramp up on the back of expected increase in thermal production and demand for coal. But let's talk about the bull and bear scenario for the power sector as a whole. And Varsha joining in to tell you about some of either of those arguments. Varsha.
Well, India's power sector is at interesting point. If you see, there's demand is hitting at multi-year high. You have capacity additions. You have spot prices rising to which power sector is in focus. Now let's see what are the bull and bear cases. Starting with the bull case, the Feb power demand is at 15-year high, one of the positive triggers for all the power companies. But the Maharashtra CM says that the domestic power tariffs will come down, and this is expected to hit the profitability or profits of power companies. Well, talking about the spot prices, power spot prices, if you see, have risen, and the coal generation demand has rises, which which will help the plants. While if you see the wind tenders, on the other hand, if you see the overall the coal generation demand rises, but when it comes to wind tenders, which are on the lower side, and Suzlon, Inox Wind are the companies like Suzlon and Inox Wind are of concern. Well, talking about the brokerages remain positive when it comes to the regulated players like NTPC and Power Grid, but the private players will have an overhang, when it comes to the regulated utilities such as NTPC and Power Grid. Now, this is due to the regulatory overhang, which will affect the companies like Tata Power. Well, talking about the FY26, if you see, the year-to-date capacity addition is at 4-year high, which is one of the strongest point. But the renewable financial companies like REC, PFC and IREDA saw the deep correction in the last few months. Lastly, if I were to talk about the highest return potential is seen in Suzlon Energy, which is up at 56%, but the lowest return potential is being seen at ABB India, which is at 5%. So overall, the conclusion is, though we have seen the capacity expansion, the demand, the growth in demand, but there are some concerns which will impact some of the power companies overall.
Okay, thank you for that, Varsha. Interesting bull versus bear on a sector. Vineet, are you seeing maybe what the kind of flush in power companies being short-lived if this whole situation reverses?
Yes, I think the financial players in the power space are going to benefit. I think they're seemingly undervalued, and they should do very well going ahead.
Okay, we've been doing this on an ongoing basis, and we've been tracking the live visuals that come through of vessels in and around the Strait of Hormuz. And remember, this is where the entire story lies from the start of this conflict. And what you're seeing on the screen right now is live tracking of the various vessels. Most of these, of course, are vessels that carry crude. And we're expecting the delivery of one such consignment, the arrival of one ship today and another tomorrow. These are Indian flag carriers that have come through the Strait of Hormuz, and there are a few more as well that are currently in that location. And it's critical for there to be traffic through this area. The entire trade in oil has been hampered on account of this, and it doesn't seem like anything has changed dramatically at this point, at least from the visuals that are available on the screen. You see the pockets where there is a cluster of vessels, and nobody really is braving that channel. We spoke with former shipping secretary earlier today, Tamanna, and what he was saying is that you're unlikely to see private shippers take that channel, even if there is insurance provided, because nobody wants to take that risk at this juncture.
Yeah, I think you will see more and more ships passing through in smaller numbers, and some reports suggesting, I think that there's also a Wires report saying that one ship with crude headed for Pakistan has also managed to go through, hugging the coast of Iran. So maybe the very fact that Iran is giving some options to certain nations might be seen as a positive. But this, frankly, in my view, Alex, because you've come off those highs as well, and it is just some sectors, this is just certain capital deploying, looking at the valuations there are. This is not any kind of a reversal in mood. All right, few minutes left to go. Any BTST calls, Nilesh, this afternoon?
Well, Tamanna, the overall structure, if you look at, is merely a pullback. That is what we are witnessing. Specifically in the exchange stock, we are seeing more strength compared to the other sector. So MCX is one particular stock which is looking strong in the chart, and we have seen throughout the decline that we have seen in the market, this particular stock has outperformed, and it has also found a very strong support at its 50 DMA. So can be a good BTST candidate for a pullback move towards 2625 on the upside, towards 2625 followed by 2700, and stop loss can be placed somewhere around 2480. So 2480 rupees should be the stop loss, and MCX will be one particular preferred bet on the long side.
ICICI Bank and MCX. Vineet, anything that you will go long on if we see these closing levels, just a minute and a half to go? Anything exciting for tomorrow that you have lined up?
I have a, I'm generally quite optimistic on the Indian markets. I think the banking stocks, your power sector, and your oil marketing company should do very well.
Okay. All right. We're optimistic that you will be absolutely proven right. We hope so too. Thank you so much, Vineet and Nilesh, for joining us this afternoon. Just a minute or to go. I think what we've seen in the Nifty is quite astonishing. Even if we have come off its highs, the fact that you're going to close well above 23,300 at one point at 23,400 is good. The intraday of the Nifty will tell you what's going on. It's the broader markets that are not really falling in line. But here is where the action is completely off the day's highs, but significantly better than what we have seen through the day. I want to pull up India VIX. So the 2 or 3 very important things to track include Nifty, VIX, and of course Brent. And this is what is a lead indicator right now, in a sense. A 4% plus drop on the fear index, showing you that things are okay. The overall advanced decline, though, is in a different mood altogether. The Nifty heat map and M&M Eternal, astonishing moves. Ultratech, Grasim doing well since this morning, but I would add Trent to it in HDFC Bank.
Yeah, absolutely. I wanted to talk about the advanced decline ratio, but more from the perspective of how it's played out through the course of the day. So when we can, let's pull up the intraday chart for the advanced decline ratio, because that's exactly it. At its widest point, it was pretty wide, and then it's closed quite dramatically and then widened again. So towards the end, and this is something that we were referring to even while it was happening, money does get taken off the table very quickly.
Still more than 2:1 ratio, right? Yeah. Declines to advances. As we're closing off the sectoral heat map, will be interesting to see as well what is happening with the broader markets. We'll close off with the Brent rates. Nifty, auto. This has been the sharp recovery coming in. And remember, auto stocks have been languishing the most. So maybe you have that kind of a calculation going on, that these are good companies priced well right now. Private banks, financial services because Bajaj Finance and Finserv also coming in, and Nifty Bank as well. On the losing side, Nifty Realty continues to languish. Nifty Healthcare also not doing too great, nor is oil and gas, because at the end of the day, Brent prices are still above 105. Gainers and losers on the broader market very quickly. Yeah, there you go. 104.73 on the Brent. So nothing really is
cool up just a tad bit.
I mean, that's barely cool. Going from burning hot to less burning hot, maybe. I don't know if I could call that cooling off, but just the gainers and losers in the broader market for a second to give you a sense. IDBI Bank in trouble because, I mean, it's disinvestment getting postponed. Bandhan Bank also seeing some pain today in terms of news reports. TTK Prestige, maybe because how many induction...
that is true. These two are actually good stories though. MRPL has recovered quite dramatically. CSB on account of that IDBI story. So one winner and one loser. Usually that is how it pans out. Someone has to lose to have somebody else win.
So interesting. I hope all of you are winners in the markets tomorrow, and maybe someone made money in the closing hour of trade. But that's all the time we have from Alex and the team that put the show together. Thank you so much for watching. Stay tuned. A lot of action coming up on the other side.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल बोलो जुबान केसरी।
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
In a month that moved markets, shifted diplomacy,
the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7, #1 on YouTube. NDTV Network, streaming India's trust, leading India's conversations.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories.
Hello, good afternoon viewers. You're watching Market Express and I'm Himakshi Bahugna. Let's get straight into the show and see how the markets have fared today first. So markets staged a sharp late afternoon comeback today. Both the benchmark indices bounced back into the green, with the Nifty reclaiming the 23,300 mark. The Sensex also recovered smartly, closing more than 700 points higher. But the broader markets told a different story. Both mid and small cap stocks continued to remain under pressure. Now let's look at the sectors. So the sectoral picture was mixed at close, with realty, oil and gas and also pharma being the top sectoral laggards. Auto, financial services remain resilient, with the Nifty Bank also clawing back to end in the green despite some select names dragging. And viewers, the Israeli military says that it has destroyed a plane at Tehran's Mehrabad airport overnight that was used by Iran's late Supreme Leader Ali Khamenei. And according to Israel, the aircraft was used by senior Iranian political and military officials for domestic and international travel and also coordination with the allies. And Mehrabad is Tehran's oldest airport and also a key dual-use facility, serving the civilian flights and also housing Air Force assets. In fact, escalating tensions in the Middle East have sharply disrupted the global flight operations as well, forcing the airlines to reschedule services and also operate unscheduled routes. Dubai International Airport has temporarily, suspended all the flights after a drone-related incident near the airport, citing passenger and staff safety. So Emirates has urged the travelers not to head to the airport, confirming all the inbound and outbound flights were halted. At least one Emirates flight from Thiruvananthapuram to Dubai was forced to return back and also mid-air and return to the origin. So authorities are saying that the operations were paused as a precaution amid rising regional security concerns linked to the US-Israel-Iran conflict. In fact, Trump has also urged the allies to provide assistance to ensure security around the Strait of Hormuz, which is a key global oil choke point amid rising Middle East tensions, and countries have responded cautiously. The UK has said that it is discussing options to keep the strait open but remains reluctant to put commercial carriers at risk. China has called for stable energy flows while stopping short of committing naval support. And South Korea has said that it is reviewing Trump's request with the US, while Japan has ruled out maritime security operations. France has said that any escort mission depends on de-escalation, and also Germany has clearly ruled out becoming part of the conflict. And Saudi Arabia has begun offering oil buyers the option to reroute the shipments via the Red Sea as the crisis around the Strait of Hormuz disrupt the global energy flows. Now, the Kingdom state-run producer has alerted the customers that crude normally exported through the Persian Gulf can now be redirected westward, bypassing the conflict zone. So this comes as fighting involving the US, Israel and Iran has pushed the tensions, in Hormuz to critical levels, which is a choke point that handles nearly a fifth of the world's oil. So with missile activity and also shipping disruptions escalating, global buyers have been seeking alternative routes to ensure uninterrupted supplies. And External Affairs Minister S. Jaishankar has said that two Indian flagged LPG tankers were able to pass safely through the Strait of Hormuz due to India's sustained diplomatic engagement with Iran. And he's also noted that New Delhi has been in continuous touch with Tehran, and also that these conversations have yielded some results, enabling the transit of the tankers Shivalik and Nanda Devi. However, Jaishankar has made it clear that India has not reached any blanket agreement with Iran, and that each vessel's movement is being handled on a case-by-case basis. So he's emphasized that India has offered no, concessions in return, and also that discussions remain sensitive and also ongoing. And a drone attack has triggered a major fire at Fujairah, which is the UAE's key oil trading and bunkering hub, marking the second such incident in 3 days. Now, authorities have confirmed that there were no injuries, and civil defense teams are working to contain the blaze. Oil loading operations at the hub have been temporarily suspended, and according to the sources, the attack has highlighted growing vulnerabilities at the UAE's only export route that bypasses the Strait of Hormuz. And following the incident, crude prices have surged, rising above $106 per barrel on heightened supply disruption fears. And oil prices have extended gains in a choppy session, soaring above $106 for a barrel. And this is after Iran said that crude flows continue, from its main export hub. So sentiment remains fragile as Donald Trump has stepped up pressure on the nations to help reopen the Strait of Hormuz. And crude is now up over 40% in the past 2 weeks. And this is driven by escalating supply risk. Now, the bombing of, Karg Island has also widened concerns over the conflict scope, even as the IEA says that oil from record stockpile releases will be made available in Asia to ease the supply pressures. And the government has called off the disinvestment of IDBI bank viewers after bids have failed to meet the expectations. Now, the stake sale has been put on hold as only 2 offers were received, both below the reserve price. Bids from Fairfax and also Emirates did not clear the valuation threshold, stalling the strategic sale process. Next up, we have CSB Bank that trades higher today as the proposed merger with IDBI Bank is officially off the table. Now, the government is calling off the disinvestment after bids come into, in below the expectation line. And this removes a major overhang for the CSB Bank, especially with the Fairfax already holding a large stake. So with that uncertainty gone, the market is now focusing on the bank's gold loan momentum and also what, the next quarter may really deliver. In fact, next focus is on Bandhan Bank that has issued a clarification today as the stock trades under pressure, and the bank has said that it is not aware of any sort of possible promoter stake sale and cannot comment on the accuracy of the reports doing the rounds. Now, this clarification comes even as the counter faces delivery-based selling, and also the street stays cautious about the MFI collections during the West Bengal elections. And viewers, HSBC has downgraded IOCL, BPCL and HPCL to a hold, saying a higher crude price put pressure on the earnings. And the brokerage has added that the OMCs may even face marketing losses even if the crude stays around the mid-70s. And the HSBC has also noted that while ONGC benefits from firmer crude, any upside is capped by policy risks. And paint companies are now taking price hike as crude-linked raw material costs move higher. Nuvama has said that the sector is in an oversold zone, and these hikes are coming after a steady rise in the input inflation. So Kansai Nerolac is raising the prices by around 2%, while Berger Paints is also pushing through slightly higher increases, in parts of its solvent-based range. So if crude stays elevated, the street expects another round of hikes next quarter, with some margin pressure likely in the near term. And viewers, next counter in focus is Feno Payments Bank that has issued a detailed clarification today saying that it is only under the DGGI's review and also not facing any sort of probe from the ED or under PMLA. So the bank has said that the investigation relates to certain program managers and also merchants and not to its own GST compliance, and it also calls reports on bail rejection incorrect and also denies any sort of link to gaming or betting activity. Now, this comes even as Telangana High Court reserves its order in the MD's plea challenging his arrest. In fact, Investec has maintained a buy rating on ICICI Bank with a target of 1,685 rupees. Now, the brokerage remains optimistic on credit growth heading into FY27, saying that rising competition from the PSU banks across loan segments is not a constraint. Now, management has also flagged resilience in India's banking system despite global geopolitical tensions, keeping ICICI Bank as a top pick. Next counter in focus is Bijil Projects, and that is seeing a strong move in trade after winning an order of over 700 crore rupees. Now the stock is up sharply, and this is marking its biggest jump in at least a year. So the company has received its ultra mega order from the Maharashtra Transmission Utility for power lines and also substation work. And now Bijil is also stepping up its global push through a new joint venture with Saudi Arabia's Al Sharif Group. And this is focused on high voltage infrastructure. Next counter in focus is Aditya Birla Group. So the stocks have moved higher in trade today on a mix of global and sector specific triggers. Hindalco strengthens as Bahrain begins output cuts at the world's largest aluminium smelter. Ultratech Cement trades firm, with Jeffrey saying that the company usually comes out stronger during the industry shocks. Grasim remains in focus as paint makers raise the prices, and ABSL AMC picks up momentum on the back of stronger volumes this week. And rising geopolitical tensions in the Middle East are also beginning to weigh on India's paper sector, with disruptions to energy supplies pushing up input and production costs. Now, for JK Paper, the impact could be significant, with over 30% of Indian paper exports now facing heightened risk. Higher freight and energy costs are also squeezing the margins, while global uncertainty is weakening the demand across key export markets. And adding to the pressure is the growing threat of cheap Chinese paper dumping, which could undercut the pricing and also further erode competitiveness for domestic players. Now, the combined impact raises concerns around profitability and also export sustainability for the sector. Let's look at more brokerage notes. Citi has maintained a buy rating on Indigo, setting a target of 5,100 rupees, and the airline has adjusted the operations on Middle East routes operating 36 daily flights between March 16 and 28, sharply lower than original 150 to 160 flights. So while fuel surcharges could lift the yields by 8 to 10%, Citi has cautioned that if the fuel prices remain elevated, the overall impact on profits could still be significantly negative despite the higher fares. And Jefferies cautions that rising crude prices are reintroducing the cost inflation risk for the cement sector as well after nearly 2 years of a benign cost environment. Now, sustained fuel price pressure could weigh on the margins across players while easing the competition and also higher use of green energy providing some sort of mitigation. Jefferies notes that large players like Ultratech Cement are better positioned to absorb the shocks and also emerge stronger during such industry disruptions. Let's keep with the brokerage notes, and Citi has stayed cautioned on Ola Electric and also maintains a sell rating while cutting its target price to around 22 rupees, and the brokerage lowers its volume estimates as the company continues to lose the market share and also face intense competition across the EV space. And Citi has also turned more conservative on the pricing and also trimming its revenue expectations over the next few years, and this is signaling pressure on the growth assumptions as well. Next stock in focus is Intellect Design Systems. So that has announced a 50-50 joint venture with UK-based Fintel PLC. Now the company will enter into a formal JV arrangement with the new entity set to be incorporated in the United Kingdom, and the partnership is aimed at strengthening Intellect's presence in the UK market and also expanding its financial technology offerings through collaboration with Fintel. And India's goods trade deficit has narrowed to $27.1 billion in February, and this is improving from the previous month as total exports rose 11% year on year to $76.1 billion, and this is led largely by the services. Merchandise imports have climbed sharply while goods exports remain steady. The Commerce Secretary has cautioned that exports may soften in March due to disruptions from the Iran conflict. And for FY26, India's total goods and services exports are now estimated at around $860 billion, which is below the government's $1 trillion target. And viewers, India's wholesale price index, that is the WPI inflation, rose to 2.13% in February, and this is marking the fourth consecutive monthly increase. Now, this uptick was driven primarily by the manufactured products and also fuel, even as food inflation remained elevated. February's numbers compared with 0.27% in the same month last year, and this is reflecting the impact of rising input costs and also continued supply chain pressures linked to geopolitical tensions. So economists are saying that the upward trend in wholesale inflation could really feed into the retail price pressures in the coming months, especially if the global commodity prices remain firm. And viewers, digital payments major PhonePe has temporarily paused its highly anticipated IPO process, citing heightened geopolitical uncertainty, particularly due to the intensifying conflict, in the Middle East. Now, the company has said that the global environment is too volatile for a large public listing at the moment, adding that it hopes for a swift return to peace and also remains committed to listing in India when conditions improve. And the decision comes just weeks after PhonePe has secured SEBI approval and also filed its updated draft red herring prospectus. So the IPO, structured entirely as an offer for sale by existing investors including Walmart, Tiger Global and Microsoft, was expected to target a valuation between 86,500 crores and also 97,500 crores. Viewers, Indigo has announced a new partnership with Adani Airports that will allow its blue chip loyalty members to earn and also redeem the reward points on duty-free shopping at select airports. Now, according to the airline, the collaboration will initially cover the duty-free stores at Mumbai, Ahmedabad, Lucknow and Guwahati airports, all operated by the Adani Group. Now, the move deepens Indigo's push to expand its loyalty ecosystem beyond flights, offering passengers new on-ground earning opportunities. Now, the airline has said that the tie-up is part of its broader strategy to build a travel lifestyle rewards network, enabling the members to accumulate points across multiple touch points and also redeem them seamlessly travel and also retail partners.
And India's aviation sector is witnessing sharp volatility as domestic air traffic has fallen nearly 6% in the first half of March following the sudden escalation of the Middle East conflict on February 28. Now, average daily domestic passengers has dropped to 4.79 lakh as compared to the pre-war average of 5.08 lakh. So budget carriers like Indigo and SpiceJet have come under the lens as they adjust the operations amid the rising aviation fuel prices, airspace closures and also higher war risk premiums. So the international segment has been hit harder with traffic down 33.5% in early March. But after bottoming out on March 3, the data shows a gradual rebound, touching about 93,491 passengers on March 15 as airlines has reworked the routes and also the schedules. And viewers, the government has granted temporary pilot duty relaxation to Air India, enabling the airline to better manage the long-haul international operations hit by the ongoing Middle East conflict. The Directorate General of Civil Aviation, that is the DGCA, has allowed Air India to extend flight and duty time limits for pilots on certain sectors, particularly those affected by airspace closures and also conflict-driven rerouting. Now, Air India has been operating evacuation and relief flights as well as rerouted the long-haul services, putting pressure on the crew scheduling. Now, the DGCA has said that the exemptions will remain in force for a limited period and only with strict fatigue management safeguards in place. In fact, Instagram will remove end-to-end encryption from all the chats starting May 9, marking a major shift in the platform's privacy design. So Meta has confirmed via its support page that E2E messaging will no longer be supported after May 8, meaning that users' messages will no longer remain fully private between the sender and the receiver. So once inscription is removed, Instagram messages will be accessible to Meta, and governments requesting data could also gain access, which is a dramatic departure from Meta's earlier privacy-first stance. So users have been advised to download any encrypted chats or media before the deadline. And here's on to some national news now. Rajya Sabha elections in the spotlight. Polling is underway for 37 seats across 10 states, with the 26 candidates clinching a victory unopposed. Now, Nitish Kumar and BJP chief Nitin Nabin are among the key candidates in fray. Now, several heavyweight names making the cut, including Sharad Pawar, Ramdas Athavale, Abhishek Manu Singhvi, Vinod Tavre and Babul Supriyo. So, however, the contest is far from over in Bihar, Odisha and Haryana. In Bihar, 4 seats are virtually settled, but the 5th seat heads to voting. And now on to some international news. Viewers, Iran's Foreign Minister Abbas Araghchi has confirmed that Russia and China are providing military cooperation to Iran amid the ongoing conflict, calling both the countries Tehran's strategic partners. So speaking in an interview, Araghchi has warned that any attack on Iran's oil or energy infrastructure would trigger retaliation against regional assets linked to the US companies. So he's also said that Iran has no immediate plans to fully reopen the Strait of Hormuz, citing security risk and also recent strikes near the key export facilities. And Donald Trump is signaling that he could delay a potential summit with China's President Xi Jinping if Beijing does not help ease the tensions around the Strait of Hormuz. So Trump is linking progress on regional stability to the timing of any high-level meeting with China. So the development adds a fresh geopolitical layer to already complex US-China relations. And China has lodged strong, representations with the United States over its latest Section 301 investigations, raising the issue during the ongoing trade talks in Paris. Now, Beijing has said that Washington has launched probes against 60 economies, including China, citing alleged forced labor violation and also overcapacity concerns. And China has urged that the US to really correct what it calls the wrongdoing, resolve the differences through dialogue, and also warn that it reserves the right to take necessary measures to protect its interests. And the United Arab Emirates has taken major enforcement action, ordering the arrest of 35 individuals, including 19 Indians, for circulating misleading and AI-manipulated videos online amid the ongoing Iran-US-Israel war. So authorities have said that the content included fabricated missile attack clips, AI-generated visuals, and also real footage posted with doctored commentary, all of which were deemed capable of causing panic, exposing security vulnerabilities and also undermining public stability. Now, officials have said that the accused will face an expedited trial, and also penalties include at least 1 year in prison and fines starting from AED 1 lakh rupees. And Joan Laporta is continuing as president of FC Barcelona, keeping control of the club during a crucial phase of rebuilding. Now, Laporta has said that the focus remains on financial stability, strengthening the squad and also restoring Barcelona's dominance in Spanish and also European football. And the leadership continuity comes as the club pushes ahead with its long-term sporting project and also stadium redevelopment. For now, Laporta stays firmly at the helm as Barcelona looks to return to the top. And viewers, as we wrap on this edition of Markets, let's talk also about lights, cameras, and a night that celebrated cinema at its most powerful. At the Oscars 2026, one battle after another emerged as the defining film of the year, taking home Best Picture for its bold storytelling and emotional punch. Now, Michael B. Jordan delivered an Oscar-winning turn, claiming Best Actor for a performance, marked by intensity, control, and also quiet strength. And Jessie Buckley was crowned Best Actress, her portrayal leaving an indelible mark on audiences and also critics alike. In fact, continuing with the entertainment section there, Salman Khan's upcoming film on the Galwan clash is getting a new name. The project, earlier titled Battle of Galwan, is now being renamed Matrubhumi. So this change comes at a time when India and China are seeing a gradual diplomatic thaw. So the makers saw the new title shift, the focus towards patriotism and also sacrifice, while the film continues to draw inspiration from the events along the border. And with that, viewers, it's a wrap on this edition of Market Express. Stay tuned to NDTV Profit for more news and updates.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
In a month that moved markets, shifted diplomacy,
the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7, #1 on YouTube. NDTV Network, streaming India's trust, leading India's conversations.
First India tour in your city. Rug on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go, grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive.
Market holds its 3-day losing streak, closes over 1% higher. Nifty ends about 23,300 after gaining over 350 points in 30 minutes. Broader indices underperformed the benchmarks, while the sectors finished mixed. Brent holds above $100 as Trump says US may hit Iran's oil hub again just for fun. Trump threatens to hit Iran's oil export infrastructure on Kurg Island as the war has entered its third week. 3 Indian ships get the safe passage from the Strait of Hormuz. Shivalik vessel expected to reach India at 5 p.m. today, while Jug Larki carrying 80,000 metric tons of crude and Nanda Devi LPG carrier will reach India tomorrow. Government says there is no congestion reported at any major port. Dubai Civil Aviation Authority announces gradual resumption of some flights to and from the Dubai International Airport following the temporary suspension implemented as a precautionary measure following a drone-related incident near the port. Commerce Secretary Rajesh Agrawal says India and US will sign a trade deal only once US creates a global tariff architecture. Adds that India is examining legal impact of US notices around trade and tariff investigations around Section 301. PhonePe pauses IPO process temporarily amid the geopolitical uncertainty from the Middle East war. CEO Sameer Nigam says that the company hopes for a swift return to peace in all the affected regions and it remains committed to a public listing in India. Leonardo DiCaprio's one battle after another wins big at 98th Academy Awards with Oscars in 6 categories. Michael B. Jordan and Jessie Buckley are the first-time winners in leading acting categories. Nobody Against Putin bags the best documentary feature. Hello and welcome. A very good evening, viewers. This is Malika Mishra on NDTV Profit and you're watching Profit 360, a show that gets you all the latest updates on markets, national as well as international news. Let's begin with the markets because the Nifty bounced back strongly, ending in the green with gains of over 1%, especially in the last 30 minutes of trade. It closed about 23,300 and snapped its 3-day losing streak. Leading the charge were Ultratech Cement and M&M, both rising over 3.5% to become the top gainers in the Nifty basket. However, the broader market underperformed the benchmark and sectorally the picture looked mixed. Let's in fact head over to my colleague Varsha for all the details on today's market action.
Well, Nifty 50 ends in green, up over 0.5% and ends about 23,300 mark. Snaps 3-day losing streak. Ultratech Cement and M&M are the top gainer when it comes to Nifty 50, which are both up over 3.5%. Well, broader market, if you see, underperforms benchmark. Nifty Small Cap 250 and Mid Cap 150 both end in red. Mid Cap 150 down over 0.5%. IDBI Bank is the top losers when it comes to Nifty Mid Cap 150, falls over 17%. On to Small Cap 250 down over, which is down. Bandhan Bank and Great Eastern Shipping are the top losers when it comes to Nifty Small Cap 250, both down over 6%. All Nifty sectors ends in a mixed note. Nifty Auto is the best performing sector, which is up over 1.5%. Snaps 3-day losing streak. M&M and Bajaj Auto are the top gainers when it comes to Nifty Auto. Oil and gas and Nifty Realty are the worst performing sectors, down over 1.5%. Nifty Oil and Gas end in red for the second consecutive day. Nifty Realty ends in red for the fourth consecutive day. IOC and Bharat Petroleum, if you see, are the top losers when it comes to Nifty Oil and Gas, both down over 4.5%. Sobha and Oberoi Realty are the top losers in Nifty Realty, both down over 3%. Nifty Energy ends in red for the second consecutive day. Nifty Pharma in red for the third consecutive day, and Nifty IT in red for the fifth consecutive day, while Defense, if you see, is in red for the fourth consecutive day. So overall, yes, when it comes to benchmark, ended about 23,300 mark.
Thanks so much for that, Varsha. Of course, there are red patches in the market, but better than how it was looking 3 days in a row. But viewers, oil prices are continuing to rise as markets see no end in sight to the effective closure of the Strait of Hormuz. Brent crude, the most important benchmark for global prices, has surged to as much as $106 a barrel, and WTI crude is trading around $100 per barrel too. William Lee, chief economist at Global Economic Advisors, told us this morning that Asia and Europe are most vulnerable to the downside impact of higher oil prices as opposed to the United States. Listen in to that bit from our chat with him.
Right now, all of the efforts and policies that are being put in place to try to keep traffic going in Strait of Hormuz to offset the terrorist type tactics that the Iranians are using to close the strait, they are really for benefiting the rest of the world rather than the United States. And I think the markets have been taking it very calm because they realize that the downside impact of the high oil prices is going to hit Asia and Europe much more than the United States. Right now, all of the efforts and policies that are being put in place to try to keep traffic going in Strait of Hormuz to offset the terrorist type tactics that the Iranians are using to close the strait, they are really for benefiting the rest of the world rather than the United States. And I think the markets have been taking it very calm because they realize that the downside impact of the high oil prices is going to hit Asia and Europe much more than the United States.
Viewers, the government in its most recent inter-ministerial briefing on recent developments in West Asia has reiterated that India has adequate crude oil inventories. But it did say that LPG is a cause of concern. Sudhakar Sharma, Joint Secretary of Marketing and Oil Refinery, appealed again to refrain from panic booking. On a positive note, though, Indian ship Shivalik that passed the Strait of Hormuz is scheduled to reach India today at 5 p.m. Two more vessels, one named Jaglarki carrying 80,000 metric tons of crude and Nanda Devi carrying LPG, are supposed to reach India tomorrow. Randhir Jaiswal, spokesperson MEA, also said that over 550 Indian nationals have crossed Iran border through Armenia. In fact, listen into some of those bites from the briefing.
Shivalik LPG carrier, which sailed from Persian Gulf, crossed the Strait of Hormuz and headed towards India, will be reaching today around 5 o'clock in the evening, maybe after an hour or so. And before its arrival, the documentation, priority berthing, everything has been arranged at the port so that there is no delay in discharge of cargo by this. 22 Indian flagged vessels with 611 Indian seafarers remain in the west of the Strait of Hormuz in Persian Gulf. And DG Shipping continues to closely monitor the situation in coordination with ship owners, the recruitment and service licensee, and Indian missions in the region.
कमर्शियल एलपीजी के बारे में मैं ये बोलना चाहूँगी कि लगभग सभी स्टेट्स, बहुत सारे स्टेट्स ने कमर्शियल एलपीजी का डिस्ट्रीब्यूशन स्टार्ट किया है एंड the release orders, the allocation orders have also been issued by them. भारत सरकार ने 14 तारीख को एक ऑर्डर इशू किया है और उसमें उसके द्वारा सभी लोगों से, जिन लोगों के पास पीएनजी और एलपीजी कनेक्शन दोनों हैं, से रिक्वेस्ट की गई है कि अगर आपके पास दोनों कनेक्शंस हैं तो कृपया अपना एलपीजी कनेक्शन को सरेंडर कर दें.
Viewers, I have my colleague Danish Anand joining us to give us more updates from this important press briefing. Danish, what else have you picked up apart from the comments that we definitely heard?
If we look at from a relief point of view, we are seeing that two ships will be entering India very soon. Shivalik will be entering India and it will be docked at the Mundra port, and it is carrying LPG. And on the other hand, another LPG carrier is expected to reach India tomorrow. But there was a talk about another third ship called Jaglarki, and that is also on the way to India, and it is carrying 80,000 MT of crude. So if we look at these three things, while India's overall consumption of say gas and crude is around 80,000 MT per day, and whatever quantity that these ships are carrying, it will suffice only for just for one day. But if we look at the overall impact, the Indian government is able to get these ships back to India so that our LNG and LPG and crude and petrol, all of that, all these refineries keep on running. But on the other hand, if we see, as far as the LPG is concerned, government says that still it is a cause of concern, and the government has done various efforts over the past few days to ensure that there is more LPG availability. And the first step was by curtailing a certain commercial LPG, and slowly these cylinders are being released by the different state governments. So from that point of view, the government is ensuring that the LPG goes to the domestic consumer first. On the other hand, we are also getting the raw material from these ships. So situation is slowly improving, but we are yet to reach the we are yet to get all the consignment that India was supposed to get some time back. So if you look at the overall scheme of things, the government is saying that from the crude perspective, we have ample amount of stock. Similarly, for the ready products as well, LPG is a cause of concern, and the government believes that as India keeps on talking to Iran, they will also ensure that there is more and more safe passage of Indian ships. So all in all, if we see, the government feels that LPG is still a cause of concern, but the situation is much better, and we have ample amount of crude and the other ready products with us.
Right, thanks so much, Danish. As you said, that we are making our strides towards getting these ships to India. But viewers, my colleague Rajendra Thakur is reporting from Mundra port, where Shivalik vessel will arrive today. Take a look at this report for all the details.
The LPG tanker Shivalik has safely crossed the Strait of Hormuz and will arrive at Mundra port this afternoon. Amid the ongoing tension in West Asia due to the continuous effort of the Indian Ministry of External Affairs and the vigilance of the Indian Navy, two important Indian ships, Shivalik and Nanda Devi, carrying 92,700 metric tons of LPG, have successfully crossed the Strait of Hormuz, considered on the most sensitive and dangerous in the world, and are safely processing ahead the LPG tanker Shivalik, which processing under the tight security of 3 Indian Navy warships, will dock at Mundra port at 4:13 p.m. today. Preparation on the war footing so that the consignment of gas can be immediately unloaded and transported to other parts of the country.
Viewers, joining me now is Vibhuti Garg, Director, South Asia at Institute for Energy Economics and Financial Analysis. Thank you so much, Ms. Garg, for giving us your time. It would be interesting for me and for my viewers to know how you view India's strategic steps that it is taking in securing its oil infrastructure. We have 3 vessels that are secure, that have, supposedly gotten the permission to pass to the Strait of Hormuz. While the quantity may not be enough, how do you think that move suffices in regards to our energy needs at the moment?
Hi, first of all, thank you for having me here. I think you very rightly said, while India is taking a lot of steps, in fact, including some of the drastic steps to ensure, especially on the LPG front, that all the domestic consumers do have the sufficient LPG to run their houses, to run their kitchen, so that nobody starves. But at the same time, I think this is a much broader problem involving other, imports. India is hugely dependent on oil imports, more than 80%. For LPG imports, again, more than 50 to 60% of our LPG is imported. So that really kind of exposes India to these supply and price shocks. And we have seen recently the government kind of increasing the prices of LPG. It is not to dissuade consumers from consuming more LPG, but at the same time ensuring that some of the other steps that the government has taken, which is respect to kind of rationalizing the supply, not kind of restricting the supply, but rationalizing it so that people are more mindful, they are not hoarding. At the same time, domestic consumers, very rightfully so, are being prioritized over the commercial consumers, but also we need to factor in that a lot of people, their day-to-day earnings, especially the small eateries, is dependent on running these kitchens. So from that perspective, I think there needs to be a much more conscious decisions taken, not just kind of restricting it at as I said, at a broader level, but also ensuring that some of these whose livelihood depends on daily earnings from selling these products and who needs LPG, maybe some more consideration needs to come in place. hopefully with these new vessels being allowed to enter India now, and hopefully as we speak, one of the ships carrying LPG might have already been there on the port. So that will help to ease off situation, but we really need to come up with more measures. And more measures, when I say in the long term, I think we have, in the last few years, these geopolitical tensions have exposed India to look for alternative solutions. We did see, finally, there were a lot of people looking at electric cooking. At IFA, we have been kind of written several reports, engaged with a lot of stakeholders, including the ministry, to promote electric cooking, especially where there is reliable source of supply in the urban area. So I think learning from these experiences, I think we really need to give now much more push.
Right.
Other fuels, including electric in a big way.
Ms. Garg, just interrupting you there. You said that a lot more consideration needs to be made apart from whatever is being done. And I'm not going to take away the credibility of the Indian government in securing these ships, especially through a region that has been declared officially by Iran a war zone. I think that shows India's strong diplomatic position in the world at the moment. But speaking from the economics perspective, to what extent do you see prices are going to rise because of oil crunch in India especially? And what kind of preparation can Indian consumers make at this given point in time? Because nobody knows till to what extent is the war going to go on for.
Definitely, we are going to see the price crunch in some or the other form because oil and, again, the cooking fuels really contribute to a large portion of a household expenditure. So whether it's increase in, petrol or diesel prices, or whether it's increase in LPG prices, it will start hurting the consumers. Government, to some extent, has been absorbing these price shocks by giving more and more subsidies and not directly increasing the prices for a lot of these fuels. So somewhere or the other, indirectly, it will start hurting, whether it's, as I said, it's directly in the form of higher fuel prices, but more importantly, the fiscal burden that the government is going to face, which might also put pressure indirectly by increasing some of these duties. We have seen in the past, the price recently, even for the oil, have gone up from $65 per barrel to now touching today $105 per barrel. And on one of the days, it even touched to $120 per barrel. So in this kind of a situation, no matter how much government might try and absorb these prices at the moment, but gradually there will be an increase in prices. We will see, as I said, it's a kind of a vicious cycle. And there will be a lot of price burden on the consumer's expenditure. So definitely how we increase alternative sources, as I said, electricity, which then should be run from more and more cleaner energy sources like renewables, especially during daytime, using more and more solar.
Ms. Garg, I was reading a report yesterday, and it's interesting to see that India's PNG consumption comprises of just about less than 5% of our total gas and energy consumption. And in light of this war, do you think that the Indian government, perhaps once all of this is over, it is going to push people to adopt more of PNG? Because in crises like these, which we do not know to what extent would it go, will it come again, because it is an uncertain world, do you think PNG consumption is going to push for, and that would be encouraged more?
When it comes to, again, the fuel choice, India does not have its domestic gas. It's very restricted again. So increasing PNG consumption also mean increasing, imports for gas in India, because the domestic gas production is kind of reached its upper limit. We don't have more exploration happening. So it doesn't seem to me a natural choice. The natural choice has to be more pushing for more renewable energy deployment, including battery storage, and using more and more electricity to fuel, whether it's, as I said, cooking, whether it's used in industries. So shifting from these, I would say, blast furnace, whether it's coal dependent or whether it's gas dependent, the gas boilers, I think the natural shift should be more towards electrification rather than anything else. And where India does have a clear advantage of setting up bigger and bigger capacities.
Got it. Very important points made. Thank you so much, Ms. Garg, for joining us and helping us decode what's happening with the energy landscape of India at the moment. As you said, shifting to electrification is perhaps one of the most important and prime solutions to energy crisis, not just currently, but also in the future. Thank you so much for giving us your time.
Thank you.
But moving on, viewers, an important development. President Donald Trump has called on about 7 countries, especially those heavily reliant on Middle East oil, to join a US-led coalition to police and secure the Strait of Hormuz. The vital waterway through which around 1/5 of the world's traded oil normally flows has faced disruptions due to the ongoing Iran war, causing oil prices to soar. Now, Trump emphasized that these nations should protect their own territory since the US is less dependent on the strait thanks to its own oil production. He warned that the US will remember countries that do not help. Now, I'm going to take you through the responses of each of them. Responses from the countries have been cautious, with no firm promises or commitments to send warships or join military operations. For instance, UK's Prime Minister Keir Starmer discussed with Trump the importance of reopening the strait, but Trump said that he declined to put British aircraft carriers into harm's way. A spokesperson for China's embassy to the US, Liu Pengyu, said that China would strengthen communication with relevant parties for de-escalation, but did not really signal a strike or security. South Korea's foreign ministry said it takes note of Trump's call and will review the situation. Japan, France, Germany and Australia have given no clear signs of joining the US to secure the Strait of Hormuz as well. But moving on to an update from Dubai Airport. Lots have happened over there. Flights to and from Dubai International Airport are gradually resuming, with authorities saying services to select destinations have restarted after a temporary suspension earlier in the day. In a statement, airport authorities said operations were halted as a precautionary measure following a drone-related incident near the airport. But movement is now being restored in phases. That's gradually and slowly, with passengers advised to check with airlines for the latest updates on their flights. Earlier, all flight operations at Dubai International Airport were briefly suspended, disrupting air traffic across one of the world's busiest aviation hubs. The disruption impacted several Indian carriers as well. Air India and Indigo had cancelled or rescheduled multiple services to and from Dubai following the suspension. Air India says its Dubai flights for the day were cancelled, but passengers were being offered free rebooking or full refunds, while additional assistance is being provided to affected travelers. In fact, an Emirates Thiruvananthapuram Dubai flight had to turn back midway following the closure of Dubai International Airport and has landed back at Thiruvananthapuram International Airport. The airport authority has now confirmed that flight operations are gradually normalizing, though some delays and schedule adjustments could continue as traffic stabilizes. But we have another important interview that we would like you to look at. In an exclusive conversation with NDTV, Israel's ambassador to India, Ruvain Azhar, spoke about the West Asia war, alleging that the Iranian regime has been carrying out attacks both directly and through its proxies. Let's listen in.
It's been 2 weeks now of attacks. Have you destroyed Iran's nuclear potential?
Yes, we have created a situation in which the nuclear stockpile is inaccessible at this point. Of course, we have an interest to remove it from Iran, and we hope it can be done diplomatically. We are capable at this point of degrading the huge military industry they have built all around the country, was spread in dozens of locations. And at this point, they don't have production capability, zero production capability. In addition to that, we've been able to degrade about 70% of their launching power. We are continue to hunt the launchers. It depends basically on weather, because we don't have any air defenses basically left. And we will continue to act in order also to remove the forces of oppression.
Is it your concern that going into the future, it's the drone threat from Iran, cheap drones manufactured in small factories, which perhaps can extend the conflict indefinitely?
Well, first of all, the attrition started more than 3 decades ago when the Iranians decided that they want to destroy the state of Israel. They have been attacking us constantly in different ways, through proxies, by exporting weapons of mass destruction, by training terrorists, by supporting them financially, by their propaganda. So this has been continuing for a long time. You are now seeing the military part of it that we got to because they were trying to create programs that are immune from future attack that would allow them to actually implement their plan of extermination of our country. And therefore, we will continue until we are sure that these threats are neutralized. Now, regarding drones, look, we've been able to deal with the drone threat. Actually, all the drones that were sent by Iran were intercepted. Yeah. And we have a solution against drones. Of course, that at the end of the day, if they would have the capability to sophisticate their drones and to build them in the hundreds of thousands, then naturally it would be much harder to deal with that. And that's why we are now dealing with the threat.
Viewers, that's all the time we had on this edition of Profit 360. Stay tuned. This is Malika Mishra. Lots more coming up on the other side of a very short break.
In a month that moved markets, shifted diplomacy,
the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7, #1 on YouTube. NDTV Network, streaming India's trust, leading India's conversations.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go, grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit, a very interesting company I have got. And of course, the theme is on the crisis. Whatever the crisis is happening in the consumer space, there is an interesting company for you in KYC segment. But before that, let me give you some hints. Try to guess which company I'm talking about. The first one is, it's a Pune-based poultry products seller. A lot of important products they are actually going into, and this also includes your ready-to-eat food. The second hint is definitely going to be the company also has other businesses, which includes animal health and even oil seeds. Now you must be understanding the overall universe is small, so you can guess it now. The stock, however, is down 20% in 2026 already. The big sell-off happening in this counter as well, and also most of the mid-cap and the small caps have seen a big round of selling. And the ready-to-eat food segment, that is where my interest comes. The company is actually on focus on that category as well. So you must be wondering which company it is all about, and the company in focus, it's there in a part of our household meals also when you buy these packaged foods which comes on your fridge. And the company's name is Venky's India. This is the company which we'll talk about. But the question remains is, why am I calling this small cap company in KYC? What's the important reason for it? You guessed it right. It's the LPG related crisis which is definitely there. A lot of households are stacking up on packaged foods. That's something to look out for. But remember, company does export of eggs also. The demand for this segment after the LPG issues impacting the households, has that demand gone up? That's the first question to be asked to the company. The second is, of course, the export related items. You know, there's a lot of Gulf related exports which goes on. There is a supply chain issue. So is that impacting the company? And if yes, are they catering that amount or the goods to the domestic markets or not? And how are the broiler and the industry pricing looking like? Remember, the realizations industry is on the lower side, but in Q3, however, there was an earnings surprise. Will that continue in Q4? That's a big question. Also, the company's egg pricing, that has softened in because Gulf exports have declined, and that's what we have seen. The domestic market, the egg prices after the winter season coming over is on the decline. So that is something which we will watch out for. And also, the company is focusing on reducing the volatility in their portfolio, especially on the cyclical front. So let's see which products the company is under right now and which will venture into. And to give us an entire perspective, we'll be joined in by Prasanna Pedgaonkar. He's a general manager at Venky's India, where Prasanna will give us all these details and the queries which we have asked him for KYC. But let's give you an entire picture about the company, what Venky's is all about. It is definitely a household name. You have seen that in your fridges, but there's something more. It's of course a Pune-based poultry products seller. But apart from that, there are other businesses also which you should focus on. This of course includes the poultry products, animal health, and of course oil seeds. These are the 4 key business line categories where the company is focusing on. But let me give you another perspective, is that its company is entering into the ready-to-eat cooked spices market. This is a high margin, high growth space, and of course company is already there in the ready to cook meals or the pre-packaged meal segments already. But the company is focusing on reducing its volatility by soya processing businesses, SPF eggs, and even processed chicken products. Interesting product profile if they want to, come out. They are supplying to QSR players such as KFC, Pizza Hut, Burger King, and even McDonald's. The list is bigger, but these are the key players I would like to talk about. Also, they have B2B, B2C clients. This includes Walmart, Metro Cash and Carry, Star Bazaar, Future Retail, to name a few. This is where majority of their businesses happen. Remember, it's a B2B also, B2C segment also. Let's just see how the sales breakup happens. And very interesting way the company has given this, the volatile business and the non-volatile business. It's largely even Stevens, but nevertheless it's very much important, especially the seasonality impact also come in this business model. Also, apart from this, let's look at the Q3 key commentary, how it has been. The poultry and products segment has performed better due to improved realization. Last year, of course, there was an overhang on them, and the animal health products and the oil seed segment, these are the largely non-volatile businesses. They have performed on a satisfactory basis. So largely mixed numbers have come in Q3, nothing out of the book, and that's why there might be a big selling pressure in the stock, which we have seen. The realizations, what are the key concerns for Venky's India? What are the performance issues with the company? The realizations are still remaining low for the poultry products if you look on a long-term basis. The second reason why Venky's is seeing selling pressure is a lack of institutional participation. FISDIs, the coverage is not there, and I'll get you all those details when we get the companies for the KYC ratings as well. The volatility is there in the business segments, and companies definitely trying to come towards the non-volatile segment, but it will take time. As a long-term investor, you should have patience for that. The cyclical nature of the oilseed business, that also comes in. So these are the key factors, you could say, which is ailing the performance of Venky's India. But let me give you the total rating parameters of how Venky's India is actually, going to be judged in KYC. There are 8 rating parameters where we get our company in KYC. The first 3 is the holy grail: income statement, balance sheet, cash flow, which we track. But the return ratios is also very much important. And the company itself, if you look at the shareholding, how the FIs have moved, or the promoters, have they moved or not? That's the question. Street cred would be kitna paisa kamaya gaya. It is short term, long term, or even you could say a very, very small time period as well. Valuations, we'll compare the company with their peers. Largely, I have taken the mid cap and the small cap players. So that's where we'll try to understand, is there any value coming in this counter or not? And definitely the outlook, especially on the industry front, that's something which we'll be watching out for. But nevertheless, it's a very interesting sector, and we will explain you bit by bit what's happening here, so that you understand the entire picture for Venky's India. The first one is the income statement. Let's pull out the income statement and see where the concern is lying, and the concern is lying everywhere. The revenue numbers, the EBITDA numbers, the PAT numbers, look at that 3-year CAGR numbers, 9% down, 11% down, this is also 11% down. That means there is some kind of an industry pressure, and this is a prolonged industry pressure. This is not a yearly seasonality impact coming in. That's why perhaps the market is not giving the returns or the valuations, or even you could say the perception for this company. But nevertheless, this is a business model to look at, and this is your overall setup, how things are panning out. Q3 numbers, we did talk about it. So it's a thumbs down when it comes to the income statement. But the second parameter is the balance sheet. Let's talk about that. And balance sheet has been pretty much decent. The equity value has been good. And the cash bank balance is stable. It's currently at 201 odd crore rupees. Remember, this is a very high working capital business. There is not a single iota of debt. The long-term debt is literally not there. It's just the short-term debt. It's a very high working capital business, and that's why we are seeing a good cash flows also there in the annual report. So largely we see the balance sheet maintenance for a capital intensive business is sorted here. That is why I'd like to give a strong thumbs up when it comes to the balance sheet. Also, apart from balance sheet, let's talk about the cash flows, how things are moving for the company. Is there any lumpiness involved? And definitely the question rises on the realizations and not on the operational front. So that's why we see largely it's decent, a slight dip coming in from the overall operation cash flow. EBITDA also on the higher side. So this ratio did come down going ahead, but nevertheless, there is a little bit of lumpiness in this kind of a business model. So right now, let's just keep this a neutral rating when it comes to the cash flow segment. Let's talk about the return ratios, and return ratios has been, on the downtick. FY21 was like a watershed year to talk about it. It was around 32 odd %, but it's not sustainable, to be honest. What sustainable would be something between 12 to 18%. That is what as an investor you should be looking at for a company like this. But there was a downtick coming in. But has this bottomed out in FY24? That's the big question. And yes, it has. Look at that in FY25. It has gone up to 11%. So we'll definitely ask the company, are the ROC numbers going to improve to that 14-15% mark in the next 2 years? That's the main question. But yes, it seems like the worst is over here. So return ratios, I'll be giving this a neutral rating. Let's talk about the shareholding, how things have moved, and actually nothing has moved. Just look at the numbers. Do you see any change? There's not a single change. Whether it's good or bad, that is something we should be watching out for. Promoters have kept their stake almost flattish, a minor increase a little bit in the FIs, but it's still a lack of institutional participation, if I would say. So it's definitely a concern, but nevertheless, it is a neutral rating when it comes to the overall shareholding. Let's talk about street cred, how things are moving out. And street cred is very much important because has the company made actual money for the investors? This is one of the important ratings to track, and largely the company has not made that money, be it a short-term trader, positional investor, or even this year itself, the stock has taken a big beating. Of course, mid caps, small caps have taken a beating. There is a seasonality impact of this business. Realizations are not going. I had mentioned you all the negative points on the company, why the drag is coming in. But even if you are a 5-year shareholder, then also you have not made money in this company. It's down 23%. That means all in all, till now, whoever is invested in the company over the time frames I discussed haven't made money yet, and still retail holds 42%. So it's a strong thumbs down when it comes to the street cred. See, when the prices fall down, valuations do turn attractive as well, and that's what even I have looked at. Largely, I've taken 3 of these players, HMA Agro, SKM Eggs, and this is a 12-month forward P, which I'm talking about. SKM Eggs is an interesting egg-related play, but the valuations are on the higher side. Compare that with Venky's India, it's almost, you could say, more than 50% at a discount. And if the peak valuations for Venky's were around 40-50 2 to 3 years ago, that has also come down. But does it make it very attractive to enter now? That's the big question, or you need to wait it out. So largely I feel it's a neutral rating when it comes to the overall valuations of Venky's when we compare that with its peers and also the history which the company has. But let's talk about the outlook. Outlook is where maybe we'll get some more perspective on this, and remember, the company just gives us information during its largely earnings season. So there's of course we could say a lot of communication doesn't come from the company as well. Volatility is still persisting in the poultry industry, maybe it's seasonal impact, or even if any other regulatory impact is there. The exports are getting impacted in the Gulf. There might be a pricing pressure as the products might be sold at a lower price in the domestic markets. The demand for ready-to-eat food, however, there is a silver lining. This segment is rising, and that is one of the key reasons why we have called this company also, where the management will talk about it. Winter demand for eggs, generally the high prices are higher for the eggs in the winter. That's also coming down because the consumption gets higher in the winter time. So that's something which trend is there, which we talk about. And of course, the company focusing on the reducing volatility portfolio. That's what the company has been talking about and claiming about it. And they have of course moved in that portfolio. The bird flu still remains a key overhang in this business model. Any area you take, if there is a culling or a bird flu break, the company's reactions become negative. We have seen that historically. So this always remains a overhang. So because of that, there are conflicting views when it comes to the outlook. I'll give this a neutral rating when it comes to the overall outlook. But come over, I'll explain you the total KYC rating for the company, and definitely the company or the industry needs to give something more to the investors. Income statement not happening here. Balance sheet decently capitalized. Cash flow return ratios, I would give it a neutral rating. But let's get into a bit more deeper into the other rating parameters. Lack of institutional participation, no money being made for the investors, 3 months, 6 months, 1 year, 5 year. That's where a little bit of concern comes. But hey, the valuations, they do turn attractive, largely neutral. Outlook, the ready-to-eat segment, that's something which we are watching out for. And of course, the other businesses are exposed to the cyclicality. But what's the total number to look at? That is 3.5 out of 8 for Venky's India. It's largely a shade below the average numbers which we generally give in KYC for this companies. It's a small cap company, always remember that. And small caps overall are seeing a big sell-off for the last 3 to 4 months, which we have seen in the markets as well. So it's just not the company's issue, but there is of course the market sentiment also. That's why we are seeing a downtick in that. But on the show, we'll have Prasanna Petgaonkar. He's the general manager at Venky's India. And good afternoon, Prasanna. It's always wonderful to talk with you. And first and foremost would be the issues which are happening right now in the global scenario. I'm sure you export also a lot of products, ready-to-eat products. So I just wanted to ask, first of all, are the exports getting impacted right now because of supply chain issues?
Yeah, good morning, Sharad. First of all, thanks for giving an opportunity to be here and present ourselves in front of your esteemed organization and in front of all visuals. With regard to the question and related to geopolitical and turbulence right now, what is going on? As far as our total sale value and volume is concerned, our majority sales goes for domestic only. I mean, a very small part goes for export. Export definitely is an important aspect. But however, when it comes to Venky's, hardly any export happens as far as listed entity is concerned. As far as poultry industry is concerned, yes, a lot of commercial eggs goes there, lot of hatching eggs goes there. But when it comes to the listed entity, hardly any export is impacted because majority of the supply goes in a domestic market. And with regard to the overall presence of Venky's, we have presence in almost 12 states all over India, and majority of our sale goes for domestic. It includes institution, it includes poultry farmer. But at the same time, when we see the overall profile and portfolio of Venky's, we have three different segments. One is the poultry, other is oil seed, and third is AHP. So with regard to oil seed and AHP is concerned, it's completely dominated by domestic supply, and it's unaffordable. And it's going smoothly the way in which it is supposed to. Of course, quarter to quarter variation is there, and that remains, and that is a part and parcel.
That's an interesting point raised. But Doctor, query is definitely going to be on the ready-to-eat segment, because the way LPG issues are happening, there's a big demand coming in for ready-to-eat products and also ready-to-eat spice mixes also, which the company has forayed into, which I just checked in the annual report. So your views on that? Has the demand inquiries picked up? What's the street outlook on that?
Yeah, fortunately, if we see from last couple of years, because of the dominance of young generation in the day-to-day decision making, I mean, definitely the demand for processed food is going up. Whether it's poultry or any other process, the processed food demand is going up. And what we are seeing under Venky is that the processed food demand is steadily going up every year, and the jump in percentage is very high. However, in absolute numbers, though it is not counted, but with regard to the percentage jumps in processed food market overall, the market stands very high, and it is touching to close to 10,000 plus crore as far as Indian market is concerned. This is with regard to the chicken processing industry I am talking, and every year it's growing at the pace of 10 to 15%. And we expect this to touch more than a double in coming 2 years. That's what is news from processing segment, and I'm sure everybody will endorse the processing market because of QSR, because of e-commerce platform, and because of the lifestyle and eating habit. This demand is going up steadily. And fortunately, Venky's has got presence from past 40 years in this processing segment. When processing was not at all a major discussion and work to be discussed in the industry, that time Venky's has entered into the processing, and we have the processing plant under Venky's from 1984. Though the listed entity comes in existence in 1989, but we have our processing plant in existence.
All right, so that's a good clarity to the street that you're already 40 years in the business. The listed entity has a limited history, and that you rightly mentioned also that the export doesn't happen largely from your listed entity. That's a very important clarity coming in. But I just wanted to get in your views over the last 2 to 3 odd weeks. In the dealer level, has the demand for your ready-to-eat products shot up because of these LPG issues?
Yeah, fortunately, unfortunately, whenever such, desperation happens, that time stockpiling happens. And definitely demand is going up. That is maybe a short term, that may be a medium term, we never know. But definitely people go for a desperate stockpiling, and that's what we are seeing in terms of all the food items, and Venky is no exception from them.
All right, so that's a very important point coming in that. But coming back to the pricing, your industry is very dynamic and there is a cyclicality also involved. How are the broiler prices looking like, and the important industry pricing trends which should be impacting your company, how are they looking like in Q4? If you could just give us that flavor.
Sure. If we see the overall poultry economics and poultry profitability with regard to Venky, we have seen that majority of the time, it's the ingredient prices which decides the profitability, or it decides the cost, major chunk of cost of production, because more than 65% of contribution in cost of production of broiler comes from feed ingredients, particularly maize and soya. With regard to last financial year, the maize prices and soya prices are comparatively high. However, it's a commodity cycle, and because of commodity cycle, now the maize is trading at less than MSP price. So also is the soya. We see with regard to Venky, we have a soya processing division of ours, oilseed division. For others, oil is a primary product, but for us, I can say that oil is a secondary product, and primary product is our soya DOC, which is specially used for formulation of broiler feed. And we use our byproduct of soya industry for production of feed, and it's completely self-sufficient, and we are using it for captive consumption. But commodity cycle with regard to maize and soya, yes, it's easing. From last 2 quarters, we are seeing that the prices of maize and soya are comparatively abnormally low.
That means this pricing is low. That means it's definitely going to help you improve the realizations, if I'm not wrong, right?
Yeah, that's what the market is.
All right.
We can't tell. I mean, it's not our credit, but that's what the business is. And because of whenever ingredient prices are easing, definitely it helps in reducing the cost of production. We basically feel that efficiency is a matter to be discussed as far as business management is concerned. So we do believe that our efficiency is a primary goal. So we keep our efficiency level very high, because there are certain things which are not in our hand, but that's how the market.
Exactly. तो simplify करे तो efficiency रहेगा, realizations रहेगा, and maybe Q3 good performance was there. So we can see that in Q4 also. That means margins and PAT is something you should be looking at for the fourth quarter. But Doctor, I just want to understand about the animal health product segment. We have discussed a lot about the oilseed segment, the poultry and the poultry product segment. But this animal healthcare product segment, it's a largely stable business. How has the growth been? What are the growth levers for this segment? If you could just spell that out for our audience.
Good question. What I would say that as far as Venky is concerned, we have 3 divisions under Venky. As I mentioned, one is poultry, other is oilseed division, and third is AHP. So AHP has got a yardstick of pharma companies, because it's completely go as per the rules of pharma company. So if you see the overall growth in terms of top line and bottom line, it is matching with any other pharma company, and you can see that our overall top line is growing. At the same time, our bottom line is also growing, and it's a very steady business. Though we are supplying majority to the poultry pharma industry of, as far as AHP is concerned, we are supplying to all over India. But the overall turnover is growing at the pace of not less than 8%. And so also the bottom line is growing, and it's a steady business. I mean, there is no volatility as far as AHP is concerned. And we expect a lot from AHP division. At the same time, we are expecting a lot from oilseed division and poultry division. We have SPF eggs also. That also is a part of our flagship company.
Right, that's a very interesting take on that. But Doctor, apart from this, the key question definitely is going to be, apart from this, is any kind of growth or capex plans you have earmarked for 2026, any kind of capex which you have seen? Because I know that there is a good cash bank balance also. Largely you have, what to say, you could say largely the short-term debt is there. But over here, I just want to ask, any capex investments earmarked?
Yeah, recently we have announced that we are going for a capex under SPF division. I mean, recently, last couple of years, our focus was to reduce the debt. And once upon a time, our debt was 700 crore. From 700, we reached to 250 in 2016-17. And now our long-term debt is virtually nil. So we are left with only a short-term, and that is a CC. But we have made a provision for going for SPF capex this financial year, and that is close to 60 crore for this financial year, which will come in existence in coming quarter, next financial first quarter.
And Doctor, apart from this, the shareholders, definitely the stock has been, on the downtake, and we have seen that because of the market as well as some performance related, which issues were there over the years, but now there's a turnaround happening. But the concern remains is, are we looking at any kind of a dividend or a buyback? Like shareholders also want something, right, from the company. So anything there you're planning in the next 6 to 12 months, or is it just going to be focusing back on the business?
Well, that's the decision of board, but definitely if you are asking, I will convey your feeling on behalf of all the investors, and I will convey your message to the board, and definitely will come back to you if some positive news is there on that front.
Okay, so that's the hoping for the investors, some positive news coming in from Venky's, and of course the fourth quarter, that is where we might see a good turnaround happening. You mentioned about realizations, so we'll be watching out for that, and the jump for the ready-to-eat food, that is where the interest lies in the market. Thank you very much, Dr. Prasanna, for giving your time and giving us the entire view and clearing a lot of doubts regarding the company. Thank you very much. It's always a pleasure to have you. So this is the company Venky's. It's a small cap company, plagued with a lot of reasons, but is there any silver lining to it? And those are the reasons which we have found out in our show KYC. So stay tuned to NDTV Profit.
To understand the Tamil Nadu twist, Join me in the midst of our people, language and politics. Vanakkam Tamil Nadu. Here we come.
In a month that moved markets, shifted diplomacy,
the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7. Number one on YouTube. NDTV Network, streaming India's trust. Leading India's conversations.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
well, I'm sure we'll be having outstanding reviews, solid suggestions,
The expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Hi, we're talking about Your Money Matters on NDTV Profit, and today I'd like to talk about 7 golden rules that will help you manage your money better. Sounds like a brochure, doesn't it? But let me tell you that these are simple rules that will at least help you step in the right direction. They may not be fix-all solutions or silver bullets, but there's something for you to consider. Joining me to talk about this is Nasir Salim, who is Managing Director of Flexi Capital. Nasir, thanks so much for taking the time. And these are actually things that are used as thumb rules, but they aren't one-size-fit-all solutions. With that caveat, let me start with the first one, which is the very popular 50-30-20 rule. What is it about and how does it work?
Thank you, Alex. Great to be back on NDTV Profit and on your show. So clearly, I think very well pointed out, those 7 good rules are very, very important, especially in times like these. So to your first one, I said, when you said the 50-30-20 rule is perhaps the most well-known budgeting thumb rule, Alex. And the idea is very, very simple, right? Allocate 50% of your take-home income, needs like rent, groceries, EMIs, and utilities, right? 30% then goes to wants, dining out, entertainment, your weekend trips. And the final 20% goes to savings and investments. But let us be honest, right? In India's metros, where rent alone, can be up to 30 to 40% of a salary, this rule needs to flex a bit, right? I mean, the principle behind it is what matters is that you need to have the exact numbers. And now that's the danger zone. The credit card trap, right? Banks and fintechs, as we all currently are witnessing, have made it incredibly easy to swipe first and think later, Alex. And I think that's where, the juggle is. Buy now, pay later, zero cost EMIs, revolving credit. These are sophisticated tools, Alex, designed to make you spend money you do not have yet, right? And a credit card is not free money. So the average credit card interest in India, for example, is anything between 36 and 42% per annum. Now, that is not a loan. That is a slow poison, basically, for your finances. So the right way is to make sure that you keep 20% savings at a starting point, not a ceiling. Again, the point is it should not be a ceiling. As your income grows, Alex, protect that. Let savings grow faster than lifestyle. And don't use credit card in the wrong way. By only paying the minimum due, swiping for lifestyle purchases you cannot afford, treating the credit card limit as your budget. Those are some of the completely no do's at all. We should not do any of that. And therefore, I think a 50% needs, 30% wants, and 20% savings and investment may work well. But again, the caveat is 20% is not a ceiling.
Yeah, it's not a ceiling. In fact, as you step up the value chain, you should increase the quantum in terms of percentage, because the argument is that just the previous year you were able to manage with a certain amount of money. And so therefore, from the increment, you can actually save a larger amount. At least that is how it should work on paper. To put it in practice is another matter altogether. But which comes to the second rule, or second golden rule, right? Which is pay yourself first. And this is kind of what you're talking about, to say that 20% should be front loaded. But Nasir, then a lot of people come and say, what are you talking about, Alex? Or what are you talking about, Nasir? I can't survive with this much money. How do you convince them that 20% is non-negotiable?
Again, it's very, very simple, Alex, I think to your viewers. The point is, when you talk about the pay yourself first, get in automation, in this entire process of personal finance. Invest on day one of the month, not from what remains at the end. We end up usually, investing what remains at the end. And that's something which gives us, it's a kind of comfort zone. So here is the question, right? How many of us wait until the end of the month, Alex, and then invest whatever's left? I think the solution is beautifully put. Simple, set up, automated, set up an SIP, a systematic investment plan to trigger on the 1st or the 2nd of every month, the moment your salary hits your account. This is what paying yourself first looks like. Your future self gets paid before your lifestyle does, right? That's very, very important. I think, when I talk about SIPs, we've been repeatedly saying this, Alex. When you automate it, the money, treat an SIP, like in this case, the automated payment advantage, like an EMI. you have to pay any money. So you have to make sure that the money gets debited from your account within 24 to 48 hours of your receivables. Whether you're a business guy or you're a salary person, it has to go and get benefit.
So that's one way of doing it. But Nasir, I myself, for example, what I do is, as soon as I've gotten my salary, I have a second savings bank account and I transfer a certain percentage of it into that bank account, and it's not used for any other transactions. So that's another way that you can do it, right? And the SIPs go from that account.
So that's a great point, Alex. I think if you create two buckets, one is your usual, regular, monthly expenditures. Create that bucket, and it's a great discipline. Put it in a different bank account as a separate bucket, and then of course your savings moves into a separate bucket, and that is untouched, right? It's automated, consistent amounts keep going in there, runs on autopilot, forces discipline, Alex. I think the key point here is that you need to get discipline and compounds uninterrupted. And I think the key takeaway is, Alex, that automation removes the biggest enemy of investing, which is yourself. You cannot spend money that has already been invested.
That's a fair point. Point number 3, and this is something that we've spoken often about on the show, but it's difficult to put into practice because especially when you're starting out, you don't have access to capital, and this is the emergency fund. And they say loosely you need to put 3 months or 6 months worth of expenses, but let's face it, you said at the start, your rent can account for 30% of your income or 40% of your income. So how difficult is it to put aside 3 or 4 months or 6 months of those expenses when you don't have any money to begin with?
So, clearly, Alex, it's a great point again, and it's debatable, right? We keep having these discussions at multiple platforms. But I tell you what, India is a country where job security, health emergencies, and family obligations, Alex, can depend on a financial plan overnight. I mean, obligations can depend on a financial plan overnight. I think the emergency fund is a buffer, right? And the difference is between a crisis and a minor inconvenience. So how does one go about it? I think it's very, very simple. You need to make sure that your 3 to 6 months, ideally, bare minimum is 90 days, Alex. 180 days is comfort zone, again, good comfort zone. That is non-negotiable. I mean, that is something which you need to necessarily make sure. And it's again a matter of discipline, right? I mean, you just can't be thinking, I will plan for it. You need to, maybe initially you can't plan for it. So you start in tranches. You start with 1 month, then 2 months, 3 months. But I think that contingency plan to make sure that, you have a buffer for health emergencies, any other family obligations, job security, I think that is something which makes sure that this plan will work very well. And I'm not saying start off immediately by putting 3 months or 6 months away. Start even with 2 weeks, it doesn't matter. But the idea is to get that discipline in. And I think the second one is that, the money that you park in, I mean, since we're talking about this, Alex, the money that you park in cannot be with an objective of superior returns. Please understand. It ranges between 6 to 7.5%. You have liquid options, as we all know, which looks at, basically, very short-term debt instruments, commercial papers, treasury bills, typically 6 to 7.5%. There's arbitrage as a category. And it's very, very simple. Start with 1 month's expenses, then add to it systematically. Gradually, you will see that, you've built about 6 months of comfort, and that's where it is. So again, the key takeaway is the emergency fund, Alex, is not an investment. It is an insurance. Its job is to be there when everything else goes wrong.
Yeah, it's a seat belt. And so you can look at an ultra short-term debt fund, or you can look at a liquid fund, and you can look at an arbitrage fund. These are all options available to you. And the returns, as Nasir has pointed out, are not the primary concern here. The impact of high-cost debt is something that a lot of people overlook. And I've seen a lot of younger people, Nasir, who end up taking loans, and then to facilitate the payment of those loans, they take more loans. Personal loans are taken, and this compounds, and ultimately it becomes a debt trap. And compounding of interest cost is also a problem. So therefore, how do you avoid this?
I would say this to all your viewers, and especially to young ones, Alex, that high-cost debt is the silent wealth destroyer, in my opinion, Alex. It's exactly the reverse of compounding effect, right? We talk about SIPs, compounding benefits in the long run. This is exactly what it is in reverse. Let's take an example. Quickly, I'll tell you. You take a loan of, let's say, 100,000, 1 lakh on your credit card. and you pay only minimum dues, right? Minimum dues are usually between 2%, 3%, 5%. Now you can imagine. I mean, I can tell you this: the interest charged on a outstanding amount when you pay minimum dues in a credit card, Alex, ranges between 36 to 60% per annum, which is 3 to 5.5% monthly interest. Now, if you take a loan of 1 lakh, Alex, it becomes 5 lakhs in just 5 years. That's what I said, reverse of compounding. So you borrowed money at 1 lakh, you ended up paying 5 lakhs. That is the horror of high cost debt. So look, very, very simple. A good debt is something which is, good money used for leverage, your future receivables. A home loan, for example, gets you now with repo rates coming down at 5.25, plus minus 190 bips on, net interest margins. MCLR, what we call today, we'll end up getting a home loan at about, say, 7.25. An education loan that builds earning power is not the enemy, but high cost debts, consumption driven debt, personal loans for vacations, buy now, pay later for gadgets, credit card revolving balances, Alex. These are wealth killers. Please avoid them. If you have them, eliminate them first before you start investing a single rupee. Yeah. Key takeaway, Alex, every rupee of high cost debt paid off is a guaranteed return equal to the interest rate. No market can promise that.
No market can promise that. That's a good point. So we've already spoken about rule number 5, so not going to get into details of it. Essentially, it is avoiding lifestyle creep. Imagine if you've gotten a certain increment, say it is, for argument's sake, between 9 and 12%. That means that you're earning that much more than you did in the previous month, and we're at the end of March, and hopefully you will all get amazing increments in the month of April. Remember that you were managing with 11% less or 12% less in the month of March. You can do that in April and increment your savings. You'll thank yourself 20 years down the line. So that's rule number 5. Rule number 6 is let your money do the work for you. And it's a tough thing to do, Nasir, in a situation where your equity markets in India have not done very much over the last 1.5 to 2 years. The tendency, and there's an itch that you need to scratch, is to move things around. It's like moving lanes and thinking that you will go faster at the toll booth, but ultimately you're not.
No, I think you're right. I mean, when you look at patience, it says let money do its work, and patience is a strategy. I agree with you, Alex. Last 18 months have not been the best of returns in equity, as in last in India, specifically compared to rest of the other emerging economies in India. But look, it's very, very simple. When you look at compounding, that rewards patience. It punishes relentlessness. So stay in your lane, as you rightly said. Money is made consistently over 10 to 15 years, ideally 7 to 10 years. Most active funds, tend to perform over 5 to 7 years. So you need to remain committed. The investment strategy is one that you can stick to for 5 to 7 years without changing it each time the market sneezes. We have enough examples, Alex, where people, they have a plan for 5 years. We as their, experts, when they consult us, they have a view for 5 years, but something like this, what we're seeing currently, is in the Iran-Israel crisis, they want to, for example, redeem some of their goals-based investing. Now, that's a problem. You can't keep doing that because, today it's the Iran-Israel issue. Tomorrow it could be possibly AI in the world of computing. There's been disruption all the time. So you need to defocus, zoom out rather, not defocus, zoom out, and focus on your long-term plans and make sure that don't get into fear of missing out. I think what we are seeing of late is that, you want to get quick schemes, a new hot stock tape, a new theme fund, a new cryptocurrency. These are all new get-rich-quick themes. I think just avoid them. The internet has made sure that every one of our friends seem to be getting richer faster than you. And this FOMO is what drives most destructive investment behaviors, Alex.
Absolutely. And that effectively is what the last rule is about, which is simplify and diversify. Don't rush after the hottest new idea, because chances are by the time you've heard about it, that ship has already sailed. So stick to the tried and tested and stick to the SIPs that we've spoken about. Build a portfolio that will not keep you awake at night is the bottom line. Nasir, I think that kind of sums up these 7 golden rules. And like I said at the start, if it is not something that is a silver bullet, at least it is something that will set you in the right direction. Thanks so much for taking the time.
Thank you, Alex.
That was something that you can put into practice. It might take you a little while, and don't be too hard on yourself if you can't put all of this into practice at once. Start with something that you can fix today or tomorrow and then move from there. The second part of today's show is for looking at a new offering that a pretty well-known fund house has put out. Parag Parikh has for so long been known for one equity mutual fund scheme, and that is the Flexi Cap Fund. And quite a few of you probably invest in it. But they have, without too much fanfare, also launched a large cap fund. And so today I'd like to talk about how that has been constituted and how it differentiates itself from the Flexi Cap Fund, which, as you probably know, has had a large cap bias. We've got Varun Fatehpuria, who's the founder and chief executive officer of Daulat Wealth Management, joining us right now. Varun, thanks so much for taking the time. And it must be said that this scheme has been launched without too much fanfare, and as is normally the case with a PPFAS, people still end up talking about it. So this is me asking you, what did you make about the portfolio construction?
Right. So Alex, I think it's very important to understand, I think once we get into why PPFAS has launched a large cap fund, just take a step back and realize what sort of a behemoth the Flexi Cap Fund itself has become, right? So we just did some basic numbers. The AUM of the Flexi Cap Fund has grown from about 10,000 crores in March of 2021 to about 1.35 lakh crore as of March 2026. So that's a 13x growth that the AUM has seen over the last 5 years, right? So it's fair to say that the original intention of being a true to label Flexi Cap scheme, where the fund itself could move across market caps, just by the virtue of the size of the fund itself, it is not able to do so. And that is one of the key reasons why the fund house has launched a large cap fund to, in effect, relieve some pressure of the Flexi Cap Fund, keep this as a pure large cap passive plus strategy in an investor's portfolio, and hopefully over a period of time do something different in the Flexi Cap scheme by being true to its label. So we looked at the portfolio.
Yeah, and you looked at the portfolio. What did it tell you, Varun?
So a large cap fund and the Flexi Cap Fund, the portfolio overlap still continues to be about 37-40%. So that is in effect telling you that Flexi Cap Fund has always, over the last couple of years, run like a quasi large cap fund. Given just the size of the fund itself, it is not able to take on smaller bets. So just to put in some context, at 1.35 lakh crore of AUM, even if they want to take about 1% exposure in a small cap stock, that in effect means that they need to take about 4.5% exposure, given the market cap of the largest small cap stock is about 30,000 crores, right? And similar in a mid cap stock as well, they need to take a position north of 1.35% just to take a 1% position at the fund level. So naturally, I think over a period of time, that portfolio overlap is going to shrink and maybe come down to about 20-25%. And we'll be able to see a clear differentiation. But as things stand today, I think Flexi Cap continues to be a very large cap biased fund, and large cap fund in and by itself, due to the nature of the scheme, I think they want to keep it closer to the benchmark, which is the Nifty 100.
Okay, so the Nifty 100 is the benchmark. Now, by the way, in case you didn't know, the definition of a large cap fund is that 80%, correct Varun? 80% of the assets under management have to necessarily be in large cap, which as AMFI defines it, or the SEBI defines it in its classification, and then AMFI defines it, is the first 100 stocks by assets under management. So therefore, 80% of that needs to be from this pack. The rest can be in small cap and mid cap. So Varun, what did you learn from the allocation to these large caps? For example, what is the kind of weightage of the top 5 and top 10 stocks that they currently have? And of course, this is early days because they've just deployed, 350 odd crore rupees that they received through the NFO process.
So, Alex, they're going to follow a strategy similar to what the benchmark indices, which is the Nifty 100, follows. So what they're effectively telling us is that they're going to have a very low active share. And that means that they're not going to do active stock selection either from an inclusion or an exclusion perspective from that 100 stock list. Neither are they going to change any of the weightage vis-a-vis what the benchmark holds, right? So the benchmark itself is constructed from a free float market cap perspective. So the highest market cap company in the world Reliance Industries definitely has a higher weightage compared to, let's say, the 99th or the 100th stock in that pack.
You meant highest market capitalization in India?
Highest market in India, that's correct.
Yeah,
So
go
they're
ahead.
going
No,
to-
because you said world, and I'm thinking Nvidia.
No. So market capitalization in India. So they're going to follow a very similar strategy to that. And they're not going to have a very high active share. Where the alpha is going to come from is effectively from the smart execution strategies, which they talk about to actually exploit the inefficiencies in the market.
What are they? How does that work, Varun?
So they have highlighted about 3-4 different smart execution strategies. One of the common strategies that we all know is the single stock future or the index futures. When they often trade at a discount to the spot market or the cash market, that in effect means is that they are able to buy that stock, let's say 30 days down in the future, using the futures contract. So they are able to buy that same piece of stock at a slightly lower price, given that the futures are trading at a discount to the current or the cash market price, right? That's number one. The other strategy that they're going to follow is something called as special situations, where let's say when any of the corporate actions tend to happen, whether it is a merger or a demerger, we often see, Alex, that the stock that is going to, let's say, either get included in the index or excluded out of the index has a certain amount of price inefficiency and trades at a discount to the merger ratio. So they are also going to exploit that to generate that tiny bit of alpha. And then final is the rebalancing of the index stocks which get included in and out of the index on the rebalancing date. So just to give some context to the viewers, when a rebalancing happens on the index, right, it happens on the rebalancing date in and by itself. So there tends to be a lot of inefficiencies because there is a massive amount of buying and selling. What the fund is telling is they are not going to do that. They are going to spread that out over a period of time and hopefully again eke out some sort of an implementation benefit, which the index funds are not able to do. So these are the main 3-4 pillars that they're going to follow in generating a small amount of alpha from the benchmark, but not necessarily from stock selection.
Okay, Varun, just to close this out, we've talked about how the large cap fund is going to be managed, and we've talked about the replication of the portfolio of the flexi cap, and obviously they're meant to be operated differently. So how should one, as a prospective investor in the large cap fund, differentiate between the two?
So Alex, you have to look at both of these offerings very differently, and I think the PPFAS as a fund house itself has made it very clear that only when there is a genuine investor need in the market and they can bring a differentiated offering compared to their existing schemes is when they are going to launch a new scheme. So let's look at from a portfolio construction perspective how both of them are different. If I look at the FlexiCap fund, they run very concentrated portfolios of about 30-35 stocks, right? Compared to the large cap fund, which by definition, because it tracks the Nifty 100, it almost in essence carries the entire 100 stocks. So number of holdings obviously significantly differs between both of those schemes. Number two, FlexiCap as a fund, they take aggressive cash calls. And in fact, they have been sitting on cash closer to 18-19% over the last year and a half, because they have not been able to find attractive opportunities. In the large cap fund, they have made it very clear that since it's an index hugging strategy, they are going to remain invested in the markets at any given point in time, closer to 90-95%. Right? So that's the second differentiation. Third, the FlexiCap fund holds about 10-11% of its portfolio in international stocks, predominantly US tech stocks like Meta, Alphabet, etc. In the large cap scheme, because it is predominantly focused just on the domestic economy, it does not have any sort of a international exposure. So this is broadly in the range of how you're going to differentiate and think about the flexi cap versus the large cap category. And obviously, due to the size itself, flexi cap has sort of become a quasi large cap. But hopefully, going forward in the future, the differentiation between both of those schemes is going to become increasingly clear.
Last word, you have traditionally seen in the large cap category that fund managers have failed to beat the benchmark, and by a considerable margin, particularly post cost, right? Of course, the last couple of years may have thrown up several different outcomes. But having said that, is it possible for these guys, based on the strategy that you've seen, to beat the benchmark? And who should invest in this?
So again, I think Alex, PPFS is very clear that the incremental alpha that they're able to generate over the Nifty 100 is going to be minimal. That is not going to come from any sort of an active share or active stock selection or a weight selection. It is predominantly only going to come from the execution strategies that I just mentioned in the earlier half of the video. So for investors, think of this as a passive plus strategy in your portfolio. If you do not want to hold like a pure plain vanilla index fund, but want to, generate certain amount of alpha, given that the costs are also in line with most of the direct plans of the index fund at about 20 to 30 basis points, this squarely fits in your portfolio as a index plus strategy or a passive plus strategy in your portfolio. But again, to manage expectations, I think the incremental return that they are able to generate from the benchmark is going to be limited.
Got it. All right, Varun. Thanks so much for taking the time for speaking to me on Your Money Matters.
Thanks, Alex.
All right, that brings us to the end of this edition, but there's lots more to look forward to over the course of the day. Stay tuned to NDTV Profit.
In a month that moved markets, shifted diplomacy,
the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7, #1 on YouTube. NDTV Network, streaming India's trust, leading India's conversations.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go, grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management,
Anil Trigunai joining us today. He's a distinguished fellow at Vivekanand International Foundation, of course, former ambassador. Ambassador Trigunai, thank you so much for speaking with us. Pleasure to have you on the channel as always. You know, we also wanted to speak with you in context of the deft diplomacy we've seen from the Indian side over the last few days. Clearly, that's what's led to at least 3 to 4 of our vessels coming out through the Strait of Hormuz. Does it get trickier from here as far as India is concerned? Because we're also a nation which was engaged with Israel. We have good relations. We have good relations with the United States. And clearly, we have better than others relationship with Iran as well. How do we move ahead in what is looking like a very delicate balancing act?
Well, as you know, Tamanna, that India, at least since 2014, has followed a policy of dialogue, diplomacy, and dehyphenation. And dehyphenation means clearly that our relationship with Israel has no consequence on our relationship with Iran or Saudi Arabia or any other country. Both the relationships stand on their own. And that is precisely what has today kept us in this kind of a situation where we are able to talk to Iran, to Saudi Arabia, to Israel, and to everybody else in the region. Moreover, our strategic partnership fulcrum has really been sustained by various problems in this very highly volatile region. You have seen that Dr. Jaishankar has spoken to his counterpart, Foreign Minister Arakchi, 4 times. Prime Minister Modi has spoken to Prime Minister Netanyahu and President Pezeshkian, among other leaders. So they understand what. Plus, India, the action that we have taken. For example, one of the things that is like sending the bodies of the salt sailors who unfortunately died, or the foreign secretary going and signing the condolence book and the embassy. All those are very good signs which the Iranians appreciate. Besides, the Iranians know that India is the only country which has that kind of a heft with nearly every major power in the world, where they can go and talk frankly. We can speak to the Russians, the Chinese, the Americans, everybody else. So therefore, you must have seen a lot of commentary coming out from the West that India is in a good position to talk to them. As far as the geoeconomics of the whole thing is concerned, or security is concerned, energy security is the most important thing for us. And more important than that is the safety and security of our 10 million people in the region who are nearly remitting $70 billion, which is about 10% of our foreign exchange reserves. So the oil prices or the restriction in the oil or the gas happening would have a very serious repercussion on our domestic situation as well and our growth trajectory. So precisely because of that, India is very actively involved and is continuing to work on it.
No, so we are, but coming back to the point, this is going to get trickier going ahead, isn't it? Because clearly now both sides are digging their heels in. Let's talk about passage through the Strait of Hormuz. 2 things are happening right now. The United States is calling on everyone saying, please come and form a coalition with us and ensure safe passage through the Strait of Hormuz. Iran is having its own conversations with nations, including India. At some point, will we face a situation where we need to pick a side?
No, I don't think we'll pick any side. One thing I want to tell you is that the moment we pick a side, we will be in greater trouble. So that will not happen in the first place. Plus, civilizations don't change their stance overnight, and I don't think so. India is a resident power in the Indian Ocean. And you know that our Navy is there, and that is, we have been one of the first responders in the region. And even today, this is precisely what we are doing. Our Navy is there escorting ships from there. It's good that we have, on the issue of passage of Indian ships, which are carrying various oil and gas, has been successful. So that is a good thing for us in that. But the effort today India is trying to make is that how to have the cessation of hostilities. That is the most important thing. And I think we are talking to all the members and also directly with these people that it is not going to serve anybody's purpose. But I also feel that President Trump is also looking for an off-ramp now. And we all are looking at it. I mean, it is going to be disastrous not only for us, but it is disastrous for the region as well as for the United States and the rest of the world. So I think that everybody wants this war to end as soon as possible, despite certain radical ideas that all sides possess. So I think that India's real option today is to try to work for cessation of hostilities and try to find some kind of an off-ramp for that.
Mr. Srikanayat, how do you think that will emerge? Because at this juncture, the kind of rhetoric that has come through from both sides has been pretty alarming. Because you have a situation where both Israel as well as the US have their own proclivities or reasons for doing what they are doing, and Iran is, from their perspective, an injured party. There's a significant amount of damage that has already taken place. They're even calling for reparations. So what will that off-ramp look like from your perspective as somebody who understands how these dialogues take place?
You see, one thing I would like to tell you is President Trump is a very unconventional person, is a very difficult man. And one always thought that he will threaten, but he might not go to the war. He has been forced into this war, and there is no doubt about it. At the same time, now he has begun to realize, I mean, if you see the kind of incoherent statements coming from the US State Department and from the White House, that it is very clear that they're not very happy about the way things are going. And they never thought that Iran will not fold up immediately after their strikes like what happened in June. But June was a very different kind of thing. Since June last year to now, the Iranians are well embedded. And killing one leader or a couple of people does not affect the country. So what they're doing now, they also understood their limitations, to what extent they can go. The rest of the world is not going to escalate beyond a certain point at this stage. And Americans are not ready to go with the boots on ground. That's going to be more difficult for them. So I think that in this kind of a situation, there are backroom talks. So America can declare they have killed taken out Khamenei. They can always say that, okay, we have won the war. We are victorious, which he's very used to saying very often. So we might see that very much happening soon. I mean, I don't think that it's going to, in my view, not more than 1 or 2 weeks. And even the Iranians have put up some conditions. And since President Trump said they are not good enough.
Yeah.
So what is good enough for him is basically declaring his victory and saying that, okay, now we have achieved our objective. So it can happen.
Okay, just a couple of points. I want to understand, you made the statement that Trump was forced into the war. So I'm just trying to understand why that is. And the second point is that it's all well and good for Trump to announce that the war is over and that America has won. But there is a certain repercussion of that, including the fact that there are mines being operated in the Strait of Hormuz, and the Iranians are very clearly stating that no US or Israeli vessels or any of their allies will be allowed to pass. So how does that emerge then? It does not end till both sides agree that it is ended.
You see, the war is not going to end in the classical sense of the term. Like, okay, now we are all good friends and things like working like that. That'll take a long time to happen because there is a tremendous trust deficit, and it's not from now. It has been happening from 1979 onwards for 47 years from all sides. But at the same time, they also understand their limitations. Each one has its limitation. Israel is not a very big country. It might be technologically, militarily superior country, but it also has problems around its own places. America also is not in a very good shape today. I mean, at the end of the day, you need arms, ammunition to be able to survive and to be able to fight long wars. We are not living in an era of long wars. And every time America knows that in all major wars, they've been defeated. None of the superpowers has won a single war today in the 21st century and 20th century. That's history. You look at China, lost in Vietnam, United States lost in Vietnam, United States lost in Afghanistan, British lost in Afghanistan, Soviet Union lost in Afghanistan, got disintegrated. Russia has not been able to win this war for 4 years. Israel has not been able to win Gaza in the last so many 2.5 years. So they all know their limitations. It is not that easy to win a war today. You may destroy, but destruction does not lead to victory.
That's such an important point. The destruction may not lead to victory, though, I mean, the US may still declare a victory on its own terms. Ambassador Srikanayat, this is Neeraj here. Good morning. I wonder, how do you foresee India's role, if any, in being a mediator? There's a lot of talk around how India could play that role simply because of the relationships that PM Modi carries with all parties in this conflict, and the allies. Could that happen? And what could be the longer term relationship implication of India-Israel, India-Iran, and India-US ties because of that?
You see, as far as India's relationship with all these individually, with these countries are concerned, I think they are on a pretty sound footing bilaterally. Now, the question comes whether India will become a mediator. I don't think we are looking to be a mediator. India can act as a very good, trusted partner. And I can tell you from personal experience that most of these countries don't mind India playing that role. It's only that we have not, in the past, for whatever reasons, been very proactive. And many of my colleagues in the establishment may not agree with me, but I think we have to have an agile diplomacy. Frankly, this time we are showing that. Prime Minister Modi has spoken to both. He has spoken to Prime Minister of Netanyahu as well as President Pezeshkian. Dr. Jaishankar, as I said, has already spoken to 4 times. PM Modi has spoken to all the leaders in the Gulf also. So these talks are not only for looking after the interests of our people there or our energy security, but also to end the war, because this war is of existential character for India as well going forward. So that's precisely the reason that India is pretty active now. Secondly, India is also the BRICS chair this year. And as a BRICS chair, all the major powers in the South are involved in that. Iran is expecting. India is working and talking to all the other countries exactly what kind of a statement can come out. So you have heard the Iranian ambassador here. You have heard the foreign minister. You're listening to all kinds of statements. But those people have far deep-seated problems among themselves.
Sure.
And that is something that will not be bridged by this. Idea is to stop the war first and talk later.
Okay. The other question is, I heard you say that India has existential implications from this conflict. Is it because of oil prices or some other reason?
There are 4 reasons, as I call them as 4 E's. Not only Iran war, but this was the war which can destabilize the whole region. It has always been feared by everybody who is observing the region. And that's simply the case that any war between Iran and Israel, with the help of Americans, is going to be devastating for the region. Means what? Number one is energy supply, as you know, 60-70%. It's already more than $100 is playing out. So it'll have an impact, direct impact. Supplies will be disrupted. That means sea lanes of communication. 80-85% of our trade is coming through these sea lanes. And we have 10 million people, in Indians there, whose safety security is of paramount importance for us. So that is something extremely important. Then you have your own population in India to be taken care of. So I think that an economic engagement, we have $80-90 billion invested there. In UAE alone, we have 14,000 Indian companies which are there. So I think what more is existential than this? I often say that West Asia is more important to us than even our neighborhood.
Very well put. Ambassador Trigunai, this has been an absolute pleasure. Thank you so much for joining in and giving us that kind of perspective, which comes, I would say, from decades of working inside the foreign policy establishment as well. Ashwini Agarwal, founder of Demeter Advisors, joining in. Mr. Agarwal, great to have you on the show. Thank you so much for coming in. 3 weeks in, and I would say we still don't have that fatigue factor. Because if I compare with what happened with Ukraine and Russia, by the 3rd week, maybe because of the distance as well, markets were going about their business. We clearly are not in a position to do so this time.
Middle East is far more important to us than the Ukraine-Russia crisis was. In the Ukraine-Russia crisis, we had 2 feedback mechanisms from an economic standpoint. One was fertilizer availability, and second was potential shock to wheat prices. Wheat is not a huge traded commodity in the Indian context. So, only the fertilizer was a real worry. In the case of the Middle East, as your previous guest, the ambassador, was saying, it has far deeper linkages for India. We have energy, we have remittances, we have UAE as, or rather the entire Middle East as a big destination for Indian exports. and then you have the investment flows. So you have very large economic impact from a destabilization of the Middle East. So I mean, if the war were to continue for much longer, then I don't think all the negatives are priced in yet. I think if you ask me, the market is reflecting the hope, as the previous guest was saying, that the hostilities will probably cease in the next week or two, followed by negotiations and conversations, and where that goes, we'll have to see. An alternative view might be that even if the hostilities don't cease entirely, there will be a safe passage carved out for friendly countries, hopefully including India. So that's what the market is pricing in. So I don't think we can compare the two with the context of economic impact on India arising from this disturbance.
Ashwini, you were not the most constructive investor before the conflict started. So in some sense, what the conflict has done to the markets ties in very well with your basic assumption that markets could be headed lower. It could have been a bonus for you, but be that as it may, it has been that way. When do you believe you would turn constructive? I mean, the simple answer would be the end of the conflict, but because that's difficult to preempt, does the valuation level at a certain point of time lead to that? And are valuations themselves easy to picture in simply because we do not know the extent of the earnings cuts that will follow?
Great question, Niraj. I've been struggling with this myself. So, whatever cash I had, and I did have some cash in the portfolio because of the view that I held that markets were expensive. So, I've been kind of putting in a little bit every week. So literally broken it up into pieces and hope to put in a small piece to work every week. Obviously not looking smart with what I've done over the last couple of weeks, but I'll continue with that. And the reason is exactly what you said. I can't predict when the war will end. I can't predict how long this will take, and the economic impact could be much deeper than what I think. Having said this, the gradual approach to putting some cash to work hopefully will give me a sort of a systematic investment plan into this crisis. And 1 to 2 years from now, or maybe 2 to 3 years from now, I'll probably be doing quite well on these investments. I do recognize that this is not a fail-safe investment strategy, and one could see much lower levels before one goes higher. But crises are all about that. You have to hold your breath and invest and look at the medium term. And that's what happened in COVID. That's what happened in the 2008 crisis. That's what happened in the pigs crisis and the 2013 browbeating that India took. In all those occasions, it was very scary, and you went through 6-9 months of a very tough period. But if you invested or put cash to work during those times, you came out doing quite well with a 2 to 3 year perspective. So that's what I'm trying to do.
So when you look at that opportunity cost, Ashwini, and I think the sense is that can this kind of a protracted stalemate and squeeze of the Strait of Hormuz continue in an unending fashion? Clearly not. So when you look at that kind of deployment from a 3 to 5 year horizon, what is the direction that you seek? Do you go in for tried and tested, blue chips? Where do you look?
So, Tamanna, I follow a very bottom-up investment strategy where individual stocks is what catches my attention. So they are a mix of, a few large companies and several mid-cap and small companies. If I find the valuations attractive enough, I buy them. That's what I've always done. And I'm just adding to what I own. I'm not really adding to many new names, maybe a couple here or there. But, as things look interesting, I'm putting cash to work. So let me give you an example. Let's say I identified something which had the potential to double over a 3 year period, which is an IRR of 25%. If that stock is down 30%, that IRR has moved to early 30s or maybe mid 30s. So that's attractive. So, I'll buy it. Yes, it's possible that the opportunity cost is painful in the sense that, I may buy something at 100 and see it go down to 60. But that's always been the case, right? I mean, that one could have argued in 2008, one could have argued in the middle of 2013, one could have argued in the middle of, the COVID crisis. And that's what crisis investing is all about. You have to hold your breath and have enough liquidity for yourself to survive a 3-year period or a 4-year period. I mean, it's not the stock prices that kill you, it's the mental makeup that kills you, a lack of liquidity that kills you. So long as you have mental makeup to bear the pain and you have liquidity to tide over the period, you're fine.
Got it. Okay. Actually, the other question therefore would be that would you go for safety of the large caps which are blue chips and also have been beaten down, or would you, but relatively lesser than the small caps, but there are a clutch of quality small caps out there which have been beaten down a lot more and whose businesses would be as resilient as maybe some of the large caps might be too once this conflict is over? I mean, the bottom line is the conflict needs to get over for anything to move up, right? So what do you go in for?
So, Neeraj, as I explained, I'm very bottom-up in my approach. If you look at my portfolio construct, I mean, I have a very small exposure to large caps. A lot of it is mid-caps and small caps. And that's where I'm continuing to deploy my money. The small caps have been beaten down a lot over the last 17, 18 months. I mean, several stocks are down 50, 60, 70% from their previous peaks. I'll grant you that in September 2024, valuations were stupidly expensive for several of them, but now they appear to be very attractively priced. So again, I'm making the assumption, and it's a brave assumption, I must say, that the war will end at some point in time. And by some point, it could be anywhere from 10 days to 6 months. And 3 years out, these stocks will make money. Now, for some reason, if this conflict extends to 4 years, just like the Ukraine-Russia crisis has, and Strait of Hormuz remains closed for that period, then all bets are off. Then I think I'm making a huge mistake. And that's the price I have to be willing to bear in trying to buy the companies that I'm buying. Now, in the worst case scenario, you would be right that the large caps would give me less pain compared to the small caps. But, for the moment, that's not the assumption I'm making.
Ashwini, thank you so much for speaking with us today and joining in. A very focused long-term view is what will get you through. When everything around you is moving so quickly, maybe stick to the tried and tested plan. That's the best idea. Thank you so much for speaking with us today. Akash Ohri, Managing Director and Chief Business Officer, DLF Home Developers, joining us. Sectoral, thank you so much for speaking with us and joining in. So this was for April to December when it was a very different world. I'm wondering what's been happening in the last 2 or 3 weeks, especially from clientele in Gulf countries. Do you think this trend that you saw from April to December of NRIs coming in and buying will reverse, or will you see even more of a flow?
Well, thank you for having me. Well, I see this, the geopolitical issues around the world have been happening. And the NRI business of DLF has been growing year on year. I feel that what's happening today, the NRIs today have chosen to invest in good properties back home, which are commensurate to what their lifestyles are wherever they are in the world. And that has been a trend that I'm seeing for over the last 5 years at least. DLF itself, I've seen year-on-year growth of about between 14 to almost about 17, 18% on the NRI sales year-on-year.
Okay. Mr. Ohri, this is Alex here. I just want to double down on that question that Tamanna asked, which is, have you seen increased inquiries just particularly over the last couple of weeks?
What's happened is I was right there when the war broke out. In fact, I was in Dubai. And I can tell you the day it happened, on the 27th of February, is when we were there for meetings. And I still recall very, very clearly the last meeting we had. And the customer said that irrespective of what happens, I'm going to be investing in India. So I see it's too early to say what's happening there right now, but I am seeing inquiries, I am seeing calls, and I'm seeing business happen from the GCC.
Okay, and if you were to quantify that, you're saying that, so for example, if a third of your business over the course of the first 9 months of the year has come from non-resident Indians, do you anticipate in the fourth quarter that that number could be higher?
I see that's at this point in time, it's too early to say, but I see this happening for sure. I mean, obviously, what is happening there is of concern to everybody. But I see a lot of investments coming in from the GCC back home in India, especially in the real estate this quarter and quarter after.
Akash, Neeraj here. In fact, my question was going to be slightly longer term. Do you reckon that this will be a trend independent of how and when the conflict eases off? It's a large NRI population in that region, and without the war constraints, even in general, with the Indian infrastructure showing signs of pickup, do you reckon that this will be a longer term trend wherein the sales month on month, year on year, quarter on quarter will show an uptrend for the foreseeable future?
Yes, Neeraj, I see that happening. I mentioned that I've seen that happening over the past 3 years as well. And I see this uptrend with the outreach that the government is doing with the Indian diaspora. I definitely see a lot of a movement. I see the Indian diaspora investing heavily in the real estate sector, also because of good regulation and strong regulation. I feel that that has instilled a lot of trust in the Indian system. So I see that happening for sure.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
In a month that moved markets, shifted diplomacy,
the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7. #1 on YouTube. NDTV Network, streaming India's trust, leading India's conversations.
First India tour in your city. Rug on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go, grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here
Hello and welcome to The Big Question. I'm Nisha Poddar. Now, Strait of Hormuz has become the main bone of contention in the Middle East tensions. And while this strategic global checkpoint is extremely vital for the world's energy supply, with Iran influencing the Strait of Hormuz, the supply of crude has spiked, the prices putting under pressure global economics, including India. Now, the US President Donald Trump has been trying to muster support of his allies and the beneficiaries of Strait of Hormuz to control this particular strait. But his plans have met with resistance from most countries. Where is this matter, and is the Strait of Hormuz really leading to a larger question of changing world alliances? What's the question that we are asking today, that we are raising tonight? Can Trump rally global support to secure Strait of Hormuz? So that is the question that we'll be deliberating on with several of our experts today from different angles on how it impacts the world order and it impacts the economy of India, and overall, what does it mean for the ongoing Middle Eastern tensions? So that's the big question that we are asking. The resistance to Trump's call for the attack on Strait of Hormuz and taking that control back from Iran, and how is this really panning out? So let's then deliberate that very big question now with our experts who are joining in today. And we have Professor Madhav Nalapat, who is the Vice Chairman of Manipal Advanced Research Group, joining us. And also we have with us Commander G.J. Singh, who's a Senior Defense Expert, Christopher Hines, Head of Oil Energy Aspects. He's joining us from London, from the UK. Gentlemen, so good to have you on NDTV Profit. Now, my first question to you, Professor Madhav, is that with this big question coming up, with Strait of Hormuz also putting that economic burden on several of the countries, US is clearly trying to build alliances and make it a much bigger war than only limited to Israel and US really attacking Iran. How do you see this particular aspect and also the resistance that is faced from most world leaders?
I'd like to point out, I don't believe many countries, in fact, any country would be interested in joining this particular war for a simple reason, quite honestly, that this war is basically, in case, for example, the European countries join Trump, then they're all within range of Iranian missiles. And already now countries like Japan, Vietnam, South Korea are feeling nervous. A lot of US naval assets have shifted from East Asia to the Middle East. And as a consequence, the country that is most happy is China, where frankly, what's happening is that they're watching with great interest, and they want this problem to continue for as long as possible, for a simple reason that this can drag out for quite some time. So I think the Chinese have got a very strong predilection to dragging on this war, and despite the fact that they're also dependent on Strait of Hormuz, but the reality, they've also got a pipeline from Russia, so that's a lifeline for them. So Japan will be very worried at the shift of US naval assets, but naval assets are not like aircraft. It takes long time to move back, and in the meantime, Taiwan is exposed. Japan is exposed, South Korea is exposed, and the Chinese dominance in armaments will tell. There'll be a very dominant quantification of armaments in case the US is excluded. So they would like this war to continue for as long as possible. As far as the wider world is concerned, I personally feel it's going to escalate now, and the reality is Israel and Trump have got roughly about 1 week to 10 days to wind up and wrap up this war, because if they do not do that at that time, the patience of the people there, the Iranian
It's an expensive war, Professor Madhav, that we all understand. And US is trying to join forces with other countries, it looks like. And well, all the other countries are also calling his bluff in terms of joining this war along with the US and Israel as it's coming out. But Christopher Hines, first, before we start talking more about the war situation and the various other geopolitical aspects, but oil is our prime aspect to be watched out for. India needs the crude LPG tankers to really pass from the Strait of Hormuz for our critical energy reserves, and our interests are paramount for our government as well. How are you seeing Besant's recent comments coming out of 140 million Iranian barrels are out on the water now? These are the statements and the data that he has given just recently. And he's saying that probably oil will be much lower, around $80 in some time, in a couple of months, he says. And deficit is about of 10 to 14 million barrels a day from Gulf. This particular deficit, how do you see impacting if it carries on for longer?
Yeah, well, look, I mean, we're looking at around a 10 million barrel per day drop in production. So that's actually, we're losing these barrels completely. It's not just the blockage, you know, the blockage is also causing part of this issue here, but these are just being taken away from the market. So that's a massive problem for everybody, particularly Asia, because I think all your Asian countries are very dependent on Middle East flows. India, of course, is even closer, I think, in respect to that. It's kind of a 2-week, 3-week shipping distance. So that makes it even more exposed. I struggle to find, unless we get to a situation where the straits are reopened, I struggle to find a way where oil prices do not continue to increase. And if you look at kind of your global benchmarks, the Dubai price at the moment, today it was over $150 a barrel, right? That is reflecting the fundamental tightness we've got, where we're losing all this supply. But, unlike perhaps COVID, where we lost demand as well, you're not seeing that demand loss because people are still trying to get on with their lives and carry on and try and, recover economies. And that is the issue that we're facing. I think the tightness in the East is going to come through to benchmarks in the West, which at the moment are only just being kind of softened by the SPR releases, the strategic petroleum releases that the IEA has recently announced.
Right, Christopher. So this is a grave situation and, of course, many moving parts. But, of course, Strait of Hormuz is a critical and the most vital aspect of it all. Dinkar P. Srivastav, who's a former diplomat to Iran, also joins in. Dinkar, help us understand the latest that is really taking place. S. Jaishankar has just made comments overseas that he is in talks with Iranian officials, and he said that there is no blanket guarantee that all Indian ships will be passed, but because of the talks continuing, there has been some headway. We are getting 2 of our tankers here on our shores. One has already touched Mundra. How do you see this diplomatic situation when it comes to India with Iran? Dinkar Srivastav? All right, we'll get back to Dinkar once his line is patched again. But GJ Singh, you're a senior defense expert. Looking at the overall situation, how easily achievable is the target of taking over the control of Strait of Hormuz, which the US president tries to do from Iran, considering it's at such a critical juncture of this particular warfare and that Iran has been very retaliatory?
Yes, in my opinion, I think it will happen very soon. That the United States might take control of the Strait of Hormuz. War is still on. It has not come to an end. It is in its midway. And as I see from here, that the Americans and the Israelis have destroyed the leadership, the military targets, their all energy facilities, their connectivity, their war machinery, as far as the mainland is concerned. America and Israeli forces enjoy the complete aerial dominance over Iran. And their air force, their military, their navy is almost completely decimated. And what I see now is that the focus suddenly, not suddenly, I think it is planned before, has gone on to the Kurg Island. Now, it is the Kurg Island, which I have visited quite a few number of times in my naval career. This particular island is about 30 kilometers away from the mainland because that is where the bigger tankers can come and take the oil. Because otherwise, along the coastline of America, of Iran, there are shallow waters. The big ships cannot go. And in the last 24 hours, the forces have focused on to the decimation of all the military targets on Kurg Island. They have focused now their missile storage facilities, their military targets. They have been, hit with the very precision ammunition, and probably they will be completely destroyed in another 24 to 48 hours. Now, but at the same time, what I see is that they are not touching at all, they're not hitting at all the oil export facilities of the Kurg Island from where they export oil. Probably they will capture them alive because the USS Tripoli, along with the expeditionary unit, which they call is 31st Stealth 25 Marine Expeditionary Unit with 2,500 Marines, and with F-35B Jet Lightning aircrafts. 35 is a very powerful, world-renowned aircraft. And then with helicopters and other war machinery, assault ships, San Antonio, and there are two ships, if I get their name right, San Diego and New Orleans. They are also coming along. This is a group of ships which is heading towards the Persian Gulf.
Right.
So the objective now is to capture the Kurg Island so that the economy of Iran is completely destroyed. 90% of oil of Iran comes from Kurg Island.
All right. So you are saying that they are trying to now attack where their resources, okay. All right. So that's a great point. And of course, wishful thinking may be that 24 to 48 hours that this particular issue can be resolved. But we have to see a lot when it comes to Indian reserves and Indian, tankers really coming in for our own energy security. The latest development is that the 3 Indian flag tankers, Shivalik, Nanda Devi, as well as Jug Ladki, they passed through Strait of Hormuz, and Jug Ladki is carrying 80,000 MT of crude. Shivalik as well as Nanda Devi carrying around 92,700 metric tons of LPG, and Shivalik docks at Mundra port just a few hours back, Nanda Devi to reach Kandla port. So this is the latest really coming in. Let me take it to DP Srivastava. Dinkar, it's this statement coming in from S. Jaishankar that the talks have opened with the Iranian officials. There is no blanket guarantee for Indian carriers to really pass through, but some headway has been achieved because of these talks. How can diplomatic channels really preserve the interests of India in this case?
Let me, before I answer this question, there's a larger issue which was being discussed earlier. I'm sorry, there was some technical hitch. I served as an Indian ambassador to Iran for 4 years during the last period of sanctions. Now, during the current phase, despite the complete aerial and naval domination by the US, which is not doubted, it has failed to control Hormuz Strait. And this is an expression of asymmetric warfare where Iran has an advantage. President Trump had said a few days ago that we are winning, we have won. If US is winning, then why, call for help? And if the most powerful navy in the world does not want to go inside the Persian Gulf, how can it expect others to do its job for it? Because the natural question will be, China will ask that we didn't start the war. Why should we go and clean up the mess you have created? Now, it's a very grim situation because closure of Hormuz Strait has resulted in loss of 20% of world crude supply and 20% of the LNG. Now, even if India secures, and I hope that whatever relief we have secured in terms of safe passage continues, both oil and LNG are global commodities. So if there's a problem at global level, it's going to touch, India is not going to remain unaffected because the prices will increase, and they have increased. And the Indian crude oil basket has touched $127 per barrel, which is much higher than the Brent, which is around 103. And the problem with LNG is more serious because in case of LNG, we don't have storage. Rich countries like US and Europe, they have gas storage. They have developed gas storage because they use gas much more. Now, if this situation continues, I think the only solution will be to bring this war to an end. And you cannot expect one side to open up the Hormuz, the only card it has, while the other side keeps bombing it. So bringing the war to an end, and this is the quickest way of opening the Hormuz, is to stop the bombing and resume negotiations.
That's right. That's the most sanest explanation and solutions that you can give, DP Srivastav. But of course, it's for the US and Israel to really take forward these kind of solutions. But I want to ask Christopher Hines on some of the aspects that were mentioned by DP Srivastav. Christopher, this passage through Strait of Hormuz by international law has to be given for global trade. It is only in the tensions that has arisen in the Middle East that Iran is using its influence. Is there talk around that? And also, how do you see the impact on crude and gas prices as of immediately because of the ongoing tensions?
Look, I think everyone's kind of starting to look for diplomatic ways out of this, because you can see in terms of the firepower that the US military has, then that's overwhelming, but it's clearly not working at the moment, which is why I think a lot of the other countries around the world aren't really looking to potentially join with military equipment here. What we need is, as was just previously said, is diplomatic solutions to get these flows restarted and moving again, because if we don't, the longer that we have these outages, then the higher prices go, because we're losing more and more supply. Just from Qatar and the UAE, that's about 20% of global LNG. India's already seeing the challenges with LPG shortages. Crude oil, 10 million barrels a day. If we continue like this to the end of the month, then the entire release of the SPR is going to do nothing because of the outages that we have. So we need to reopen the straits in order to minimize any kind of impact on the global economy, because if we don't, the longer it stays, prices go up, the more pain that we see, and we have to kind of see destruction in demand from higher prices, because there's no other way around this. And that's the main threat, I think, when we get to another kind of 10 days, 1 week to 2 weeks of outages here.
All right. So it's continuing as an uncertainty right now for global trade. But Professor Madhav, when we look at the overall situation, how do you read into the present problem that has occurred for the US right now, where several countries are really resisting joining this particular war. Do you think that there is a larger issue now of global world powers and alliances really shifting because of this contention that is raised because of Strait of Hormuz?
Look, I'd like to say the Iranians are basically, the Iranian regime is indulging in hybrid warfare. They feel the pain threshold of the United States is much lower than the pain threshold in Iran. And as a consequence, what they want to do is to spike prices. Already prices at the pump have spiked. Inflation in the US has spiked. And frankly, that's happening in Israel as well. So there's a lot of popular upset as a consequence of that. And that's what the Iranians are banking on. At the same time, you have Trump and Netanyahu. They are facing elections. Trump is facing in midterms. Netanyahu will soon be facing an election. So there is absolutely no way they can walk away from this conflict without claiming a victory. And a diplomatic solution is no victory. It leaves the clerical regime in place. If after all this you cannot get rid of the clerical regime, what kind of superpower are you? What kind of a regional superpower are you, as Israel has been described? So the reality is, in my view, you're going to see a massive escalation. And yes, I agree, within a week to 10 days, this has got to be resolved. But in my view, it's going to be resolved only one way, not diplomatically, but militarily. I'm talking about the US and Israel. As far as India is concerned, well, obviously we are dealing in diplomacy. That's a different matter. But expect this war to spike, expect prices to spike. It's going to be a very rough ride for the next 1 week or 10 days. At the end of that, if the clerical regime falls, then the objective has been achieved. But for Trump, he is running out of time. And the reality is the American public is getting very restive. And as a consequence, he is finding life difficult politically. His own representatives in the House of Representatives, Republican, his own senators are getting angry at the rise in the cost of the.
That's right. It's almost $1 billion that the US is spending on this war on a single day. DP Srivastava, final word to you on how do you see this whole situation really panning out going forward? Because Professor Madhav says that there is no solution in sight when it comes to diplomatic channels. It is a show of strength and power also in this particular geopolitical tension and the way it started without any trigger. How do you see this really panning out, and therefore India's stance, and how should India really project itself to safeguard its interests?
Well, what Professor Nalpat said, that the overthrow of the clerical regime is the only way out. I think that is what started the war. It's a chimera, and even the US and even the Israel are no longer talking of regime change. It's not possible. To talk about it is simply going to prolong the pain of the international community, including the United States, where the voters are questioning why we are in a war of this kind. The only solution is a negotiated solution, immediate halt to bombing, opening of the Hormuz Strait, return to the negotiating table where the negotiations were left off in Geneva 2 days before the war. This is not going to be easy. Let me finish. Just 1 minute. There's now a trust deficit because Iran has been attacked twice in the midst of negotiations. So maybe this will have to be in a multilateral framework, but there's a precedent, P5+1 talks. Though, the results could be strengthened, whichever way in terms of verification or the length of the agreement and so on. But it has to be a negotiated settlement. Otherwise, this conflict will continue with disastrous consequences, not only for the region, but for the entire international community.
Very, very important points raised there by you, DP Srivastava. But DJ Singh also wanted to mention, from the defense perspective, what more can you say? While talks and diplomacy could be the only way, and as I see it, that the global resistance is also putting pressure on the US.
There cannot be any diplomatic solution. There cannot be any peaceful negotiated settlement, because for the last 47 years, ever since the Ayatollahs came there, they have been threatening Israel to wipe off the name of Israel from the map of the world. They have been calling America a bigger Satan, Israel the smaller Satan. They have been saying that death to America, death to Israel. For the 47 years, they have been threatening. 37 years, this Ali Khomeini had been talking, openly stated officials stand of the government of Iran. How can you talk to these people? They have raised what you call axis of resistance, Houthis, who have been attacking innocent shipping in the Red Sea. And they are doing the same thing here in the Strait of Hormuz. The innocent ships which are taking passage through that. And let me tell you, it has not been blocked as yet. It is navigable. Only thing is that the insurance companies, which are based mostly in London, they have withdrawn the insurance cover from the tankers. Therefore, no shipping company wants to go.
It's a huge economic loss. Force majeure has been kicked in also. But we'll have to see how this matter really develops. Probably a resistance. Right. It's a war zone, and I understand your sentiment. Yes.
The war is still on. As I said in the beginning, the war is still on.
Yes.
It has not come to any logical conclusion.
Yes.
I am waiting. I am watching that this Tripoli, USS Tripoli assault ships which are coming here, they will probably do the landing on and you will see them passing through the Strait of Hormuz. Let me see how the Iranians, they attack their ships. They will totally be destroyed, whatever little missile power they have got.
So the defense prowess still has to be seen in the second phase of this geopolitical tension. That's the word coming in from the defense expert. But thank you so much, gentlemen. Dinkar Srivastava, Professor Madhav, as well as DJ Singh, Christopher Hines, for joining in with your expert take on this big development. But the big question that we are still asking is that, will President Trump of the United States of America be able to rally support of the beneficiaries of Strait of Hormuz to really have a collected attack to really remove the influence of Iran from this important global checkpoint for energy? Or will the resistance of several global leaders that has been seen will really put pressure on the US and Israel to come to some solution on this huge Middle Eastern tension? That's the big question we are asking. Lots to be seen, but for now, it's an end on the big question for today. Keep it with NDTV Profit. Thank you so much.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
In a month that moved markets, shifted diplomacy,
the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7. Number 1 on YouTube. NDTV Network, streaming India's trust. Leading India's conversations.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go, grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV.
Hello, good afternoon viewers. You're watching Market Express and I'm Himakshi Bahugna. Let's get straight into the show and see how the markets have fared today first. So markets staged a sharp late afternoon comeback today. Both the benchmark indices bounced back into the green with the Nifty reclaiming the 23,300 mark. The Sensex also recovered smartly, closing more than 700 points higher. But the broader markets told a different story. Both mid and small cap stocks continued to remain under pressure. Now let's look at the sector. So the sectoral picture was mixed at close, with realty, oil and gas and also pharma being the top sectoral laggards. Auto, financial services remain resilient, with the Nifty Bank also clawing back to end in the green despite some select names dragging. And viewers, the Israeli military says that it has destroyed a plane at Tehran's Mehrabad airport overnight that was used by Iran's late Supreme Leader Ali Khamenei. And according to Israel, the aircraft was used by senior Iranian political and military officials for domestic and international travel and also coordination with the allies. And Mehrabad is Tehran's oldest airport and also a key dual-use facility, serving the civilian flights and also housing Air Force assets. In fact, escalating tensions in the Middle East have sharply disrupted the global flight operations as well, forcing the airlines to reschedule services and also operate unscheduled routes. Dubai International Airport has temporarily suspended all the flights after a drone-related incident near the airport, citing passenger and staff safety. So Emirates has urged the travelers not to head to the airport, confirming all the inbound and outbound flights were halted. At least one Emirates flight from Thiruvananthapuram to Dubai was forced to return back and also mid-air and return to the origin. So authorities are saying that the operations were paused as a precaution amid rising regional security concerns linked to the US-Israel-Iran conflict. In fact, Trump has also urged the allies to provide assistance to ensure security around the Strait of Hormuz, which is a key global oil choke point amid rising Middle East tensions, and countries have responded cautiously. The UK has said that it is discussing options to keep the Strait open but remains reluctant to put commercial carriers at risk. China has called for stable energy flows while stopping short of committing naval support. And South Korea has said that it is reviewing Trump's request with the US, while Japan has ruled out maritime security operations. France has said that any escort mission depends on de-escalation, and also Germany has clearly ruled out becoming part of the conflict. And Saudi Arabia has begun offering oil buyers the option to reroute the shipments via the Red Sea as the crisis around the Strait of Hormuz disrupt the global energy flows. Now, the Kingdom state-run producer has alerted the customers that crude normally exported through the Persian Gulf can now be redirected westward, bypassing the conflict zone. So this comes as fighting involving the US, Israel and Iran has pushed the tensions, in Hormuz to critical levels, which is a choke point that handles nearly a fifth of the world's oil. So with missile activity and also shipping disruptions escalating, global buyers have been seeking alternative routes to ensure uninterrupted supplies. And External Affairs Minister S. Jaishankar has said that two Indian flagged LPG tankers were able to pass safely through the Strait of Hormuz due to India's sustained diplomatic engagement with Iran. And he's also noted that New Delhi has been in continuous touch with Tehran, and also that these conversations have yielded some results, enabling the transit of the tankers Shivalik and Nanda Devi. However, Jaishankar has made it clear that India has not reached any blanket agreement with Iran, and that each vessel's movement is being handled on a case-by-case basis. So he's emphasized that India has offered no concessions in return, and also that discussions remain sensitive and also ongoing. And a drone attack has triggered a major fire at Fujairah, which is the UAE's key oil trading and bunkering hub, marking the second such incident in 3 days. Now, authorities have confirmed that there were no injuries, and civil defense teams are working to contain the blaze. Oil loading operations at the hub have been temporarily suspended, and according to the sources, the attack has highlighted growing vulnerabilities at the UAE's only export route that bypasses the Strait of Hormuz. And following the incident, crude prices have surged, rising above $106 per barrel on heightened supply disruption fears. And oil prices have extended gains in a choppy session, soaring above $106 for a barrel. And this is after Iran said that crude flows continue, from its main export hub. So sentiment remains fragile as Donald Trump has stepped up pressure on the nations to help reopen the Strait of Hormuz. And crude is now up over 40% in the past 2 weeks. And this is driven by escalating supply risk. Now, the bombing of, Karg Island has also widened concerns over the conflict scope, even as the IEA says that oil from record stockpile releases will be made available in Asia to ease the supply pressures. And the government has called off the disinvestment of IDBI bank viewers after bids have failed to meet the expectations. Now, the stake sale has been put on hold as only 2 offers were received, both below the reserve price. Bids from Fairfax and also Emirates did not clear the valuation threshold, stalling the strategic sale process. Next up, we have CSB Bank that trades higher today as the proposed merger with IDBI Bank is officially off the table. Now, the government is calling off the disinvestment after bids come into, in below the expectation line. And this removes a major overhang for the CSB Bank, especially with the Fairfax already holding a large stake. So with that uncertainty gone, the market is now focusing on the bank's gold loan momentum and also what, the next quarter may really deliver. In fact, next focus is on Bandhan Bank that has issued a clarification today as the stock trades under pressure, and the bank has said that it is not aware of any sort of possible promoter stake sale and cannot comment on the accuracy of the reports doing the rounds. Now, this clarification comes even as the counter faces delivery-based selling, and also the street stays cautious about the MFI collections during the West Bengal elections. And viewers, HSBC has downgraded IOCL, BPCL and HPCL to a hold, saying a higher crude price put pressure on the earnings. And the brokerage has added that the OMCs may even face marketing losses even if the crude stays around the mid-70s. And the HSBC has also noted that while ONGC benefits from firmer crude, any upside is capped by policy risks. And paint companies are now taking price hike as crude-linked raw material costs move higher. Nuvama has said that the sector is in an oversold zone, and these hikes are coming after a steady rise in the input inflation. So Kansai Nerolac is raising the prices by around 2%, while Berger Paints is also pushing through slightly higher increases, in parts of its solvent-based range. So if crude stays elevated, the street expects another round of hikes next quarter, with some margin pressure likely in the near term. And viewers, next counter in focus is Feno Payments Bank that has issued a detailed clarification today, saying that it is only under the DGGI's review and also not facing any sort of probe from the ED or under PMLA. So the bank has said that the investigation relates to certain program managers and also merchants and not to its own GST compliance, and it also calls reports on bail rejection incorrect and also denies any sort of link to gaming or betting activity. Now, this comes even as Telangana High Court reserves its order in the MD's plea challenging his arrest. In fact, Investec has maintained a buy rating on ICICI Bank with a target of 1,685 rupees. Now, the brokerage remains optimistic on credit growth heading into FY27, saying that rising competition from the PSU banks across loan segments is not a constraint. Now, management has also flagged resilience in India's banking system despite global geopolitical tensions, keeping ICICI Bank as a top pick. Next counter in focus is BJL Projects, and that is seeing a strong move in trade after winning an order of over 700 crore rupees. Now the stock is up sharply, and this is marking its biggest jump in at least a year. So the company has received its ultra mega order from the Maharashtra Transmission Utility for power lines and also substation work. And now BJL is also stepping up its global push through a new joint venture with Saudi Arabia's Al Sharif Group, and this is focused on high voltage infrastructure. Next counter in focus is Aditya Birla Group. So the stocks have moved higher in trade today on a mix of global and sector specific triggers. Hindalco strengthens as Bahrain begins output cuts at the world's largest aluminium smelter. Ultratech Cement trades firm, with Jefferies saying that the company usually comes out stronger during the industry shocks. Grasim remains in focus as paint makers raise the prices, and ABSL AMC picks up momentum on the back of stronger volumes this week. And rising geopolitical tensions in the Middle East are also beginning to weigh on India's paper sector, with disruptions to energy supplies pushing up input and production costs. Now, for JK Paper, the impact could be significant, with over 30% of Indian paper exports now facing heightened risk. Higher freight and energy costs are also squeezing the margins, while global uncertainty is weakening the demand across key export markets. And adding to the pressure is the growing threat of cheap Chinese paper dumping, which could undercut the pricing and also further erode competitiveness for domestic players. Now, the combined impact raises concerns around profitability and also export sustainability for the sector. Let's look at more brokerage notes. Citi has maintained a buy rating on Indigo, setting a target of 5,100 rupees, and the airline has adjusted the operations on Middle East routes operating 36 daily flights between March 16 and 28, sharply lower than original 150 to 160 flights. So while fuel surcharges could lift the yields by 8 to 10%, Citi has cautioned that if the fuel prices remain elevated, the overall impact on profits could still be significantly negative despite the higher fares. And Jefferies cautions that rising crude prices are reintroducing the cost inflation risk for the cement sector as well, after nearly 2 years of a benign cost environment. Now, sustained fuel price pressure could weigh on the margins across players, while easing the competition and also higher use of green energy providing some sort of mitigation. Jefferies notes that large players like Ultratech Cement are better positioned to absorb the shocks and also emerge stronger during such industry disruptions. Let's keep with the brokerage notes, and Citi has stayed cautioned on Ola Electric and also maintains a sell rating while cutting its target price to around 22 rupees. And the brokerage lowers its volume estimates as the company continues to lose the market share and also face intense competition across the EV space. And Citi has also turned more conservative on the pricing and also trimming its revenue expectations over the next few years, and this is signaling pressure on the growth assumptions as well. Next stock in focus is Intellect Design Systems. So that has announced a 50-50 joint venture with UK-based Fintel PLC. Now the company will enter into a formal JV arrangement with the new entity set to be incorporated in the United Kingdom, and the partnership is aimed at strengthening Intellect's presence in the UK market and also expanding its financial technology offerings through collaboration with Fintel. And India's goods trade deficit has narrowed to $27.1 billion in February, and this is improving from the previous month as total exports rose 11% year on year to $76.1 billion, and this is led largely by the services. Merchandise imports have climbed sharply while goods exports remain steady. The Commerce Secretary has cautioned that exports may soften in March due to disruptions from the Iran conflict. And for FY26, India's total goods and services exports are now estimated at around $860 billion, which is below the government's $1 trillion target. And viewers, India's wholesale price index, that is the WPI inflation, rose to 2.13% in February, and this is marking the fourth consecutive monthly increase. Now, this uptick was driven primarily by the manufactured products and also fuel, even as food inflation remained elevated. February's numbers compared with 0.27% in the same month last year, and this is reflecting the impact of rising input costs and also continued supply chain pressures linked to geopolitical tensions. So economists are saying that the upward trend in wholesale inflation could really feed into the retail price pressures in the coming months, especially if the global commodity prices remain firm. And as digital payments major, PhonePe has temporarily paused its highly anticipated IPO process, citing heightened geopolitical uncertainty, particularly due to the intensifying conflict, in the Middle East. Now, the company has said that the global environment is too volatile for a large public listing at the moment, adding that it hopes for a swift return to peace and also remains committed to listing in India when conditions improve. And the decision comes just weeks after PhonePe has secured SEBI approval and also filed its updated draft red herring prospectus. So the IPO, structured entirely as an offer for sale by existing investors including Walmart, Tiger Global and Microsoft, was expected to target a valuation between 86,500 crores and also 97,500 crores. Viewers, Indigo has announced a new partnership with Adani Airports that will allow its blue chip loyalty members to earn and also redeem the reward points on duty-free shopping at select airports. Now, according to the airline, the collaboration will initially cover the duty-free stores at Mumbai, Ahmedabad, Lucknow and Guwahati airports, all operated by the Adani Group. Now, the move deepens Indigo's push to expand its loyalty ecosystem beyond flights, offering passengers new on-ground earning opportunities. Now, the airline has said that the tie-up is part of its broader strategy to build a travel lifestyle rewards network, enabling the members to accumulate points across multiple touch points and also redeem them seamlessly across travel and also retail partners. And India's aviation sector is witnessing sharp volatility as domestic air traffic has fallen nearly 6% in the first half of March following the sudden escalation of the Middle East conflict on February 28. Now, average daily domestic passengers has dropped to 4.79 lakh. As compared to the pre-war average of 5.08 lakh. So budget carriers like Indigo and SpiceJet have come under the lens as they adjust the operations amid the rising aviation fuel prices, airspace closures and also higher war risk premiums. So the international segment has been hit harder, with traffic down 33.5% in early March. But after bottoming out on March 3, the data shows a gradual rebound, touching about 93,491 passengers on March 15 as airlines has reworked the routes and also the schedules. And the government has granted temporary pilot duty relaxation to Air India, enabling the airline to better manage the long-haul international operations hit by the ongoing Middle East conflict. The Directorate General of Civil Aviation, that is the DGCA, has allowed Air India to extend flight and duty time limits for pilots on certain sectors, particularly those affected by airspace closures and also conflict-driven rerouting. Now, Air India has been operating evacuation and relief flights as well as rerouted the long-haul services, putting pressure on the crew scheduling. Now, the DGCA has said that the exemptions will remain in force for a limited period and only with strict fatigue management safeguards in place. In fact, Instagram will remove end-to-end encryption from all the chats starting May 9, marking a major shift in the platform's privacy design. So Meta has confirmed via its support page that E2E messaging will no longer be supported after May 8, meaning that users' messages will no longer remain fully private between the sender and the receiver. So once inscription is removed, Instagram messages will be accessible to Meta, and governments requesting data could also gain access, which is a dramatic departure from Meta's earlier privacy-first stance. So users have been advised to download any encrypted chats or media before the deadline. And viewers, on to some national news now. Rajya Sabha elections in the spotlight. Polling is underway for 37 seats across 10 states, with the 26 candidates clinching a victory unopposed. Now, Nitish Kumar and BJP chief Nitin Nabin are among the key candidates in fray. Now, several heavyweight names making the cut, including Sharad Pawar, Ramdas Athavale, Abhishek Manu Singhvi, Vinod Tavre and Babul Supriyo. So, however, the contest is far from over in Bihar, Odisha and Haryana. In Bihar, 4 seats are virtually settled, but the 5th seat heads to voting. And now on to some international news, viewers. Iran's Foreign Minister Abbas Araghchi has confirmed that Russia and China are providing military cooperation to Iran amid the ongoing conflict, calling both the countries Tehran's strategic partners. So, speaking in an interview, Araghchi has warned that any attack on Iran's oil or energy infrastructure would trigger retaliation against regional assets linked to the US companies. So, he's also said that Iran has no immediate plans to fully reopen the Strait of Hormuz, citing security risk and also recent strikes near the key export facilities. And Donald Trump is signaling that he could delay a potential summit with China's President Xi Jinping if Beijing does not help ease the tensions around the Strait of Hormuz. So Trump is linking progress on regional stability to the timing of any high-level meeting with China. So the development adds a fresh geopolitical layer to already complex US-China relations. And China has lodged strong, representations with the United States over its latest Section 301 investigations, raising the issue during the ongoing trade talks in Paris. Now, Beijing has said that Washington has launched probes against 60 economies, including China, citing alleged forced labor violation and also overcapacity concerns. And China has urged that the US to really correct what it calls the wrongdoing, resolve the differences through dialogue, and also warned that it reserves the right to take necessary measures to protect its interests. And the United Arab Emirates has taken major enforcement action, ordering the arrest of 35 individuals, including 19 Indians, for circulating misleading and AI-manipulated videos online amid the ongoing Iran-US-Israel war. So authorities have said that the content included fabricated missile attack clips, AI-generated visuals, and also real footage posted with doctored commentary, all of which were deemed capable of causing panic, exposing security vulnerabilities, and also undermining public stability. Now, officials have said that the accused will face an expedited trial, and also penalties include at least 1 year in prison and fines starting from AED 1 lakh. And Joan Laporta is continuing as president of FC Barcelona, keeping control of the club during a crucial phase of rebuilding. Now, Laporta has said that the focus remains on financial stability, strengthening the squad, and also restoring Barcelona's dominance in Spanish and also European football. And the leadership continuity comes as the club pushes ahead with its long-term sporting project and also stadium redevelopment. For now, Laporta stays firmly at the helm as Barcelona looks to return to the top. And viewers, as we wrap on this edition of Markets, let's talk also about lights, cameras, and a night that celebrated cinema at its most powerful. At the Oscars 2026, one battle after another emerged as the defining film of the year, taking home Best Picture for its bold storytelling and emotional punch. Now, Michael B. Jordan delivered an Oscar-winning turn, claiming Best Actor for a performance, marked by intensity, control, and also quiet strength. And Jessie Buckley was crowned Best Actress, her portrayal leaving an indelible mark on audiences and also critics alike. In fact, continuing with the entertainment section there, Salman Khan's upcoming film on the Galwan clash is getting a new name. The project, earlier titled Battle of Galwan, is now being renamed Matrubhumi. So this change comes at a time when India and China are seeing a gradual diplomatic thaw. So the makers saw the new title shift, the focus towards patriotism and also sacrifice, while the film continues to draw inspiration from the events along the border. And with that, viewers, it's a wrap on this edition of Market Express. Stay tuned to NDTV Profit for more news and updates.
In a month that moved markets, shifted diplomacy,
the entire world.
and stirred political battlegrounds. India chose its news carefully. NDTV India and NDTV 24/7. Number 1 on YouTube. NDTV Network, streaming India's trust. Leading India's conversations.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go, grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
The expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market
Hello and welcome. We are in the middle of the defining geopolitical earthquake of this decade. The rules-based international order is up in smoke in the skies above the Middle East. The escalating war between Iran, Israel and the United States is no longer a regional conflict, it is a global stress test. The tremors of this conflict are being felt in the war rooms of Beijing and Moscow, the Straits of Taiwan, and right here in New Delhi, where the safety of the Strait of Hormuz directly impacts our economy and strategic autonomy. We are moving past a world defined by American hegemony and into a volatile, multipolar world where old deterrence playbooks have been torn to shreds. The question is no longer just how this war ends, but what kind of world will be left when the smoke clears. In moments like this, when the noise is deafening and the fog is thickest, there is one voice you can turn to for clarity. To decipher the chaos that is unfolding in the world around us, I'm joined today by one of the world's most astute observers of global power dynamics. Farid Zakaria is a thinker par excellence who has spent decades analyzing the shifting tectonic plates of the global order. Tonight, he joins us live to make sense of a world that is changing faster than our ability to understand it. Farid, welcome to NDTV.
Pleasure to be with you, Rahul.
Farid, the one question that's topmost in the minds of everyone who's watching you in India and across the world in NDTV is, what happens next? Where does this war go? When does it potentially end? On the basis of everything you've read, learned, and deciphered, where do you think we're heading next?
This has been a very unusual conflict, Rahul, in that it's very hard to ascribe it to broad structural forces, dynamics of power relations between nations. It's all started in the head of one man, Donald Trump. And so what we're trying to understand is where's Trump's head? Where is he likely to go now? You put it very well. This is a stress test, but it's also a stress test of American power. For a while, the conventional wisdom has been that Donald Trump will search for an off-ramp. He is going to try to find some way to declare victory and wind this conflict down. I still think that is a possibility, and maybe even the single largest likely outcome. But many new forces have been put into play now. What you are seeing is the limits of American hegemony because, first of all, Donald Trump may want to take the off-ramp, but it is not clear that Iran will take that off-ramp. And if Iran continues, even with these limited incursions, continues to block the Strait of Hormuz, the war doesn't end. The crisis doesn't end. The problems that have been created for large parts of the world, especially countries like India, don't end. Israel may not end the war. So you are in a situation where this dynamic could continue. And I should add, there's no indication right now that Trump is searching for an exit. In fact, what he is doing is going down a very familiar escalation spiral, where when great powers particularly feel that their prestige is now at stake, they escalate because they don't want to seem to have lost face. In Trump's case, it's personal. He doesn't want people to say Trump always tacos. And so for all those dynamics right now, I would have to say we seem to be in the middle of an escalation trap where I don't see an off-ramp in the short term. Though, again, it's all in Trump. It's one man we're trying to predict. But so far, what he's trying to do is to get other countries involved, which would, of course, only widen the conflict.
Trump's miscalculation was that he thought he could do a Venezuela in Iran, completely misunderstanding the civilizational nature of the Iranian state. What is your best understanding of how Iran holds in the absence of the supreme leader? We haven't heard from Mojtaba Khamenei. There's some talk of him having been airlifted to Russia, potentially for medical aid. That's not confirmed, though. There's widespread dispersion of power across Iran, and all the units seem to be holding firm. But they've taken a very big military and economic hit. Not much is known for sure, but what's your sense of where Iran stands in this war and how Iran is viewing the dynamics as they play themselves out?
Well, you put it right, Rahul. It's a very different country than Venezuela in many respects. The most important respect is it is an institutionalized dictatorship, not the way Venezuela was a highly personalistic one, built by Chavez and then inherited by Maduro. The Iranian regime has a very strong clerical component. It has a very strong military component. It then has an elected president who is a kind of almost third element, an escape valve, so that public sentiment is also reflected. And there's always been a balance of power among them. What is striking about what is happening in Iran now is it appears that the Revolutionary Guard, the military, have taken control. In effect, what has happened is there has been a soft coup, and the military now reigns supreme. They are the Revolutionary Guard. Why is that? Well, when you start getting bombed and attacked by a foreign power, generally the men with guns gain power. The hardliners become the most powerful element. Mojtaba was generally seen as the most favored candidate by the IRGC, by the Revolutionary Guard. So what you now have is a military dictatorship with a clerical facade making all the decisions. And as you say, the military is highly institutionalized. They've also decentralized power. So I suspect that what is more likely to happen than not is that this sort of military rule will continue. And I should add one other element which we should always keep in mind. The United States often forgets about this. It forgot about it in Vietnam. It's forgotten about it countless times. Nationalism. The reality is when a foreign power starts bombing you, people get nationalistic, even if they don't like the regime. They're going out and giving blood to help people who have been killed. They're seeing their schools bombed. They're seeing their city squares bombed. In those circumstances, you are likely to have some kind of rallying around the flag and the nation, even in an unpopular regime like this one. So my guess is that between the nationalism, the military in charge, what you are going to see is the Iranians playing hardball. They will continue these pinprick strikes. They want to, in a sense, reestablish deterrence with the United States and say you can't do this kind of thing without paying a very heavy price. And right now, by the way, the price has just begun. The price of oil is likely to only go up from here.
How is Benjamin Netanyahu most likely interpreting this escalation trap? He threw all he had at the Iranian regime, thought he'd be able to cause a public uprising. That clearly isn't the case. There have been some talk of the Saudi prince being in back-channel talks, asking for America and Israel to go even harder. What would Netanyahu like at this moment, and what are his next moves in the chessboard likely to be, Farid?
So for the Israelis, the calculus has been quite different, particularly for Prime Minister Netanyahu. Netanyahu is trying to destroy Iran as a state. From his point of view, all the damage they do, it destroys all the offensive capabilities. They're destroying the military factories. They're destroying the entire military industrial complex that Iran has, which will take years to rebuild. So he is essentially taking Iran off the board as an adversary of Israel. And if for him, the ideal scenario, change of regime, people come to take to the streets, elect a pro-Western, even Israel party, that's very unlikely. What is more likely is chaos, instability, power vacuums. And in those situations, you're likely to have a kind of civil war. But for Israel, that's fine. Chaos means they are no longer a threat to Israel. The talent that Bibi Netanyahu had was that he persuaded the United States, he persuaded Donald Trump that the interests of the United States and the interests of Israel are the same, but in fact they're not. The United States needs stability, it needs integration, it needs free flow of oil, it needs free flow of goods and commerce, because all its allies in the region, from the UAE to Saudi Arabia to Qatar, all need integration, economic stability, ease of trade, ease of transport. For the Israelis, that's much less important. They are simply trying to take Iran and Hezbollah off the board, and they're succeeding in that.
Of greatest concern, Farid, to India and to the rest of the world is what's happening in the Strait of Hormuz. One tanker reached the port of Mundra in Gujarat this evening. Every tanker of Indian origin or with people of Indian origin is of grave concern to people across the country. Iran right now seems to have a chokehold. They're dominating who can pass, who should not be allowed to pass. How do you see the dynamics play out in the Strait of Hormuz over the next couple of weeks?
It is going to be very difficult to open the Strait of Hormuz without Iran's acquiescence. It's a very narrow strait. What you're talking about in terms of navigable area is about 2 miles wide. In those circumstances, if the strait has been mined, which appears to be the case, it is very difficult to figure out where those mines are, to be sure that you have demined them. And remember, for the most part, what you need to do is not perfectly close the strait, just raise enough doubts that insurance companies are unwilling to provide insurance. And if you have managed to do that, 80% of the traffic is down. Now, the Iranians seem to have done this fairly cleverly because Iranian ships are going through. As you pointed out, a couple of Indian ships went through, which means that they have either smart mines that they can activate and deactivate, or they have mapped the mines out in a very careful way where there is a path. And then beyond the mines, there is also the possibility of, a single boat, a small boat going in packed with explosives, the drones that can strike it. So there are all kinds of things you can do to raise enough doubt that it becomes hard to get insurance. And if you can't get insurance, effectively the strait is closed.
So military installations on the Kharg Island have now been targeted by Israel and the United States. Now that can potentially be hugely escalatory if Iran responds in kind. Where do you see that go? This expeditionary force that the United States is bringing in, there's been a lot of talk about how the United States president may want to send the Marines to occupy Kharg Island because that gives him something to show. It cuts off a lot of Iran's oil supply and production. How the importance of Kharg Island and the attacks that are now happening on oil installations in Iran and the impact this could have in the rest of the Gulf region.
Yeah, you're right to focus on that question, because so far, despite a lot of bombing and violence and the Iranian retaliation, there's been very little on energy infrastructure. The Iranians seem to have kind of made that a red line where they're not attacking Saudi oil fields. There have been a few things here and there that have been close by, but by and large they have not attacked much of the energy infrastructure. If the United States were to try to take Kharg Island, one wonders whether the Iranians would then escalate by starting to target oil facilities. And at that point, two things happen. One, you have Iranian oil blocked because, let's say, the Marines do take Kharg Island. And then the second is, if the Iranians respond, you have attacks on other energy infrastructure. And it's quite possible at that point that the price of oil goes up dramatically, to $150 a barrel, because now you are attacking not just the energy transport link, but also energy infrastructure. I should also point out, it has been historically very difficult for the United States to take and hold pieces of land in foreign countries when the nation around is hostile. It's very easy to launch insurgent attacks. It's very easy to make it very difficult. I'm not a military expert, and therefore I can't tell you whether Kharg Island is one of those places, but historically that has required a very large American presence in Iraq, in Afghanistan. You have to create an American base, as it were. You can't just have a small number of troops parachute in and take over an area that is surrounded on three sides by Iran.
Okay, let's also spend a moment on the Red Sea and the threat posed by the Houthis, because a lot of the oil is now being routed from the Red Sea. And the concern that the Iranians could potentially try and choke that through their proxies. What do you make of the role played by the proxies, the Hezbollah, the Houthis, and where they're at in this stage of the conflict and the amount of ammunition, ability they have to get more activated if push comes to shove?
So far, the Houthis have not been as active as one might have expected. And in fact, none of Iran's allies have been particularly active. Iran is isolated. By attacking the Gulf states, it has lost the ability to make this a kind of issue where the Gulf states were, counseling the U.S. and even Israel to stop the war. Perhaps the Iran had no option. I think it is hitting where it can rather than where it wants to. It is simply using whatever soft targets it can to try and cause a certain amount of general chaos. But interestingly, the Houthis are not joining in as much as one might have thought. Hezbollah has no capacity; it's being destroyed, and so one wonders whether the Houthis could ramp up. Maybe they can. The key here again is it's a very asymmetrical form of warfare. This is the future of warfare, Rahul, which is very, very small drones, maybe $5,000 worth, can be used to create these kind of choke points. And then when you hit back against them, think about the economics of this. Let's say the drone costs 10 or 15,000. By and large, the US has been using Tomahawk missiles to destroy these drones. A Tomahawk missile costs about $2 million. They usually use about two, so that's $4 million to destroy a drone that costs $15,000. That asymmetry means that the Houthis will always be able to cause trouble, because you can launch a drone off an iPad, off an iPhone. Are you really going to be able to destroy that capacity completely with all the Tomahawks in the world? I doubt it.
Like many other countries in the world, India is trying to navigate a diplomatic tightrope at the moment. The Prime Minister was in Israel just days before the Israeli attacks. Now the Prime Minister has spoken to the Iranian President. Foreign Affairs Minister Jaishankar has been constantly on the line with the Iranian Foreign Minister Arakchi. And some ships have been let through. We're trying to negotiate on a ship-by-ship basis. How do you view the chessboard being aligned from India's lens? What are India's options? How do you think Jaishankar and Prime Minister Modi and the Indian state should play this?
I think they're trying to establish some kind of contact with Iran so that ships can go through. I think, frankly, this is an area where the Prime Minister and the Foreign Minister did not seem to follow up on their own multi-aligned foreign policy. The Indian government seemed to tilt quite strongly in favor of Israel. The extraordinary trip that Prime Minister Modi took, the way he showered the Israelis with praise. But then, when the war happened, the tacit support that New Delhi seemed to give to the American-Israeli effort was quite striking. I mean, in some ways, India was more acquiescent than many European countries were. So that means that it probably has lost some credibility with the Iranians, which they are now busily trying to reestablish. And maybe they will be able to achieve that. But India has had very long civilizational and political ties with Iran, and that should hold it in some good standing. But certainly the timing of Prime Minister Modi's visit did not help in reestablishing some credentials with Iran.
President Trump asked for Beijing to send ships. China said no. We've also seen, for the large part, Beijing stay away from this conflict. How do you think the war in the way that it's playing out is being viewed by policy and military wonks in China? We've seen a surge of marine vessels towards the Taiwan Straits. We've seen a lot of aircraft in the air after a 16-day lull. What is Beijing making of the mistakes that the United States is committing at the moment, and how is it likely to react in the context of Taiwan?
So the first thing, Rahul, I think it's important to point out is that the American military is performing extraordinarily well in terms of the firepower, the accuracy, the devastation, and the Chinese are surely looking at that. Remember, Xi Jinping has for a while been trying to modernize his military. Has felt that the military is not adequate to the tasks it has, principally, around Taiwan and the South China Sea. And he must look at what the U.S. is doing and Israel, but mostly the U.S., and say, boy, this is an extraordinary military that can, halfway around the world, inflict this kind of precise devastation on an enemy. But the second part is, I think, for Xi Jinping, his thesis has always been that the United States is overextending itself in all these areas around the world where it does not have the kind of vital strategic interests that require massive military adventures. And this must seem like a godsend to him, because frankly, the United States is now once more deeply engaged militarily in the Middle East, deeply engaged in the fate of one particular country, trying to influence who rules that country. And this doesn't really have much of an effect on America's future trajectory. The United States is not even particularly, involved in the sense that it doesn't import much oil from the Persian Gulf from the Middle East these days. The United States is an energy exporter, not an importer. So why is it doing it? It seems to have fallen prey to a kind of imperial temptation to see instability or nasty regimes around the world and feel like it has to step in. China is very wary of that. That is why you saw it immediately say it's not going to send ships in. What China is viewing this as an opportunity to continue to build up its industry, to build up its technology, to continue to try to move to the frontiers of technology, AI, quantum, electric vehicles, high-speed rail, solar, wind, batteries. And in many of those areas, it totally dominates. If you look at solar, wind, batteries, electric vehicles, that is the future. Robots, that is the future. So they are looking at, I think, much the way that the United States did in the early 20th century, while Europe was busy fighting wars and the British were busy trying to stabilize their empire in India and Sudan and Egypt. And the US just said, we're going to build the greatest industrial machine. The Chinese are trying to do that. And I think they are, in some sense, secretly welcoming that the United States is once more distracted by another adventure in the Middle East.
Does this war in the Middle East increase the prospects of Beijing making a military dash for the Straits of Taiwan? A lot of American analysts were speaking of 2027 as being the year when Beijing would attack Taipei. Also, how does this impact the political mood on the streets of Taiwan? I see the KMT's popularity seems to be going up. Are the people of Taiwan likely to be reconciled to the idea that there is a limit to American power and their protection may not be enough once and if the Chinese do come in? Or could it bring out the nationalist in them instead?
You bring up the most important question, which is how the Taiwanese are going to react. And you're absolutely right. The KMT, which is the party in Taiwan that is more pro-Beijing, is gaining ground. You know, no party in Taiwan is really pro-Beijing, but the one that is more willing to have dialogue with Beijing seems to be doing better. And I interpret it as you do, which is it seems that they are worried about the prospect of a massive titanic clash between the US and China, and they maybe are thinking, yeah, this party that promises dialogue with Beijing may be a better bet than the party that promises confrontation with Beijing. On the core military issue, you raised the 2027 date. I think it's important to clarify that for your viewers. Xi Jinping has been saying that he wanted the Chinese military modernized and ready by 2027. That's largely because he feels the Chinese military is corrupt and incompetent. That deadline does not appear to be directly about Taiwan. It has been interpreted as such by one American admiral, which then has turned it into a kind of media meme where the idea is the Chinese are planning to take over Taiwan in 2027. I don't read it that way. It's certainly something that they are always planning for, but it would depend on the dynamics in Taiwan. The single thing that I think deters Xi Jinping more than anything else, even more than the military, though military deterrence is important, is the fear that China would lose its greatest markets in the world, which are the United States and Europe. China is not Russia. This is not a rogue actor that is trying to roil international markets. China has grown to strength and power by having stability, peace, integration, low oil prices, low commodity prices. So they would not want a situation where they feared that suddenly they would lose access to all those markets, unemployment in China would skyrocket. I think that the best way the US can signal that is military deterrence, but also unity with Europe, with Japan, with India, with Australia, so that you present a united front to China and say, all of us would regard an invasion of Taiwan as unacceptable and we could not do business as usual with you. I think that would have a very strong deterrent effect. The Chinese regime still gains its legitimacy by the fact that it has provided economic growth for 35 years to its people. It's not going to give that up very easily, and that should be the focus. Of course, most of the time, President Trump these days is fighting with all of America's allies, the Europeans, and of course, even with India on the tariff issue. So there has not been much unity on the ex-China world, and that's what we need to reconstruct.
Let's spend a moment on domestic American politics and the toll that this war will have on Trump's standing with American politicians across the aisle and also with the American public. His popularity has undisputedly taken a toll. How does this impact the midterms, which are a few months away from here? And how does it impact his moral and political authority to run America the way he'd like?
Well, there's something very interesting, Rahul. You say his popularity has taken a hit. That is the first time I can remember a president starting a major military intervention and going down in popularity. Usually what happens is a rally around the flag effect. and people go, presidents go up in popularity. So the fact that Trump is down tells you that this is a very unusual war. The American public is not in favor of it. If you look at every major military action since the end of World War II, this war has the lowest approval rating, 46%. To give you a contrast, the Iraq war, when it began in 2003, had 76% of Americans supporting it. So he's starting with a low base. It's not going so well. His own personal popularity is down. Now, one does have to say the midterms are a while away, and mostly Americans don't vote on foreign policy. So those are the two caveats I'd make. But right now, it does not look good for Donald Trump, and it does not look good for the Republican Party, which is, of course, mostly lockstep behind him. Whether it stays that way till the midterms, I think the key issue is how much economic dislocation will all this cause.
Given that the Iranians keep saying they don't want to negotiate, they want to teach the Americans a lesson for what they've done to their country, is there anyone who can help negotiate an off-ramp? Delhi, Moscow, Beijing, some capital in Europe? Because Trump is determined to go away saying, I won, I did it, I pummeled the Iranian state. Iranians are determined not to let that happen. In your lens, what does an off-ramp look like, Farid?
Look, I think there was an off-ramp. I have it from good sources that the Iranians actually reached out in the beginning of the war. There have always been possible deals. They were negotiating a deal. The Omani foreign minister accurately tweeted out that it seemed like they were close to a deal. And that tweet that he posted just before the war began was a tweet that had been approved by both the American and the Iranian side. So there's no question that there is a compromise that is possible centering around Iran's nuclear program. The ballistic missile issue is in a sense moot now because Iran's ballistic missile capability has been destroyed. So in the short term, at least, the next 5 years, it seems like you could even focus more on the nuclear side because they don't have much of a ballistic missile capacity. The challenge will be, as you said, the Iranians want to teach Trump a lesson, that Trump wants to declare victory. I think India has lost that opportunity to be an honest broker, but the Qataris have not. The Omanis have not. And I think the Qataris in particular could play an important role. The Prime Minister of Qatar has been a very important intermediary in the past. I think he retains credibility on all sides, and he could manage to do that. The problem is not finding, the mechanism by which you do this deal. The problem is we are now in a classic escalation trap where each side has backed itself into a corner where the minimum of what they need has gone up, and that means you end up in an escalation spiral. Which is, really what we should try to avoid, because it's important to point out, Rahul, that while the United States and Trump initiated this action, the world is feeling the fallout much more than the United States. The U.S. is energy independent, but for Asia, this has been a devastating blow. India was on a very good trajectory in terms of its economic growth. All that is imperiled now because of something that India had no control over.
And finally, before I end, if you were to zoom out of this current moment and look at how this war changed the global order, and if you were writing a book a few years out, projecting into the future, what would you be telling your readers? How did this current conflict in West Asia change the global dynamics of power?
I think I would frame it just as you did, Rahul, at the start. This is a sign that the old order is collapsing. Because what the United States, the creator and upholder of that order, has done is to initiate a military conflict with a major nation without going to the UN, without trying to frame it in broader principles, without going to NATO, without trying to create, broad legitimacy for its actions, without having a clear targeted end goal. And all of this tells you that the old system is not working right now because the leading power in that system is not playing by those rules. And what that means is it is going to be a very, very interesting next 10 or 15 years where we will watch whether other countries start to follow America's footsteps. The Russians already do that. Of course, they follow none of those playbooks. But will China, will a place like India feel it doesn't need to follow any particular rules or guidelines when it feels its national interests are imperiled, for example, around the Pakistan-Kashmir issue? It could be a much messier world. And then you would have to ask yourself, in that kind of world, how will people view the issue of nuclear weapons? Because after all, the one thing we do know is this whole crisis would not have happened if Iran had nuclear weapons. That's why North Korea is safe. What does that mean about how other countries are going to view the acquisition of nuclear weapons? One of the saving graces of this old order has been there has been very little nuclear proliferation. All of that might change. So I think we're entering a brave new world.
The last 30 minutes, Farid, have been a masterclass in trying to understand a changing world order which is evolving so rapidly that you can't even comprehend and keep up with all the changes that are happening. You know, you wake up knowing the world to be a certain way and things to be a certain way on the chessboard. By the morning, things have changed. Must be really difficult just trying to keep up with everything that's happening at the moment.
It is, and you know what's extraordinary about it is you're watching history being made in the moment. You don't know where it's going to end up. And it feels like, we're all feeling a certain degree of nostalgia for the older, more stable, more steady world, even though this is head spinning in its kind of in the kind of energy and adrenaline it is producing.
Farid Zakaria, for taking our time and joining us on NDTV. Thank you very much. Much appreciated.
Always.
That was Farid Zakaria, one of the world's leading foreign affairs gurus, giving our viewers a sense of the war, where it stands and where it could be heading next. Thank you for joining us. We'll slip into a break. We'll have a lot more for you when we come back on the other side. Stay with us.
Some moments in life are lifelong. Some memories are lifelong. Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. Ye on the quality lifelong.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
In a month that moved markets, shifted diplomacy,
the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7. Number one on YouTube. NDTV Network, streaming India's trust, leading India's conversations.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go, grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This.
Another vessel gets a safe transit amid war in the Middle East. Shivalik vessel carrying LPG arrives at Gujarat's Mundra port days after crossing Strait of Hormuz. 2 more vessels expected to arrive tomorrow. US Treasury Secretary Besson says Iran is letting some fuel through Strait of Hormuz, about 140 million Iranian barrels out so far through Strait of Hormuz. Oil prices has fallen much lower in the couple of months. After Trump seeks help from allies for Strait of Hormuz, UK PM Keir Starmer says UK won't be drawn into wider war and will work with allies on Strait of Hormuz plan. An effort to reopen Hormuz Strait won't be a NATO mission. The Israeli military claims that it has destroyed an aircraft at Tehran's Mehrabad airport that was used by Iran's late Supreme Leader Ali Khamenei. Iran remains defiant, with Foreign Minister Abbas Araghchi insisting Tehran does not want a ceasefire and will continue fighting. Commerce Secretary Rajesh Agarwal says India and US will sign a trade deal only once US creates a global tariff architecture. Adds that India is examining legal impact of US notices around trade and tariff investigations around Section 301. Market halts its 3-day losing streak, closed over 1% higher. Nifty ends above 23,300 after gaining over 350 points in 30 minutes. Broader indices underperformed the benchmarks while the sectors finished mixed. PhonePe pauses IPO process temporarily amid the geopolitical uncertainty from the Middle East war. CEO Sameer Nigam says the company hopes for a swift return to peace in all the affected regions, and it remains committed to a public listing in India. And Leonardo DiCaprio's one battle after another wins big at 98th Academy Awards with Oscars in 6 categories. Michael B. Jordan and Jessie Buckley are the first-time winners in leading acting categories. Nobody Against Putin backs the best documentary feature. Good evening, viewers. This is Profit 360 and I'm Malika Mishra. We start today with focusing on India's safe transit through the Strait of Hormuz. The Indian-flagged LPG tanker Shivalik safely arrived at Mundra port in Gujarat around 5 p.m. today, and this marks an important delivery amid the ongoing Middle East tensions, where the Strait of Hormuz, a key route for nearly 20% of global oil and gas, has faced disruptions due to the conflict. Shivalik carried about 45,000 metric tons of liquefied petroleum gas from Qatar. It is owned by the state-run Shipping Corporation of India. The safe transit and arrival brings some relief to concerns over LPG supply. In fact, 2 more vessels, one named Jug Ladki carrying 80,000 metric tons of crude and Nanda Devi carrying LPG, are supposed to reach India tomorrow as well. Let's take a look at this ground report by my colleague Rajendra Thakur from Mundra Port.
The LPG tanker Shivalik safely crossed the Strait of Hormuz and arrived at Mundra port today. Amidst the ongoing tension in West Asia due to the continuous efforts of the Ministry of External Affairs of India and the vigilance of the Indian Navy, the important Indian vessel Shivalik carrying 4,600 metric tons of LPG has successfully crossed the Strait of Hormuz, considered to be the most sensitive and dangerous in the world, and arrived safely at Mundra port today. The LPG tanker Shivalik anchors of Mundra port today under tight security of the Indian Navy. In view of the arrival, the Mundra port administration has complete logistic preparation on a war footing so that this consignment of gas can be immediately unloaded and transported to other part of the country.
Viewers, the government today in its inter-ministerial briefing on recent developments in West Asia has reiterated that India has adequate crude oil inventories. But at the same time, it also said that LPG is definitely a cause of concern. Sujata Sharma, Joint Secretary of Marketing and Oil Refinery, appealed again to refrain the public from panic booking. She also informed that no dry out has been reported at any fuel pump. It was also further clear that while most states have started distributing commercial LPG, no decision has been taken on capping the refining price. In fact, listen into a brief portion from her statement.
कमर्शियल एलपीजी के बारे में मैं ये बोलना चाहूँगी कि लगभग सभी स्टेट्स, बहुत सारे स्टेट्स ने कमर्शियल एलपीजी का डिस्ट्रीब्यूशन स्टार्ट किया है एंड the release orders, the allocation orders have also been issued by them. भारत सरकार ने 14 तारीख को एक ऑर्डर इशू किया है और उसमें उसके द्वारा सभी लोगों से, जिन लोगों के पास पीएनजी और एलपीजी कनेक्शन दोनों हैं, से रिक्वेस्ट की गई है कि अगर आपके पास दोनों कनेक्शंस हैं तो कृपया अपना एलपीजी कनेक्शन को सरेंडर कर दें.
Viewers, President Donald Trump has called on about 7 countries, especially those heavily reliant on Middle East oil, to join a US-led coalition to police and secure the Strait of Hormuz. Trump emphasized that these nations should protect their own territory since the US is less dependent on the strait thanks to its own oil production. He also warned that the US will remember countries that do not help, but responses from countries have been cautious with no firm promises. For instance, let me take you through some of them. UK's Prime Minister Keir Starmer said that while securing the Hormuz calls for more countries to come together, UK will not be drawn into the wider war in Iran. A spokesperson for China's embassy to the US, Liu Pengyu, said that China would strengthen communication with relevant parties for de-escalation. South Korea's foreign ministry said it takes note of Trump's call and will review the situation, as diplomatic as it can get. Japan, France, Germany and Australia have given no clear signs of joining the US to secure the Hormuz Strait either. But moving on, Iran's Foreign Minister Abbas Araghchi, during a press conference today, said that Iran is not requesting a ceasefire. He explains this by saying that, and I quote, "We do not want a ceasefire because it is not that we're seeking war, but because this time this war must end in such a way that our enemies never again think of repeating these attacks." His remarks underscore Iran's firm position against seeking a ceasefire, aiming instead for a decisive end to the conflict to deter future attacks from enemies. But let's take a look at some updates on the war. The West Asia conflict has now entered day 17, with tensions continuing to escalate across the Gulf region. Iran continues retaliatory strikes across the Gulf, with Bahrain reporting multiple missile and drone attacks earlier today. Meanwhile, Israel Defense Force claims that its air force struck and destroyed the aircraft of former Iranian Supreme Leader Ali Hosseini Khamenei at Tehran's Meradabad airport overnight, describing the strike as a significant blow to Iran's regional coordination capabilities. Meanwhile, Treasury Secretary Scott Bessent has also said that US is allowing Iranian oil tankers through the Strait of Hormuz. He said that oil prices should fall much lower than $80 per barrel after the war is over. The strait, which connects the Gulf to the global market, is the most important trade route for oil in the world, and therefore tensions in that strait is causing a lot of oil supply disruption. But meanwhile, Israel has also launched a limited ground operation in Lebanon, deepening the humanitarian crisis there, with more than 850 reported deaths and hundreds of thousands displaced. Now back home, India has issued an advisory asking its citizens in Iran not to attempt crossing land borders without coordination with the Indian embassy. Authorities warn that unplanned travel could lead to serious logistical and immigration challenges. Meanwhile, aviation has taken a hit as well. The government says Indian airlines have cancelled over 4,300 flights so far due to airspace disruptions caused by this very conflict. Moving on to an update from Dubai International Airport, though flight operations are gradually resuming after a temporary suspension earlier today following a drone-related incident near the airport. Authorities say services are being restored in phases, though passengers have been advised to check with airlines as delays may continue. The disruption also impacted Indian carriers, with Air India and Indigo cancelling or rescheduling several Dubai services. Take a look at this report by my colleague Tejashree from the ground.
पिछले कुछ घंटों की यदि बात करें तो बेहद तनावपूर्ण रहे हैं इस पूरे इलाके की। यदि मैं बात करूं यूएई की, क्योंकि सबसे महत्वपूर्ण हम सबसे पहले बात करते हैं दुबई एमिरेट्स की, तो दुबई में भी एक सबसे बड़ी घटना हुई, जहां पर एयरपोर्ट के आसपास का जो क्षेत्र है वहां पर ड्रोन की एक घटना हुई, ऐसा दुबई के आधिकारिक मीडिया हैंडल से ये बताया गया। उसके बाद फुजैरा पोर्ट की आप बात कर रहे हैं, और जैसा आपने बताया कि सबसे महत्वपूर्ण और स्ट्रेटेजिक लोकेशन हो जाता है फुजैरा पोर्ट, क्योंकि वो स्ट्रेट ऑफ हॉर्मुज की तरफ यदि जाना होता है तो वो एक छोर, यदि हम कहें तो गलत नहीं होंगे, क्योंकि उसी तरफ पर्शियन गल्फ से होते हुए आप उस तरफ जाते हैं। और सबसे उसके बाद हम बात करें अबू धाबी की, तो वहां पर भी इसी तरह की एक घटना हुई है जहां पर एक व्यक्ति की जान भी चली गई है। तो ये 3 बड़ी घटनाएं यूएई में हुई हैं, जहां पर ईरान लगातार अटैक कर रहा है। इस वक्त मैं बात करूं तो मेरी मौजूदगी दुबई में है। दुबई में जाहिर सी बात है, एक बार मैं आपको यहाँ पर जल्दी से सड़क की मार्केट की तस्वीरें भी दिखा देती हूँ कि फिलहाल यहाँ पर यदि हम टूरिज्म की बात करें तो टूरिज्म बेहद कम है, लोगों की सड़कों पर हलचल भी बेहद कम है, और साथ ही साथ टूरिज्म यहाँ पर सबसे ज़्यादा प्रभावित होता दिखाई पड़ रहा है। फ्लाइट्स की बात करें तो फ्लाइट्स पर भी काफ़ी असर पड़ा था, कई सारी फ्लाइट्स आज कैंसिल कर दी गई थी, जिस तरह का घटनाक्रम दुबई इंटरनेशनल एयरपोर्ट पर आज दिखाई पड़ा। इसके अलावा कई सारी फ्लाइट्स अब कुछ घंटे बाद, ऐसा दुबई मीडिया ऑफिशियल्स का कहना है कि चूंकि अब आग पर काबू पा लिया गया है, इसीलिए अब अब कुछ फ्लाइट्स जो है वो ऑपरेशनल है, सभी फ्लाइट्स ऑपरेशनल नहीं है। अब वो कौन सी फ्लाइट्स ऑपरेशनल है, ये सारी तमाम जानकारी उनके जितने जो एयरलाइंस हैं उनसे पूछने के लिए कही जा रही है। लगातार यहाँ पर एडवाइजरीज भी जारी की जा रही हैं। एयरपोर्ट की तरफ जो टनल जाता है उसे भी कुछ समय के लिए, कुछ वक्त के लिए बंद कर दिया गया था। मौजूदा स्थिति को ध्यान में रखते हुए एयरपोर्ट रोड पर भी पाबंदियां कुछ समय के लिए लगा दी गई थी, पूरे इलाके को कॉर्डन ऑफ कर दिया गया था। तो पिछले कुछ घंटों में 3 बड़ी घटनाएं हुई हैं, अबू धाबी में, फुजैरा पोर्ट पर और दुबई इंटरनेशनल एयरपोर्ट के इलाके में। ये 3 बड़ी घटनाएं बताती है कि किस तरह से ईरान लगातार हमले कर रहा है, खासतौर पर खाड़ी देशों में, जहां पर यूएस के मिलिट्री बेसिस है, सैन्य ठिकाने हैं, और इस बात का संकेत दे रहा है कि फिलहाल ईरान बातचीत करने के लिए बिल्कुल तैयार नहीं है, और यूएई भी अपना रुख पूरी तरह से साफ कर चुका है कि वो 2 देशों के बीच चल रही लड़ाई में बीच में नहीं आना चाहता है। और साथ ही साथ जो भी अब एक्शन होगा वो उनका एक्ट ऑफ सेल्फ डिफेंस होगा, और साथ ही साथ यूएई चाहता है कि अब
Viewers, oil prices have pulled back, with WTI crude slipping to around $95 per barrel, down nearly 4%, and Brent is trading below $106 mark. Brent has in fact declined over 1% to $102 per barrel. The relaxation follows steps taken by the US to secure energy supply, whether it is Trump reaching out to other countries to help secure the Strait of Hormuz, or even Scott Bessent, the US Treasury Secretary, announcing that US is allowing Iranian oil tankers to transit the strait. In this regard, the Wall Street has opened higher as well. All three benchmark indices continue to trade in the green with gains of over 1% each. The moves come after the S&P 500 notched its third losing week in a row and closed at its lowest level of the year last Friday. We also spoke to William Lee, Chief Economist at Global Economic Advisors, who told us this morning that Asia and Europe are most vulnerable to the downside impact of higher oil prices as opposed to the United States. Listen into that bit from our chat with him.
Right now, all of the efforts and policies that are being put in place to try to keep traffic going in Strait of Hormuz to offset the terrorist type tactics that the Iranians are using to close the strait, they are really for benefiting the rest of the world rather than the United States. And I think the markets have been taking it very calm because they realize that the downside impact of the high oil prices is going to hit Asia and Europe much more than the United States.
India and the EU are moving into the implementation phase of their newly concluded free trade agreement. External Affairs Minister S. Jaishankar met EU Commission President Ursula von der Leyen, who stressed a strong focus on efficient delivery of the deal and the recently signed security and defense partnership. Von der Leyen said both sides aim to ensure benefits reach people quickly. They also discussed developments in the Middle East and Ukraine, emphasizing de-escalation, stability and energy security. But moving on, India's latest trade numbers are out and they show a sharp widening in the trade deficit. Merchandise imports surged to $63.7 billion in the month of February compared to about $51.3 billion a year ago, pushing the overall trade deficit to $27.1 billion. However, services trade remained strong with exports rising to $39.5 billion, while imports came in at $16.4 billion for the month. Commerce Secretary also said India is seeing higher purchases of Russian oil amid ongoing global disruptions. And on the proposed India-US trade deal, the Secretary also clarified that the agreement is largely ready, but India is waiting for clarity on the new global tariff framework being shaped by US before formally signing it. For more details on both the trade data and the status of the India-US trade deal, let's head over to my colleague Rishabh Bhatnagar.
Some very, very important commentary coming in on the status of the trade deal between India and the US. Remember, both the sides were set to sign the first tranche of the US bilateral trade agreement in mid-March, but that seems to be unlikely. What India has said, what the Commerce Secretary said at today's trade data briefing was that India will wait for US to decide on certain global tariff architecture before any sort of a deal is finalized. What it essentially means is that India will wait to see where its competitor economies stand tariff-wise before India decides to sign on the dotted lines. What we're seeing is that the Commerce Secretary Rajesh Agarwal said that the IEEPA tariffs, they don't exist right now. What exists right now is under the Article 122, which is 10% tariffs. So far, that is what is being levied. But what we're seeing is that any deal that India signs will be signed against a tariff structure. So in absence of that, because the US Supreme Court has struck down all tariffs that were previously levied by the Trump administration, there is no global tariff structure at this point in time. So that is what India will await. What they're also saying, what the Commerce Secretary said, that a deal is ready. Negotiators are currently working on it. It's not like there's any sort of a hold off or a standoff in talks between both sides. But what is, there are certain details yet to be ironed out. Those details also include, of course, the Section 232 tariffs. There's also certain details around non-tariff barriers that need to be ironed out before a deal is signed. So there's still some time before both sides sign on the dotted line. What we're also seeing is that India is also examining the legal impact of the US notices around Section 301. Now, remember, that is the 61 member investigation that US is carrying out on trade and tariffs against various trading partners. India is one of them, and that is something that will also be taken care of once a deal is signed in the future. So a very important update coming in on the status of the India-US trade deal. What the Commerce Secretary also said was that the US had given a comparative advantage to India when it came to the 18% tariffs, given that competitor economies were anywhere between 19 and 22%. So if that continues to be the case in the future, India will still be at a better off position comparatively at 18%. So that's what the Commerce Secretary said on the status of the India-US trade deal.
Right, and as we await more clarification from US on the trade deal, Nifty has bounced back strongly, ending in the green with gains of over 1%. It closed above 23,300 and snapped its 3-day losing streak. Leading the charge were Ultratech Cement and Mahindra & Mahindra, both rising over 3.5% in trade to become the top gainers in the Nifty 50 basket. However, the broader market underperformed the benchmark, and sectorally, the performance was mixed as Nifty Auto was the best performer, up over 1.5%, snapping its own 3-day losing streak. So overall, Nifty did recover in the last 1 hour of trade, and that may be a big relief, but we'll have to see how that sustains through the course of the entire week. But looking at the primary market, PhonePe, the Walmart-backed fintech major, has temporarily deferred its public market listing plans due to ongoing geopolitical tensions and heightened volatility in global markets. The company said that it will resume the listing process once there is some stability in global capital markets. Sameer Nigam, PhonePe's CEO, said that they hope for a swift return to peace in all the affected regions. We remain committed to a public listing in India. That's what is the word coming in from him. And in fact, let's go across to my colleague Nimit, who is here to share what are the key reasons of delay for the IPO process of PhonePe. Take a look.
Yes, the news is that PhonePe has announced that it's pressing pause on its IPO plans that was planned for June later this year. The CEO of the company, Sameer Nigam, has said that it is due to geopolitical tensions and market volatility arising because of that. They say that they are committed to doing an India IPO later this year, and they hope that the situation settles down so that it gives them a more stable environment to proceed. Now, one of the reasons is the short-term volatility that we're seeing owing to the geopolitical tensions, especially in Iran, the early part of this year. But the larger reason, according to sources, is there's a valuation mismatch, as we've been reporting in the last weeks or so, that IPOs are that companies looking to IPO are not getting the valuations that they're looking for. Sources say that the roadshows for PhonePe did not pan out to their expectations. There was not enough positive responses from potential buyers for the IPO that they had planned, and the valuation may be too high. Now, this is not just a PhonePe problem, this is a larger market problem, and we understand that a lot of different companies that are looking to list may also now in the future announce plans to pause. Anyway, once you file a DRHP, you have a year to plan that IPO out, so there is time, but looks like there's going to be a halt on IPOs going forward, at least in the very short term.
Right, speed bumps on IPO, but staying with the banking space, sources told NDTV Profit that ED has not received inputs from GST authorities in the Aviation case related to online gaming transactions. While Directorate General of GST Intelligence, or DGGI, Hyderabad, is probing the alleged GST evasion, sources said that ED is likely to examine the case under the PMLA, which is Prevention of Money Laundering Act, but ED will probe the case once GST investigation findings are shared. DGGI may also recommend filing of FIT if suspicious fund flows linked to gaming transactions are established. Earlier today, Feno Payments Bank crashed over 16% even after it clarified that the bank is not being investigated by any authority other than the DGGI. But that brings us to the end of this edition of Profit 360. Stay tuned. This is Malika Mishra. We have lots more coming up.
Some moments in life are lifelong. Some memories are lifelong. Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. Ye on the quality lifelong.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
In a month that moved markets, shifted diplomacy,
the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7, #1 on YouTube. NDTV Network, streaming India's trust, leading India's conversations.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go, grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions.
Expert advice. The latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Hello viewers, you're watching Market Express and I'm Himakshi Bhogna. Let's get straight into the show. Viewers, US Treasury Secretary Scott Bessent has clarified that the department is not intervening in the global oil or commodities markets. Now, despite the extreme volatility triggered by the escalating Middle East conflict, according to the media reports, he said that the US government has no authority to directly manage or influence the commodity prices, including the crude oil. Now, Bessent has stressed that while the Treasury continues to monitor markets closely, any action to influence the oil prices falls outside its legal mandate. Now, this comes at a time when a global, crude has surged due to supply fears, shipping disruptions, and also Iran-linked geopolitical shocks. Meanwhile, the Israeli military has said that it has destroyed a plane at Tehran's Mehrabad airport overnight that was used by Iran's late Supreme Leader Ali Khamenei. Now, according to Israel, the aircraft was used by senior Iranian political and military officials for domestic and international travel and also coordination with the allies. Now, Mehrabad is Tehran's oldest airport and also a key dual-use facility serving civilian flights and also housing Air Force assets. And viewers, Iran's Foreign Minister Abbas Araghchi has confirmed that Russia and China are providing military cooperation to Iran amid the ongoing conflict, calling both the countries Tehran's strategic partners. Now, speaking in an interview, Araghchi has warned that any sort of attack on Iran's oil or energy infrastructure would trigger retaliation against the regional assets linked to the US companies. Now, he has also said that Iran has no immediate plans to fully reopen the Strait of Hormuz, citing security risk and also recent strikes near the key export facilities. And oil loading operations have resumed at the UAE's Fujairah port, which is a major global bunkering and also export hub. And after a drone attack temporarily disrupted the activities. Now, authorities have said that the incident triggered a brief suspension of the loading operations, but emergency teams have managed to contain the situation and also restore the functionality. Now, Fujairah is one of the world's most important ports outside the Strait of Hormuz, and any disruption there raises immediate concerns for global oil supply routes, especially amid the ongoing Middle East conflict. And while operations are back online, officials continue to monitor risk as regional tensions remain elevated. In fact, flight operations at the Dubai International Airport have resumed after a drone-related fire forced a temporary shutdown. Authorities have said that emergency teams quickly contained the blaze, which occurred near the airport and also caused delays and diversions as a precaution. Now, the incident has unfolded amid heightened regional tensions linked to the Iran-US-Israel conflict, with several Gulf states reporting missile and also drone activity over the recent days. Now, Dubai officials have said that passengers should still expect residual delays, but confirmed that the air traffic movement has now stabilized. And the Indian-flagged LPG tanker Shivalik has safely arrived at Mundra port in Gujarat around 5 p.m. Now, this marks an important delivery amid the ongoing Middle East tensions, where the Strait of Hormuz, which is a key route for nearly 20% of the global oil and gas, that has faced disruptions due to this conflict. Now, Shivalik carried about 45,000 metric tons of liquefied petroleum gas from Qatar. Now, it is owned by the state-run Shipping Corporation of India, and the safe transit and also arrival brings some relief to concerns over the LPG supply. Now, two more vessels, one named Jaglatki carrying around 80,000 metric tons of crude, and Nanda Devi carrying LPG, are supposed to reach India tomorrow. And US External Affairs Minister S. Shankar has said that two Indian-flagged LPG tankers were able to pass safely through the Strait of Hormuz due to India's sustained diplomatic engagement with Iran. He's noted that New Delhi has been in continuous touch with Tehran and that these conversations have yielded some results, also enabling the transit of the tanker Shivalik and Nanda Devi. Now, however, Shankar has made it clear that India has not reached any sort of blanket agreement with Iran and that each vessel's movement is being handled on a case-by-case basis. Now, he has emphasized that India has offered no concessions in return and that discussions remain sensitive and also ongoing. The Federation of Indian Pilots has urged the DGCA to review its decision on the variation in the FDTL norms. Now, DGCA had relaxed the FDTL norms on Air India's request of extending the flying time and also flight duty period. Now, the pilot body wrote to the government and said that Air India has excess pilots and this step is a threat to flight safety and also must be withdrawn immediately. And India's aviation sector is witnessing sharp volatility as domestic air traffic has fallen nearly 6% in the first half of March. And this is following the sudden escalation of the Middle East conflict on February 28th. Now, average daily domestic passengers have dropped to 4.79 lakh as compared to the pre-war average of 5.08 lakh. Now, budget carriers like Indigo and SpiceJet have come under the lens as they adjust the operation amid the rising aviation fuel prices, airspace closures, and also high war risk premiums. Now, the international segment has been hit harder, with traffic down 33.5% in early March. But after bottoming out on March 3rd, data shows a gradual rebound, touching about 93,491 passengers on March 15 as airlines have reworked the routes and also schedules. And India's auto component manufacturing clusters are facing some serious disruptions as the ongoing LPG supply crunch forces the production to slow down, with many workers migrating back to their native places. ACMA has said today. Now, manufacturers in key hubs and they've said that LPG supplies have fallen sharply, disrupting the heat treatment and also casting operations that rely heavily on the gas-fired furnaces. Now, industry representatives have warned that if such a situation continues, factories may be compelled to reduce the shifts or halt the operations temporarily. Now, some units say that workers, especially contractual basis and also migrant labor, have already begun leaving due to uncertainty around the production schedules and also wages. In fact, Trump has urged its allies to provide assistance to ensure security around the Strait of Hormuz, which is a key global oil choke point amid rising Middle East tensions, and countries have responded cautiously. The UK has said that it is discussing options to keep the strait open but remains reluctant to put commercial carriers at risk. Now, China has called for stable energy flows while stopping short of committing naval support. Now, South Korea has said that it is reviewing Trump's request with the US, while Japan has ruled out maritime security operations. France has said that any escort mission depends on de-escalation, and Germany has clearly ruled out becoming part of the conflict. And British Prime Minister Keir Starmer has said that the UK is working with allies on a collective plan to reopen the Strait of Hormuz, which is the global shipping remains paralyzed by the escalating West Asia conflict. Now, Starmer has said that restoring freedom of navigation in the vital oil corridor is crucial for market stability, but warned that reopening of the Strait will not be a simple task. The Prime Minister confirmed London is coordinating with European partners, the US and the Gulf nations to craft a viable, credible plan. So, while stressing that this will not be a NATO mission, but a coalition of willing partners. In fact, Saudi Arabia has begun offering oil buyers the option to reroute the shipments via the Red Sea as the crisis around the Strait of Hormuz disrupts global energy flows. Now, the kingdom's state-run producer has alerted the customers that crude normally exported through the Persian Gulf can now be redirected westward. Now, bypassing the conflict zone, this comes as fighting involving the US, Israel and Iran has pushed the tensions in Hormuz to critical levels, and which is a choke point that handles nearly a fifth of the world's oil. With missile activity and also shipping disruptions escalating, global buyers have been seeking alternative routes to ensure uninterrupted supplies. And the United Arab Emirates has taken major enforcement action, ordering the arrest of 35 individuals, including 19 Indians, for circulating misleading and AI-manipulated videos online amid the ongoing Iran-US-Israel war. So authorities have said that the content, including fabricated missile attack clips, AI-generated visuals, and real footage posted without doctored commentary, all of which were deemed capable of causing panic, exposing the security vulnerabilities, and also undermining the public stability. So officials have said that the accused will face an expedited trial, and also penalties include at least 1 year in prison and also fines starting from 81 lakh. Now let's look at how the markets have fared today, viewers. Markets have ended over 1% higher to break its 3-day losing streak, with broader markets underperforming the benchmarks. Now, Nifty ended above 23,400 levels, while the Sensex gained more than 900 points. Ultratech, Cement and M&M are the top gainers on the Nifty, with both gaining over 3.5%. So most of the sectors have finished higher, with Nifty Auto as a top gainer and oil and gas sector as the top loser. In fact, rupee has ended 10 paise lower at a record low of 92.4 versus dollar amid the surging crude prices. So continuous FII selling has triggered, this has been triggered by the geopolitical uncertainty and is also the reason for rupee's fall. So according to experts, the local currency resisted a sharp fall backed by a significant recovery in the domestic equity markets amid hopes of reopening of the Strait of Hormuz. And let's look at the counters that might be buzzing away in trade tomorrow. So first we have Tata Motors that has hiked its prices across the CV range by up to 1.5%, and these price increases are expected to mitigate the impact of rising input costs and also higher commodity prices. Now these prices will vary for different models and also variants. Next stock in focus is Feno Payments Bank that has issued a detailed clarification today, saying that it is only under the DGGI's review and also not facing any probe from ED or under PMLA. Now, the bank has said that the investigation relates to certain program managers and also merchants and not to its own GST compliance. So it has also, called for reports on bail rejection incorrect and also denies any sort of link to gaming or betting activity. So this comes even as the Telangana High Court reserves its order in the MD's plea challenging his arrest. Next stock in focus is Sun Pharma that has announced that the US FDA has accepted its supplemental biologics license application for Ilumya, which is the company's key biologic used in the treatment of active psoriatic arthritis, and this is an SBLA, which is the regulatory pathway that allows companies to seek approval for new indications and updated data, even label expansions for an already approved biologic drug. So with the FDA accepting the filing, Ilumya now moves into the formal review stage, which is a key step that could potentially broaden its clinical use in the US market. So the drug is already approved for plaque psoriasis, and also this review may allow Sun Pharma to extend its footprint in the autoimmune and immunology portfolio. Next up, we have Sagar Cements that has announced that it will sell a 7.24% stake in its subsidiary Andhra Cements through an offer for sale, that is an OFS. So according to the exchange filing, the floor price has been set at 52 rupees per share for the stake sale. The OFS will open for non-retail investors on March 17, and this will be followed by the retail subscription window on March 18. So the stake dilution is aimed at meeting regulatory requirements and also improving the company's public shareholding levels, and the transaction will be carried out on the stock exchanges under the standard OFS mechanism. Next up, we have Bajaj Projects that is seeing a strong move in trade. That saw strong move in trade today after winning an order of over 700 crore rupees, and the stock was up sharply, marking its biggest jump in at least a year. The company receives this ultra mega order from the Maharashtra Transmission Utility for power lines and also substation work. Now, Bajaj is also stepping up its global push through a new joint venture with Saudi Arabia's Al Sharif Group focused on high voltage infrastructure. And next up, we have Aditya Birla Group stocks. So they have moved higher in trade today on a mix of global and sector-specific triggers. So Hindalco strengthens as Bahrain begins output cuts at the world's largest aluminium smelter. Ultratech Cement trades firm, with Jeffrey saying that the company usually comes out stronger during the industry shocks. Grasim remains in focus as paint makers raise the prices, and also ABSL AMC picks up the momentum on the back of stronger volumes this week. And rising geopolitical tensions in the Middle East are beginning to weigh on the India's paper sector, with disruptions to energy supplies pushing up input and production costs. So for JK Paper, the impact could be significant, with over 30% of Indian paper exports now facing heightened risk, and higher freight and energy costs are squeezing the margins, while global uncertainty is weakening the demand across the key export markets. So adding to the pressure is the growing threat of cheap Chinese paper dumping, which could really undercut the pricing and also further erode competitiveness for domestic players. Now, the combined impact raises concerns around profitability and also export sustainability for the sector. Next up, we have Intellect Design Systems. So that has announced a 50-50 joint venture with UK-based Fintel PLC. The company will enter into a formal JV arrangement with the new entity set to be incorporated in the United Kingdom. So the partnership is aimed at strengthening Intellect's presence in the UK market and also expanding its financial technology offerings through collaboration with Fintel. Next stock in focus is Vedanta, that has approved raising 2,575 crores through the issue of non-convertible debentures, that is the NCDs, and the company's board has cleared the proposal as part of its ongoing capital raising plans aimed at strengthening the liquidity and also supporting the operational requirements. So the debt instruments will be issued on a private placement basis, continuing Vedanta's strategy of tapping the bond market to manage refinancing needs, and the company has been actively raising funds in the recent months as it works to streamline its balance sheet ahead of major debt maturities. Next stock in focus is Ola Electric, that has kicked off plans to raise up to 2,000 crores by selling a stake in its battery subsidiary Ola Cell Technology. So the battery arm operates Ola's Tamil Nadu-based lithium-ion gigafactory, which currently has 1.5 gigawatt per hour of operational capacity, and is also targeting an expansion to 6 gigawatt per hour by the end of this financial year. So investment banks Avendus and Motilal Oswal have been appointed to run the fundraising process, and the capital infusion is part of Ola Electric's broader restructuring and turnaround plan. as the company works to strengthen its balance sheet. So the Gigafactory, built with an upfront investment of 3,500 crore rupees, is a critical prize of India's push to localize the battery cell manufacturing and also reduce the dependence on imports. And viewers, Make My Trip is evaluating the possibility of launching an India-listed IPO as part of a wider corporate restructuring. The company has merged Redbus, which is its large, intercity mobility platform, into its local Indian entity, which is a move aimed at simplifying its structure and also unlocking value as it considers a domestic listing. So the Nasdaq listed travel major is reportedly exploring a shift in the corporate configuration to align better with India's rapidly growing travel market, where Redbus and Make My Trip hold significant leadership positions. And while discussions are underway, the company has not set a formal timeline for the India IPO. And US Commerce Secretary Rajesh Agarwal has clarified that India-US trade agreement is largely ready and there is no standoff on it. While speaking at the trade data briefing, he has also said that US is trying to create a global tariff architecture and India is waiting for clarity on the same. He has added that it will be better to sign the deal once the structure is ready. Agarwal has also highlighted that the IEEPA tariffs don't really exist per se due to the US court rulings. 10% tariffs exist globally under Article 122. And India's goods trade deficit has narrowed to $27.1 billion in February, improving from the previous month as total exports rose 11% year-on-year to $76.1 billion. And this has been led largely by the services. Merchandise imports have climbed sharply while goods exports remain steady. The Commerce Secretary has cautioned that exports may soften in March due to disruptions from the Iran conflict. For FY26, India's total goods and services exports are now estimated at around $860 billion, below the government's $1 trillion target. And India's unemployment rate has fallen to 4.9% in February, according to the latest periodic labour force survey. And the report notes that the worker population ratio, that is the WPR, which is a key measure of the working share of the population, it has remained stable, indicating a broadly consistent labour market environment. And the data comes at a time when broader economic conditions have been shaped by global uncertainties, including disruptions linked to the Middle East conflict. So while labour indicators have shown resilience, economists are saying that trends will need close monitoring in the months ahead as external pressures continue to influence the employment and also the wage stability. And US digital payments major PhonePe has temporarily paused its highly anticipated IPO process, citing heightened geopolitical uncertainty, particularly due to the intensifying conflict in the Middle East. So the company has said that the global environment is too volatile for a large public listing at the moment, adding that it hopes for a swift return to peace and also remains committed to listing in India when conditions improve. So the decision comes just weeks after PhonePe has secured SEBI approval and also filed its updated draft red herring prospectus. Now the IPO, structured entirely as an offer for sale by existing investors, including Walmart, Tiger Global and also Microsoft, was expected to target a valuation between 86,500 crores and 97,500 crores. In fact, viewers, Indigo has announced a new partnership with Adani Airports that will allow its blue chip loyalty members to earn and also redeem the reward points on duty-free shopping at select airports. Now, according to the airline, the collaboration will initially cover the duty-free stores at Mumbai, Ahmedabad, Lucknow and Guwahati airports, all operated by the Adani Group. Now, the move deepens Indigo's push to expand its loyalty ecosystem beyond the flights, offering passengers new on-ground, earning opportunities. And the airline has said that the tie-up is part of its broader strategy to build a travel lifestyle rewards network, enabling the members to accumulate points across multiple touch points and also redeem them seamlessly across travel and also retail partners.